Right, ladies and gentlemen, a very good morning and welcome to Lentra and CNBC TV18 presents Digital Lending Summit, where we are set to explore and discuss the theme Empowering Economic Growth for All, Bridging the Credit Gap. I'm your host for the summit, Mugdha Kalra. Lentra has emerged as a trailblazer in the realm of digital lending. It stands proudly as an end-to-end cloud lending platform democratizing digital lending through its secure and scalable SaaS platform. As of today, Lentra's lending platform proudly serves over 45 financial institutions. Impressive, right? But that's not all. It has successfully processed over $20 billion of loan applications, with a staggering 2 million loans being processed monthly. Today, as we revel in these remarkable numbers, we also embark on a collective journey towards a future marked by financial inclusion, economic empowerment, and bridging of a crucial gap, the credit gap. Now, in a world that is becoming increasingly interconnected, the importance of ensuring economic growth for all segments of society cannot be overstated. Our theme for today's summit, therefore, Empowering Economic Growth for All, Bridging the Credit Gap, resonates with the urgent need to create a financial landscape that leaves no one behind. As we gather here, we recognize that access to credit is not just a financial transaction. It is a gateway to opportunities, a catalyst for growth, and a key driver of economic development. Now, before we kickstart the day's proceedings, let us take a look at Lentra's journey.
Lentra exists to answer a simple question. Growth. Who does it belong to? The student who wishes to study abroad? The entrepreneur who wants to expand? The farmer who wants to double the yield? Everyone. Everyone needs funds to make growth happen, and they need it now. That's why Lentra has transformed lending, empowering banks and financial institutions to serve their customers at the speed of thought. With its 360-degree full stack, fully integrated, easily configurable end-to-end platform, Lentra is accelerating digital lending everywhere. Lentra's AI-enabled digital lending cloud brings down loan approval and disbursement time from days to seconds, helping turn outdated practices into automated tech, making go-to-market easier and faster, eliminating inaccuracies and errors, accelerating customer acquisition, reducing costs, and enhancing the customer experience. Lentra is fast becoming a trusted partner to leading banks and institutions, thanks to our easy-to-implement, secure, scalable, and customizable products, and with the pay-as-you-go model. Financial inclusion is essential to the economic development of societies. And it is essential that the dreams of every citizen are fueled and funded without delay or pause. So if the question still is, who does growth belong to? The answer is everyone. So join Lentra as we race ahead, driven by one mission: growth for all.
And now, ladies and gentlemen, to commence the summit, I would like to invite on stage two integral personalities from Lentra, Sandeep Mathur, Chief Revenue Officer, and Rajesh Kumar, Chief Marketing Officer, who will extend a very warm welcome and set the stage for today's discussion. Gentlemen.
And welcome to the second edition of the Lentra Digital Lending Summit. Some of you might recall that in our inaugural Digital Lending Summit that we did last year, we had to close down registrations because there were thousands of registrations that came in. We could only accommodate a few hundred people in a room. And that's when on stage I promised, and as Lentra we promised, that we're going to make it bigger and better this year. So here we are, a slightly bigger room. We are streaming this live. We have thousands of registrations again, and it keeps us highly motivated. So please keep us, keep encouraging us, spend the day with us, come and talk to us. This is an annual event, so we're going to do it again next year. I'm actually super pumped for today because we've got a great lineup of speakers, we've got great content, and all of this has been curated. So you're going to see, and hopefully you'll get a lot of value out of this event that we do today. And can we change the slides? Yeah. All right, so you saw in the video as well what's at the heart of Lentra. At the heart of Lentra is growth. It's growth for you, our clients. It's growth for your customers. So it's really growth for all. And you will see that come through in many different ways at Lentra. One of the things that we started when we started as a company was that we said we will always be based on transaction-based pricing. So we are directly connected to your success. We do this also by bringing a great deal of product innovation, the speed at which we do product innovation, and a new feature release, which allows you to stay competitive in the marketplace. We also exhibit this behavior of being connected to you, committed to your growth, by doing standard templatized implementations in a very short duration of time. We call that program Super 60. Some of you might have already experienced it. So if you have a standard implementation right out of the box, we can launch a new financial product with you in about 60 days. And by the way, all of this business growth without sacrificing security. So all of this is under a secure and a compliant manner because we do understand this is a highly regulated industry. So we've got to make sure that those things stand through. We have an ever-growing client list, and we are very, very proud and humbled every time somebody joins this particular list. We work with some of the best and the biggest names across the country. We've helped launch 50+ products, financial products this year with these clients. It's no mean feat. And most of these products have gone on to win various accolades, various awards. For example, the HDFC Bank Cattle Finance Journey was recognized at the G20 Summit. Federal Bank recently, for the digital PL journey, got an award from the banker, Asia Pacific. So what I really want to do now is please give yourselves a big round of applause for launching new products, for making these journeys successful and growing rapidly this year. It's been a great year for most of our clients. So thank you so much for that. We ourselves, in our humble way, have also won some awards. And as a young company which was born 4 years ago, we are probably at this point in time the most awarded platform amongst all the startups that you see around. So we won a number of awards as well ourselves. And that's what keeps us going. We are committed to innovation. We are committed to doing new products releases. We're committed to bringing new products to the marketplace. This festival year, one of the benchmarks we have in terms of growth is the benchmark around what happens during festival season. And as compared to last year, you can see some of the stats up on stage. The number of applications that we processed during the Diwali week itself was 2 million applications. So typically, we process about 2 million in a month. That week, we processed 2 million applications. The amount of loans that we processed compared to last year went up by almost 51%. And a stat which is a staggering stat for all the deep tech folks in the room is that we were able to do peak API calls, or 10,000 peak API calls per second, which is 7x from last year. And as you all know, that when you come onto the Lentra Lending Cloud, you automatically get connected to 250 different API providers in the marketplace. So these are all great stats. Obviously, we are committed to scale. We are committed to doing this in the, like I said before, secure manner. We've been extremely busy this year, as you can imagine, launching various products in the marketplace, delivering innovation. Some of the ones that I really want to highlight, and they are on display within the demo booths itself, and I would encourage you to take a look at it. One of them is One LMS. And we've seen across the board over the last 3 or 4 years, most of our clients telling us that they would love to replace their current LMS system. And we found that the LMSs that have been there in the past didn't cater to EMI and non-EMI products together. So every bank, every financial institution has multiple LMSs. There was this challenge of end of day closing. There was this challenge of end of month closing. And so you had to bring systems down for your LMS so that it works properly. We've solved that problem. So again, please take time, spend some time with the One LMS team and look at what we've done on the One LMS. It's an API-based, extremely modern loan servicing platform, and you should definitely take a look at it. We've launched digital home loan, and again, you're going to say, well, a lot of companies have launched digital home loans, but we've gone live with multiple clients this year. And whether it's affordable housing, whether it's housing at the prime level, we've sort of done it all. We've taken extremely complex journeys and made them go live, so you get a lot of this out of the box itself. So if you're in the business of home loan, please, again, come and talk to us. Hopefully there'll be somebody who will show you a demo of that. We've also launched our Agri platform this year. So we've been working on Agri journeys for the last 2 years, but this was the year we've gone live with a number of our Agri journeys, whether that's Kisan credit card, whether that's cattle finance or any other journey that you can think of. All of those are now available on our Agri platform. No conference can be complete, and not just a tech conference, right? No conference can be complete without talking about Gen AI and generative AI. And it was the same thing. I mean, I've got a few gray hair, and so some of you will remember that, this was exactly the spirit behind distributed ledgers about 8 or 10 years ago, and everybody was talking about crypto, and that was the answer, or that was a panacea. The point is that all of these technologies will come in, they will create, there is a hype cycle to it, they will all leave some impressions behind, and they're all extremely, extremely positive. I got reminded, when I was thinking about sort of Gen AI, and I was reminded of this gentleman called Shel Silverstein. And he's a very famous children's book author, songwriter. I don't know how many of you have heard of him. But he wrote a poem many, many years ago. I think this was 1978, where he wrote a poem called The Homework Machine. And I'm going to read that out for you. The homework machine, oh, the homework machine, most perfect contraption that's ever been seen. You put in your homework, then drop in a dime, snap on the switch, and in 10 seconds' time, your homework comes out, quick and clean as can be. Here it is, 9 plus 4, and the answer is 3. 3? Oh me, I guess it's not as perfect as I thought it would be. Now, this is a reminder where anybody who's used sort of Gen AI, and I've dabbled in it, I know our company has been dabbling in it. I'm not trying to belittle the technology, I'm saying it's great and it's very powerful. We've been working on this for a while. We're going to show you some examples of that technology today. Please come and talk to us. If you are looking at Gen AI, if you're thinking about Gen AI use cases, please come and talk to us. In a regulated marketplace, you have to think about a number of things. You have to think about data security, privacy, application of some of these, ramifications of these 5 or 10 years from now. And so we've been thinking about a number of things, and we will show you some of those applications today, some of the use cases that we've come up with, but I would encourage you to come and speak to us. Okay, with that, I'm going to hand over, and since we're talking about content, I'm going to hand it over to my colleague Rajesh, and he'll walk you through what's in store.
Well, thank you, Sandeep. Hi, everyone. Good morning again. Hope you can hear me well. So let's get started. But before I start, I must thank all our affiliates who put their hands together, their might together with us to make this event happen. So AWS, Adify, MongoDB, Arya, and Mehu. Wherever you are, please, thank you so much. Sandeep spoke about it. Let me show you the real numbers. We got close to 3,000 people. But what is more interesting is they were from 50 cities. So this is not a metro topic, just like loans and lending and credit access is not a metro topic. This isn't a metro topic. And that's where, like Sandeep mentioned, we are webcasting live. It reaches a lot of people. The knowledge, information is reaching out to people. And of course, as it's obvious, there are lots of banks, lots of NBFCs, and very good interest at a senior level, because this is a business topic as much as it is a tech topic. This is an accelerator for business. This is an accelerator for revenues. This is an accelerator for customer experience. Now, quick look at the agenda, and I'll talk about more in detail. So the first half, which is here, we have a day packed with great keynotes, panel discussions, to provoke your thinking into what is possible with the new technology to make credit accessible to all, and of course, in the process, growing that business stream for yourselves. In the second half, we have two areas. One is this room, other is the Grand Salon, and we are going to cover different topics and call actual practitioners to share their experience, talk with you what problems they solved, what were their trials and tribulations, and how did they emerge victorious. Any technology solution is as good as the success it delivers. So these are real people, real success stories. I'm sure you'll find it very, very interesting. Now, immediately after this, let me tell you a little bit about the sessions. We are going to have the first session where Sresha from BCG will talk about the transformation that is taking place in banking sector and the lending opportunity that is opening up as a growth opportunity for everyone. Then she'll invite our CEO DV to talk about how he sees this confluence of technology and the financial services for banks and NBFCs, helping them shape and ride this opportunity without disruption. Then we have the first keynote, Mr. J.K. Das. He's already in the house. He's going to talk about role of policy in putting the right guardrails to ensure a sustainable growth. Then we have the special address, Mr. Dinesh Khara of SBI. He's going to come in and talk about the pivotal role of lending and credit access in driving economic opportunity at the grassroots. And he's the best person, the reach SBI has, nobody else has. So looking forward to that session. Then we have our first panel, where we have a bevy of bank CXOs who are going to talk about how convergence of finance and technology is paving the way forward. I'm sure it is going to have some interesting learnings and takeaways for all of us. This will be followed by the fireside chat, where we're going to have this topic of building profitable scale in the retail assets. Then we have the second panel. In fact, before that panel, we have what Sandeep indicated, the most interesting launch. We will demo some interesting use cases for Gen AI integration into the lending platform and make some exciting announcements. Then we have the second panel, which I was talking about, which is going to talk about innovations in lending beyond the traditional realm, across retail, MSME, and agri sector. Then we break for lunch, and then we have two breakouts. And two areas we are going to focus on. One is, like I said, real experiences of people deploying technology for retail, SME, and agri sectors, how they're shaping products and strategies and reach and ensuring better service levels. Like Sandeep mentioned, driving high volume when the surge comes, which is not possible if you don't, completely automate and digitize. And the second area we're going to talk about, again, there are actual clients and CXO sharing their experience in terms of, the impact of modern cloud on scalability, which we have already into our platform, talking about security, and of course, artificial intelligence. We can never get enough of it, whether you open the paper or open anything, but we're going to talk about some real use cases and how you can see that in your day-to-day life. And then evening, we have the recognition ceremony. We're going to have that kicked off by our Chief Operating Officer, Srihari, talking about, how we are trying to build an industry platform to put a spotlight on the right things people are doing and how other people can learn from it. And then we have Cyrus Daruwala from IDC. He heads IDC Financial Services globally. He's going to talk about how he sees India Opportunity 2024. His realm is global, but he's an Indophile, as you can tell. So he's going to talk about some interesting insights as we enter the new year. And then we have the awards. Before awards, we are going to have a very interesting fireside chat with John T. Rhodes, talking about winning and passion. which is where the whole spirit of award comes. And then he, along with DV, is going to give away these awards. And then we have a evening to celebrate together, over drinks and dinner. So with that, thank you very much.
Thank you, Sandeep. Thank you, Rajesh, for that wonderful, spirited start and for setting the agenda for the morning and for the day. And now, ladies and gentlemen, as Rakesh already mentioned, I am now requesting Shreyasha George, Managing Director and Partner at BCG, to come up on stage and share her insights on the lending space in India. Shreyasha, all yours.
Change is inevitable. Growth, on the other hand, is optional. Morning, everyone. Very excited to kick off the session with all of you. It's wonderful to see a full room today. Let me start with a bit of change. I think everyone here will agree that we are living in uncertain times. There's a lot that has been happening. If you just look at a few simple metrics across the globe, our global risk index is 90% over what it was in 1985. Next year, more than 50% of the world's population will vote. These are big changes that is ahead of us. If you think about 2023 to 2025, we would have consumed 400 zettabytes of data. That is all the data that we've consumed till the 21st century. We are fresh off the Davos conference. Some of you would have seen that in the papers. Discussions galore. But the reality is, on the current trajectory, we're going to see 2.8 degrees of climate change by 2100. These have big implications for everyone in this room. But what is the shining star among all of this? And I started with that. Change is inevitable. Growth is optional. We in India, I think, have truly and completely taken on growth as the big agenda forward. And I think very appropriately, the conference is called Growth for All. If you look at a simple metric of all the banking across the globe, since financial crisis, global banking has actually lost in terms of performance, whereas India has actually stood out across multiple years now. P by B for banking across the globe have fallen by 66%, where India has continued to shine. Let me show you a few metrics. Of course, we have our ups and downs, but a few numbers that really stand out. The return on assets for the Indian banking industry has actually gone up by 10 basis points. We are actually on an all-time low when it comes to credit costs. So yes, in relative terms, there are a few metrics we've fallen, but we've actually done much better than the globe. And the reason, and I had this discussion before coming here, the reason we go to every conference and see a room full of packed audience is because the growth ahead of us is significant, and we are all looking for innovative ideas on how do we fuel this growth going forward. Maybe three imperatives when we are really thinking about banking as a sector, and I think after my session you have an incredible lineup of speakers who will actually bring this to life. But three areas that we are seeing as big changes that will happen in the market over the next couple of years. One, real change in terms of the business model, whether it's the distribution that we've seen evolve, and I'll take you through some of that, whether it's the digital infrastructure of this country. I actually have the pleasure of working with a lot of global firms, and it makes me so proud to each time draw India on the map, especially when it comes to financial infrastructure, right on top on any benchmark, and really have sessions on what we can learn from India. The tech transformation, I think every year we say this is a big year for tech transformation. We've been saying that now for probably 20 years. And every year technology throws something at us which allows us to say, again, this is a great year for technology. I think Sandeep, had a funny story about the homework machine. But whether the answer is right or wrong, the machine's not going away. I think Gen AI is one of those which, even beyond the hype, are starting to show some real use cases, and especially real use cases in the banking sector. The risk maturity, as well as climate change, which I started with, along with a lot of policy interventions that will come our way, is going to make sure that we really think about resiliency as well. We went through multiple big episodes where we were tested, and I think Indian banking came out very strong. But as we go forward as well, the regulatory environment will change, and I'm sure you'll hear about it today. But more importantly, simplistic methods in which we used to earlier think about risk frameworks for climate will have to, fundamentally change. Climate, for example, is something that is both very exciting for all of us because there's $2.8 trillion of lending which is expected to support climate over the next 10 years. That is a very, very large number. But what is equally worrying as well is 50% of today's lending book is exposed to very serious climate risks, whether it's our exposure when it comes to some of the markets, the geographies, and the type of loans that we've supported. So some of these really become very real as we start thinking about what's ahead of us. Let me take the first one, distribution model. It's great to look at this picture because, I've been doing these sessions maybe for about 15 odd years now. There were times when people would say, do we shut down all the branches, right? It's all digital going forward. Or there has been conversation that, many of these old school methods don't make any sense anymore. This is actually what has happened to banking, right? So when we started discussing the 60,000 branches that were there in 1991, there was a real discussion around, maybe that will stay stable, maybe something will change. We are at 150,000, and year on year, we typically see about 10% growth in branches. But that doesn't mean it has stopped other distribution channels from coming on board, whether it's all the digital channels. And in the last couple of years, what we've also seen is a real proliferation of companies outside of the banking sector coming in and playing a big role, right? Which we call embedded finance on that far corner there. Whether it's our fintechs that have been in the market, and they are at scale now. I think a few years ago, we used to still think about it as nascent businesses, but many scaled fintechs actively participating. I just saw the numbers of payment companies. I think the top 3 tech companies which do payments in India today are doing 96% of the volume. So that number has also climbed pretty significantly over the last couple of years since we've started discussing. So distribution has changed, and changed for the better. We are reaching the last mile. We are able to access people we were never able to access before, and we are actually building for convenience. So someone like me probably can access 4 out of these channels that are out here, and the channels are being built for purpose. That's actually what the big change has been. But if you think about somebody like Shekhar Yadav, who's a very different portfolio from where I stand, sitting in Kanpur doing his business can actually visualize a very different life for himself, which was impossible a couple of years ago. He can actually now have an end-to-end digital journey. Something which was impossible, he can have a very good credit score. He can get cash finance. He can actually do almost all his transactions digitally if required. So the world is changing, the world is digitizing, but more importantly, not for people like most of us in this room who already had good access. But the change is actually impacting the people who actually were not able to get that access. And I think that is why this topic is so relevant and important. A lot is changing, but I think at the same time, a few things to think through. We are going to see a big proliferation again of consent with the account aggregator system finally coming to scale. We will have to figure out what is the consent management infrastructure going forward. Consent management was, kind of the outcome that was expected at some point in time that will become core of how you think about many of the technologies you'll roll out. And as you have the discussion today, which tech and which infrastructure allows you to do that will be important. The turnaround times are just getting shorter and shorter. I think Sandeep mentioned 60 days to new product launch. Customers are just getting used to faster and faster loan approvals these days. And that is going to apply across the board. The time's going to keep getting shorter, especially for new-to-bank customers as well, who earlier was fine waiting and looking for documents and providing documents. They have very different expectations of bankers these days. If you think about products, for the longest time, we actually stayed with our core products. We had products, and we've just found customers who were willing to take it. If you think about some of the discussions we've started having already, there is innovation at a product level. There's innovation for miniature products. There's innovation for very tailored products for people like Shekhar Yadav that we just spoke about, which is very different from how we typically had a set of 10 products which we were trying to kind of make sure we just saw growth on it. Last but not least, I think everyone in this room is well aware, the expectations of customers just keep going further and further up. Banking no more is compared to another bank. Your peer set has changed. You are compared with an Apple when it comes to user experience. You're compared with a Flipkart or Amazon when it comes to call center response times. So the peer sets in terms of benchmarking has changed mostly because of the awareness that has come through. I think, no conversation is complete without a Gen AI conversation these days. The reality is, beyond the hype, there are real use cases. An interesting way I've at least heard a few people describe Gen AI versus predictive AI is the left brain versus the right brain. Everybody in this room have already installed some version of predictive AI in your technology. They've been helping with your risk models, a lot of the data analytics, a lot of the left brain activities, right? Your risk models have been doing AI now for a couple of years at least. The true power comes in when both comes together. How does the predictive AI start talking with the generative AI? And one of the big use cases I think everybody in this room should really think about is how do you move the unstructured data that you have and start using it? All those sales conversations that was recorded over the last 15 years, we've never been able to actually use any of the content there. We're very proud we recorded. We're very excited that it's stored somewhere in our systems. But that kind of unstructured data can really be taken now to think about better customer experience, better journeys as you go through, as well as just giving personalized service to most of your customers. What's going to allow us to do all of these great things that I said? I think ultimately this will need significant infrastructure investment from a technology perspective. And I think in the banking sector, we are very blessed We have a lot of technology companies very actively thinking about how tech infrastructure is going to come together. But just to give you a sense of the market, if you look at the US, they got $258 billion of investment between 2020 and 2023. And you can see there was almost a 58% investment on fintechs catering to technology investments, right? So tech infrastructure companies versus the consumer-facing techs. If you look at India, we've actually done a bit of the reverse. So all our investments in the last couple of years have been very much around the consumer-facing fintechs, and a lot less when it comes to the core infrastructure. In the next decade, this will have to flip. And forget the decade, the next couple of years, this will have to flip. If we need to get to the 30 trillion economy that we're all talking about and clearly gunning for, we will have a gap about $100 to $150 billion that will need to go into the tech infra players. And that is going to make the big difference when it comes to a lot of the digital talk that we have in terms of seamless journeys, turnaround times being minutes versus hours. This is what is going to make a big difference. And I think many of these companies probably I have on the page are here. So congrats, you have truly digitized a lot of the banking sector. And it's across the board, whether it comes to sourcing and onboarding to very complex and advanced risk models. It has been across the board. So congrats to everyone here, but I think the short point I'm making is that there's a lot more work ahead and a lot more money required for us to go ahead and do this. The biggest change, I would say, since I've had conversations on the fintech market, is a very clear shift from a couple of years ago saying, how do you compete? How does the bank compete with the fintech? And the best ray of hope that I have seen this year across the board is the C word has remained, but competition has moved to collaboration. I think across the board, there's clear recognition that the success for this sector and the growth that is going to come from the sector is going to be from collaboration and not competition. So with that, let me finish a few things for you to keep in mind. We will have to think about how to do these collaborations faster and quicker. Sandboxes, whether it means accreditations, audits, just how do you come together more quickly as a banking sector as well as a fintech sector. And with that, I think I also have the pleasure of having a conversation with one of the fintechs who is actually supporting the conference as well, DV, who's the CEO of Lentra. Can I invite him on stage, please? Hey, DV, welcome.
Thanks.
The stage is so big, I think, we've been put quite far away from each other, but great to have a conversation with you. I think, DV, a lot of what I said earlier in the session as well is about growth and, supporting growth for all the bankers sitting here, all the fintechs sitting here. And I know fintechs are playing a big role. We see it from the outside. We see it within the banks. What do you think has changed? How has the fintech and the banking collaborations changed over time?
Banks were wary of fintechs when we started our journey 6-7 years ago. After the initial incubation and the formation of Lentra, we've seen that the banks are very eager to collaborate, experiment, and move ahead with solutions that we have to offer. As with all banks, they're highly risk averse, and that makes the timeline stretch beyond the initial estimates that most fintechs have in their plans. So the fintechs that can't survive the long term and survive the stretched timelines don't cut it, and the ones that do end up servicing the banks.
So speed has become one of the pivotal changes?
Indirectly, yes.
Got it. I think, DV, maybe a thought, and many of us have been seeing fintechs in the market come about, but what is the innovation? Right? What is different? There's a lot of fintechs in the market. What is different now?
Time to market is the key for most banks. They know what they want to do. Unfortunately, banks are structured in a manner that they can't do it in-house and they can't do it themselves. Given the choice, that would be the best approach for banks. So they rely on fintechs to get it right the first time and enable the bank to go to market with the product innovations that the banks want as fast and as reliably as possible. So the fintechs that have innovated at scale and with great reliability as the underlying foundation have done well, and that is continuing to fuel our own growth.
Right. But when it comes to lending growth, I think, challenges galore, and we'll probably hear a lot more from both the regulators as well as the banks later today in terms of how can the lending growth story truly come alive.
I think India is really blessed, and we are the top dog, I think, worldwide with 200 countries. This is the only space where we are number one in the world. We're very lucky that the government put in an infrastructure that's free for our use with UID, UPI, all of the components that build the India stack, Sahmati now, ONDC, OCEN. I mean, the list goes on, and the regulator along with the government are jointly innovating through various mechanisms to open up the market for financial innovation. The market is driving the innovation, and the banks know what they want to do, but the gaps are getting closed much faster with this fairly large infrastructure being open to everyone's use, and that has really fueled the fintech revolution or the transformation in India. And as time goes along, the regulator is also working on standardizing some of the key aspects. The two very, very large aspects are cleansing of data. The data that's available in India is very, very low priced. So the government is opening up several data sources, but the quality of data has to improve, and I'm sure they're working on that. The second piece is for them to fix a mechanism for IDNV, which is identity and verification mechanisms. We are a growing country, and we don't have the, and it's an extraordinary population. We are number one in the world on the population front also. So that makes it a double-edged sword. So we have to fix our KYC norms, and we have to cleanse the data. If these two can be done in addition to what we have done already, which is phenomenal, I think we will open the doors up for getting to that 7 in 7. I mean, 7 trillion in 7 years is what the central government has, the boss has spoken. That's a 10% growth year on year. It's an impossible task in my opinion, but if we get even close to that, we would have added a Netherlands year on year. So So it's that big a growth. And I picked on the Dutch because at one time, not too long ago in history, they were set to rule the world. So that's
Got it. Adding a Netherlands year on year. I think that's a good one to take. I think when we started, we heard quite a bit of discussion around what Lentra does. Maybe a bit more specifically, what's different, and maybe an example for the audience where, you were able to introduce an innovation into the sector.
Yeah, so when we started 4.5 years ago, the agenda and the vision was extraordinarily clear for us. We set out to build a platform for assets to enable and empower the banks to do their business. We never wanted to get into lending ourselves. So we are a technology solution provider, but the vision statement that I had 5 years ago when we seeded the company and 4.5 years ago when we launched the company was that we would build all the software solutions that are required for banks to do their assets business or the advances business or the loans business. And in that approach, we decided that we would have a modular approach to all the pieces, that we would not build a platform from left to right and force the bank to use all of it at once. That was not going to happen. So what we did was we built the whole set as a jigsaw of modules that the banks would choose where to come in and where to exit and what pieces to piece together and use. So that's one of the big things that we did differently. We also moved to a consumption-led pricing model, and that's worked well for us to gain an easy entry into some banks who want to try. If it works, then buy, while minimizing the risk of how much of money will go out in the whole process. So that is the second piece that we did. And in doing so, we focused that we could then build all the pieces and assemble a flow or a set of journeys for the bank in double quick time. So time to market was the focus for us to have all the pieces ready before launching. And one of the big examples of that success was when we got a call in, I remember this was in early August, from one of the large banks in the country. They wanted to launch a cattle loan. I hadn't even heard of a cattle loan. So they said, this is the cattle loan journey and we want to go to market in less than 2 months. And there was some pressure from the regulator to get this done. So we thought this was a very esoteric product because I didn't imagine that the cattle loan would be a real product. But we assembled it and then we tried it. We put it into production in under 8 weeks. And surprisingly, that journey was demonstrated live in the G20 summit 2 months, 3 months ago. I don't remember, but not too long ago, the G20 summit, this product went live and our name came up on the webcast. And I was so stunned that this is what they were up to. But assembling a journey and getting it to production in 8 weeks is reasonably transformative for banks. We haven't succeeded on all fronts, but it's work in progress, but that's the direction we are on.
Got it. And is there something that, on the other side, when the banks partner with you, allows you to bring the speed to life?
Sorry?
So the speed point that you made, 8 weeks to go to market with a new product seems quite unheard of in most products that we see. So what on the other side does the banking partner have to do to facilitate this?
We don't demand too much of the banks. We let the banks be the way they are because any change within the bank just delays all the projects. A bank is a very complex organization. People tend to underestimate the complexity. Even if the CEO wants something done, it can't be done rapidly. They are built in a manner that they will avoid risks, even internal risks. So the structure in banks do not allow them to move very, very rapidly. So what we have done is we have constructed all of our technology solutions on the outside. So we stay outside the perimeter of the bank, and we give the bank the option of moving the solution into their perimeter at a later date. So one of the big steps that we did was we are fully compliant, accredited, certified and audited by several agencies. So we give them the confidence that the data is safe, and it is, and that they can get to doing their business immediately.
Got it. And I think, DV, touching on that point, and I mentioned as well, there's a lot of collaboration in the industry that is starting to happen. A conference like this really brings all the right people in the room. What more can be done to really make sure that we thrive as a ecosystem over the next couple of years?
Oh, that's been one of the cornerstones of our journey so far. I strongly believed, and I continue to believe, that collaboration is the only way to solve the entire jigsaw. It's so complicated that when the bank implements solution one from vendor one, if you can't coexist, you're done. You will not even be considered. So on day one, I took inspiration from one of the big wallet companies. They had gone and, free of charge, they had gone and collaborated and pieced together all the utilities in the country. So you could pay a utility bill off that wallet in about 5-6 years ago. So that inspired me to say that we should be in the ecosystem, wired in completely and fully tested with every other partner that exists, irrespective of whether the partner is a competitor or a collaborator eventually. But all competitors and all ecosystem players are collaborators as far as Lentra is concerned. And once that happens, then our platform is wired with every ecosystem player that exists, and banks find it easy that way to just consume whoever they choose to consume off, but work on our platform. So
great. No, that's good to hear. And I think, DV, maybe to finish off, one thing we've been discussing a lot is India for the world. We are the best when it comes to some of the technology, the infrastructure. What role are you thinking for Lentra? We're quite successful here. What does it mean for supporting the world in terms of digitization of banking?
We'll move with the India government initiative of introducing all the components that the government has built for our use here. And as and when the opportunity opens up, we are testing the waters in those emerging countries.
Got it. Excellent. Thank you so much for taking the time. Audience, any questions? Otherwise, I think we are on time, so we'll wrap up.
Well, thank you, Shresha and Mr. Venkatesh, and thank you, Shresha, for the earlier presentation as well. All right, following this engaging fireside chat, it's an honor to have with us a very distinguished personality who will present an inaugural address providing an overview of initiatives encouraging credit inclusion and policy interventions for enhancing credit access. We are honored to welcome a luminary who has been instrumental in shaping the financial landscape of our nation. With a wealth of experience and a keen understanding of the intricacies of financial markets, he has played a pivotal role in formulating policies that drive financial inclusion and foster credit accessibility. Please, ladies and gentlemen, put your hands together and welcome me in, and join me in welcoming on stage our distinguished guest, none other than Mr. Jayant Kumar Dash, the Executive Director of RBI, who will delve into the discussion into the advancing credit inclusion through policy intervention. Sir, all yours.
A very good morning. First off, my thanks to the organizers, CNBC TV, for giving me this opportunity here. It's always a pleasure and privilege to be talking to the industry participants for a single reason. It's not always possible for the regulated and regulators to be on the same page, but when we talk to each other, we move from 2 pages of different books to maybe only this page of the same book, and that itself quite an achievement. And as the subject matter has been told, I will just be briefing you on the overview of initiatives that has been taken by particularly RBI in the areas of credit inclusion and all the policy intervention in improving the credit access. In this era of multi-inclusivity, the importance of financial inclusion in general and credit inclusion in particular can never be overemphasized. Every country, regardless of the gradient of their economic development, has their own socio-economic inclusion challenges even this day. In the scheme of Sustainable Development Goals, that is SDGs, of United Nations, financial inclusion occupies a prominent position, featuring as a target in almost 9 out of 17 goals to be achieved by 2030. Socioeconomic inclusion is often predicated on the degree of access to finance that individuals and MSEs, micro and small enterprises, have to consummate economic activities. Given the scale and depth of challenges around credit inclusion and credit access in India, naturally, it had to be addressed by a panoply of initiatives taken in both government and private sector in a synergistic and mutually reinforcing sequences. It is rightly said that future of financial service is collaboration. We have been successful to a respectable degree, and the visibility of future are clearer right now. For a context of policy initiatives and interventions, the financial inclusion journey in India can be broken down into 3 pivotal phases, namely the planning phase, second is the branding phase, and third is the scaling phase. I think these are the terms which will be very clearly understandable to the industry. The planning phase essentially ran parallel to the various 5-year plans up to 9th plan, that is broadly between 1951 and 2002, involving various centralized approach to reduce the factors of financial inclusion. Just I will underline the focus was on financial exclusion to eliminate that. And it included the initial phase of financial sector reforms in India, which started in 1990s. And the focus was obviously more on the agriculture. The branding phase started in 2003. And because these are the classification I am giving, and this branding phase started with the Office of Governor of Reserve Bank of India being occupied by Dr. Y.B. Reddy, who is also credited with coining the term financial inclusion and mainstreaming it in the most regulatory approaches to the central bank. The scaling phase, which essentially represents focus on digital financial inclusion, took off in 2014 in a modest manner with fast taste of digital public infrastructure, and at a great speed after 2016 with mainstreaming of multiple digital enablers. Quintessentially, fintech-led inclusion formed the critical mass of this phase. Various open source estimates push the penetration of bank accounts, if not loans, at about 90% of the adult Indian citizens, and thus more people are potentially within the reach of formal sector for inclusive digital lending. The regulatory policy initiatives on credit inclusion essentially involves moving frontiers of formal finance into informal finance, particularly in regard of households and SMEs, as I mentioned. In order to give an overview, I'll try to briefly map the regulatory endeavors of these 3 pages I mentioned with specific reference to credit. The planning phase, at its very inception, RBI was seen as playing special role in the context of development, particularly of agriculture. When India commenced its plan endeavors, The developmental role of RBI came into focus, especially in the 60s, when the RBI in many ways pioneered the concept and practice of using finance to catalyze development. During the planning phases, the focus was to channelize credit into neglected sectors and weaker sections. Thus, the financial inclusion, though the term didn't exist in then lexicon, was interpreted mainly as availability of credit to win away the financially excluded from informal to formal financial service setups. Alongside first phase, alongside the nationalization of banks in 1969, RBI introduced the lead bank scheme during the same year, followed by a mandate to have branches in the rural areas. Priority sector lending mandate in 1974 was again followed up by establishing the regional rural banks in 1975 to improve the supply side of inclusive credit. Agriculture Credit Department, which was a department of RBI, and there was a small cell called Rural Planning and Credit Cell, they found a larger house, what is known as NABARD today, and that was in the year 1982. In 1991 and 92, the self-help group finance model got a boost through RBI regulation on opening up their savings bank accounts. None of these institutions I just mentioned have been considered obsolete as yet, as they keep wearing newer clothes. Now coming to the current stage, that is the branding phase. The middle phase. The term financial inclusion, as I mentioned, was used by RBI Governor Dr. Y.V. Reddy, first in the annual policy statement in April 2005, and it was better exploited in the annual policy statement of 2006. The term was formally defined in the report of Committee on Financial Inclusion, again headed by RBI Governor Dr. C. Rangarajan in 2008. That proved to be the paradigm change in regulatory strategy during this phase by designing credit inclusion not as a program in isolation, but as a part of overall strategy in regard of role of the central bank. You could see the shift in the central bank initiatives in the beginning, the supply of credit to a particular sector, but it was really later captured as a part of the overall regulatory framework for the entire economy. The policy initiatives that helped inclusion during this phase included no-frills account in 2005, which later was called BSBD accounts in 2012. Business correspondent, somebody mentioned in the previously, business correspondent, when it was started in 2006 in a particular context, they have been really in an entirely different avatar these days. The seeds of possibility of direct benefit transfer, which actually started the revolution, it was sowed during this phase with IDR, which was a subsidiary of RBI, taking up a project. A joint effort of all the 4 financial sector regulators, a body called NCFE, National Center for Financial Inclusion, was established in 2013. This is to create the demand side. Now coming to the scaling phase, the branding phase had established the foundation at national level to scale off the financial inclusion to next level, and it went into production mode in a sequence of a trilogy. That is, the Jan Dhan Bank accounts announced in August 2014 nearly created a right to bank account for any Indian citizen. UIDAI, set up in 2009, became a statutory authority in July 2016, at the same time as when UPI was also launched. And this boosted the digital identity economy system, and the penetration of mobile phone in 2017 with a low-cost data plans hitting a high. This trilogy started the beginning of digital financial inclusion and credit access expansion. On the demand side, RBI again introduced annual financial literacy weeks and promoted grassroots level centers called Centers for Financial Literacy, or FLCs, in the country during 2017. While on a scaling phase, that is the current phase of credit inclusion, the actual and potential role of digital lending is widening in access frontiers cannot be overemphasized. RBI too has taken several initiatives to enable such market-driven innovations and resultant products of business strategies to work towards inclusive finance. As the talk time is limited and doesn't afford to cover the entire gamut of policy initiatives by different agencies and players, some of which could actually be seminal. I'll touch upon a few aspects, generally from regulatory perspective, that could be of interest to the audience present here. The business of finance is special for at least 3 reasons. Namely, its ubiquity, it's everywhere, its centrality to development of the economy. Third, and more important, is its operational dependence on efficient financial regulation. Credits inherently involve unavoidable time sequencing and information asymmetry between 2 parties. And talking of information, to digital lending fraternity sitting here, let me quote the old phrase, all data is credit data, which was again coined by Douglas Merrill, who was a digital lending entrepreneur in New York in 2012. I think that started a new phase globally for underwriting digital loans, and of course followed by accompanying regulations. The non-binary goals of financial regulations has always have 2 peaks. One is the developing the sector, market, products in a stable and sustainable manner without negative disruption. And second, more importantly, protecting the interest of the financial service consumer. Broadly, this is the 2 goals of regulation. The tools available are generally institutional developments, affirmative policies for market development or stabilizing it, and calibrating regulatory boundaries. The regulatory initiatives for credit inclusion and better credit access followed the same principles and path. As everybody knows, access, usage, and quality form the tripod on which credit inclusion grows. It will be up to bounce up some of the aspects that have been in motion during last few years. I'll be very brief here because most of those present here, they know all about it. First thing about the creating market infrastructure and institutions. The original, cover only a few aspects. The original usage of the word digital lending generally refer to P2P lending, and India was one of the first jurisdictions globally to have a regulatory framework for it since 2017. While 25 registered P2P entities operate today, conformance of some of their business models to the original regulatory intents may need some reworking. The open banking concept for financial information through account aggregators was introduced by RBI in the year 2016. The registration of digital-only NBFCs was introduced in October 2018, and currently there are 17 such NBFCs which have been granted registration for such inclusive finance. The differentiated banking model of small finance banks started operating in 2017-18, which was principally dedicated to inclusive credit by fiat in a technology-native environment. Digital banking units, that is DBUs, introduced in October 2022 as a digitally pivoted differential business model strategy with dual objectives of accelerated digital financial inclusion and availability of digital banking infrastructure to act as experience points to the uninitiated to reduce the digital divide. RBI Innovation Hub was established in March 2022 with the express goal to catalyze financial inclusion in India by enabling access to frictionless financial services which are suitable and sustainable. Among major contributions to inclusive credit, it has helped RBI launch a pilot project and end-to-end digitalization of Kisan credit card, that is loans up to 1.6 lakh, in September 22 in select districts of 5 states. The pilot was also extended to dairy farmers of a few societies in Gujarat, of which a mention was made by one of the market participants. This initial effort was upscaled to larger ecosystem now in August 23, known as PTPFC, that is Public Tech Platforms for Frictionless Credit, with 5 loan journeys. One is Kisan credit card, second is dairy loans, third is MSME loans, and fourth is personal loan and home loans. And now the total number of 9 participating banks and connecting 13 data service in the pilot. During the past 3 months, the banks have disbursed about 35,000 loans amounting to 2,600 crore, including 25,000 MSME loans amounting to more than 1,000 crore. Now, I will dwell a little bit on the policy initiatives in brief. Again, select items. The co-origination model of lending between NBFCs and banks issued in September 2018 got a policy shot in the arm in November 2020, which is upscaling to a co-lending model. As the plinth for creating liquidity for various forms of lending arrangements by main players and within a drawn boundary, RBI came out with transfer of loan exposure directions in September 21 and securitization of standard assets in December 22. Under these two guidelines, many of the innovative financial products can be interpreted in terms of its regulatory coherence. The guidelines on digital lending issued in September 2022, supplemented by guidelines on default loss guarantee in June 23, cemented the adoption of the dynamics of the new market that has innovated itself and had created new player categories. While the lending part of the digital lending was common for any other mode of lending, the digital part, regulatory guidelines addressed essentially elimination of possible regulatory arbitrage, improving transparency, and ensuring consumer protection. Further, in order to bring clarity on the governance and internal control mechanism around technology and use of outsourced technology models of banking, where the BaaS, the banking as a service model, is really gaining acceptance. Two directions have been issued, one on information technology governance, risk and controls and assurance practices, that was issued in November 22, and another on outsourcing of information technology services issued in April 10, 23. So this will actually give an impression to other market participants the kind of standards which regulators might want. Now, I'll talk indirectly about certain business models, which basically, in general terms, on the regulatory arbitrage and regulatory perimeter. Generally, there are 5 conditions that give rise to regulatory arbitrage opportunities in financial services. Number 1, regulatory regime inconsistency, time inconsistency, economic substance inconsistency, interpretive inconsistency, and information asymmetry. These conditions are not cumulative, and only one of them has to be satisfied for an arbitrage opportunity to arise. It may be difficult to entirely prevent regulatory arbitrage through innovation in the short run due to existence of pacing problems. Hence, any business model that capitalizes on the unfenced points of regulatory perimeter cannot be sustainable in the long run, as the gaps get fenced sooner or the later. The business models of some of the initial digital lenders had to face this situation even when the regulatory perimeter got extended to adapt the new technological innovations. The regulatory complexity in activity-based approach which RBI has adopted faces certain challenges in finding common threads in fintechs that adopt digital lending as a vertical, or those who adopt it as a horizontal alignment to their business strategy. Further, platform-based conglomeration of financial services also pose a cross-sectoral implications. Proposal to set up fintech repository by RBI Innovation Hub and proposals to have an SRO of fintechs or digital lenders. These are mechanisms for various lending service providers and fintechs. So this will really help to work around various technical challenges that regulation often faces that give rise to the pacing problem I just mentioned. The proposed blueprint of Digita for application hygiene and consolidated reporting of the for the applications used by the regulated entities is another step in this direction to warn the law enforcement agencies as well as the public. Now, finally, I'll touch upon one of the most important area in the conduct of digital lending. It will not be candid not to say that a positive instrument such as digital lending debuted on the credit access lines in India in a manner that was not so positive, owing to the incidents that are pretty well known. While as a regulator, RBI is always long on technology and innovation, it cannot short its role to ensure prudence and acceptable consumer conduct in the system. While dealing with a highly vulnerable and marginalized group of clientele, the onus of responsible conduct and adhering to fair practices are almost one-sided. Notably, the dependence on informal sector delivers double whammy to target population, which not only aggravates their financials through usurious terms, but also prevent them from accessing the regular protection available in the formal system. As the understanding and sophistication for clientele to approach appropriate grievance redressal is rather inhibited, regulators expect the financial service providers to carry the extra burden of responsible lending. I will mention two aspects which was mentioned by Governor of RBI a few days ago at industry conference. First is about the fair and responsible pricing. And to quote Governor, one has to bear in mind the affordability and repayment capability of the borrowers for inclusive lending. Though the interest rates are deregulated by RBI, it is indeed for lenders to ensure that flexibility provided to them in setting interest rates is used judiciously. A major issue that has been pointed out as not of inclusion or exclusion, but huge inequalities in terms of inclusion. A low-income person has to pay disproportionately higher fees for any financial service than a high-income person does. Second part, which Governor has flagged, is about the borrower selection. He highlighted the risk of sole dependence on model-based lending through data analytics, underwriting loans based on preset algorithms, which in turn are based on certain assumptions without continuous testing, could result in not only financial stability risk through type 1 errors, but also exclusion of deserving borrowers through type 2 errors. Digital lending must have a human face and human supervision rather than work on the laws of large numbers. Third, the dichotomy in inclusive lending consists of tendency to ensure customer loyalty, which doesn't help the deserving borrower, migrating to more mainstream lenders with possible cost advantage. This tendency becomes more entrenched by arrangements between the mainstream lenders with low-cost funds and the last-mile players with higher cost of funds and higher required rate of return. The share of data marginalized borrowers need to reduce for inclusive finance to really yield results. For building up timely credit history, RBI issued directions on compensation for customers for delayed updation, rectification of credit information in October 2023. And last, in the conduct side, I will talk about the respectable conduct, essentially around the recovery methods. The so-called end-to-end digital journey often has a conventional patch at recovery stage. The fair practice codes of NBFCs and MFIs were issued by Master Circular in RBI in July 2015, and that has been further articulated or sharpened in subsequent circulars relating to responsible lending conduct as well as digital lending guidelines. Guidelines on responsibilities of entities employing recovery agents was issued in August 2022. Emphasis on transparency, clear communication, proper grievance redressal system, and non-coercive recovery methods are very conspicuous in such guidelines. I will conclude by leveraging digital DPIs, digital public infrastructure. India has already achieved about 80% of bank accounts penetration, a journey that would otherwise have taken 47 years. I'm saying 80% because this research, I'm quoting it from research report, was slightly dated, which will take 47 years through traditional means. So that is the contribution of the digital public infrastructure. This is despite the fact that there is significant digital divide between poor and non-poor and between the rural and urban masses in India. The challenge for regulators is to balance the obvious benefits that fintech innovators may have for growth and welfare with their potential risks. The frontier of innovation in digital lending falls within the remit of RBI, but the innovators do not fall, strictly speaking. The interaction between financial regulation and innovation is a two-way street. My best wishes for the rest of the day and the schedules, and I wish that it provides a non-digital platform to exchange experience and stimulate discussion in favor of inclusive finance and credit access. Thank you.
Thank you, Mr. Dash, so much for that wonderful, insightful, and very informative account of what RBI is doing. Well, Well, in today's dynamic financial world, the role of innovation and technology in banking is pivotal, and technological advancements have propelled banking beyond mere transactions, fostering a customer-centric approach. From mobile banking to digital wallets to AI-driven customer service and blockchain security, innovation has not only streamlined operations but has also expanded the horizon of services. And to discuss the role of innovation and technology in banking, I would like to invite Mr. Dinesh Kara, Chairman SBI, for his special address. Mr. Kara.
Thank you. Very good morning to all of you. This is one subject which is probably gaining a lot of currency these days, and rightly so, because when we look around and observe that the kind of infrastructure creation which has happened over the past couple of years, when it comes to the digital space, perhaps India has got a very different role across the globe. The special emphasis which has been given on the financial inclusion by the Government of India, and also the steady rise in the consumption patterns, that has led to the exceptional growth in the India's financial services industries. Particularly as far as the credit availability is concerned, we observed that despite the continuous growth in demand for credit over all these years, the unmet credit needs, and also more so from in the area, more so the rural areas, where there is a felt need for this credit, there is a huge gap. And that gap is essentially attributed to the uncertainty about the risk profile of the borrowers, or maybe there is not adequate information which is available relating to the borrower's profile. So that is something which is holding the lenders as far as their willingness to or their ability to lend to this particular strata of society. And the fact remains that it has led to a situation where the credit has become very expensive for this segment of society who actually need it the most. In this context, there was a report which was published by E&Y, which has talked about the digital lending in India, and also it talks about its being at a very nascent stage. But even this report talks about that it is likely to grow at a very rapid pace, and the digital lending disbursements are expected somewhere to the tune of about 47 trillion by 2026. The lending market, of course, continues to face persistent challenges, which actually hinder the commercial momentum. The rapid growth of the fintech firms and the increasing demand-supply gap in credit have led to the launch of several initiatives of GOI as part of India Stack. This India Stack is actually reshaping the digital lending ecosystem for this new era, and it aims to promote the use of standardized protocols, advocate transparency, and commoditize lending products. The lending ecosystem, therefore, has undergone a revolution in the last decade, and new technologies and non-traditional players are creating a niche market for the value-based credit, prioritizing speed, convenience, and customer service. Infrastructure development initiatives which have been taken in last couple of years, starting from Aadhaar, eKYC, DigiLocker, Open Network for Digital Commerce, OCAN, etc., and various other policy-led initiatives such as First Loss Default Guarantee Program. They are all targeted towards the promotion of the digital lending and are helping solving the persistent challenges of the Indian lending market. Driven by the strong macroeconomic factors, digital lending sector represents a significant potential for the lending players. Digital lending has been seen as a significant traction, with fintechs introducing innovative business models to provide credit to the underserved segment. Lending techs have effectively leveraged the demand for quick access of funds through a seamless experience and have made progress in reducing the credit disparities based on the geography, age, gender, etc., with the collaboration with the NBFCs and the scheduled commercial banks. Traditional banks are also undertaking huge transformational projects to upgrade their processes, products, and services to seize the opportunities from the growing demand for credit. Banks are directing huge funds towards building digital initiatives, digital native products, and also the service which consumes API framework. Most banks are also undergoing accelerated digital transformation, whereby they are launching unified payment products as well as the lending platforms, and that they are making an effort to ensure that their end-to-end lending process should be digitized. There is an increasing collaboration which is seen between the account aggregator and the financial sector players. Lending to the various customers is being prioritized by banks and fintechs, driven by the access to structured and unstructured data through open banking and with access to golden sources like GSTI, etc., through API integration. Banks and PSPs are looking to monetize the UPI payment and the lower cost of credit disbursement. Will launch newer, more innovative UPI-based revolving credit lines, instant overdraft TMIs on savings, current account, and personal loan solutions. These are some of the newer initiatives which have been taken by the banks. The launch of the OCAN has been a major step towards democratization of the credit and financial inclusion. OCAN is one of the biggest drivers for next growth in India, alongside ONDC and UPI. These are the payment systems which will further complement the efforts of the banks for strengthening the lending. Embedded finance is another very key important area which holds the huge upside in growth due to inherent abilities to serve their captive customers across industries and making instant credit availability as enabler for the business and economic growth. Embedded finance, as I perceive, is almost the finance on the go. But again, what all precautions needs to be taken, that is something which the system needs to keep in mind. Through initiatives such as ONDCs and financial service players, very active participation in the network, it will not only help in augmenting the customer base, but also helps in enabling instant e-commerce payments through ONDC platform and will lead to democratization of the e-commerce participation by local and hyper-local merchants. Efficient utilization of artificial intelligence and advanced analytics can redefine and accelerate the success of digital lending. The technology can streamline the lending process, eradicate the inaccuracies, prevent fraud, and ensure that lenders effectively provide successful loan products to eligible borrowers according to their felt need. Further, the push from RBI by creating RBI Innovation Hub is helping the ecosystem in creating a robust lending infrastructure which is information-based instead of collateral-based. But in the backdrop of all these developments, the very important aspect which cannot be ignored is the data privacy regulation, which is just around the corner, which will certainly lead to enhanced scrutiny from the regulators and will lead strategic calibration by banks and fintech. To my mind, this is going to be a major change in the way all of us consume data, all of us use data for various decision algorithms. In India, sustainable finance is also gaining significant momentum. Of late, we have seen that the there is a sharper focus on the sustainable development, and there is increasing recognition of the potential risk and opportunities associated with the ESG factors. Fintech companies, banks, and non-banking financial players have exhibited traction for digital lending to streamline seamless loan disbursement, approval, recovery, credit assessment, and other credit services, while imbibing the ESG considerations into the lending decisions. The lending tech space is growing exponentially, but despite the immense growth potential, these players face a range of challenges that can hinder their overall growth story, from regulatory prescriptions to the tightening of the funding inflows, and from the need for a robust infrastructure to the customer trust. They must navigate the complex landscape to achieve the sustainable growth and profitability. Approach of the regulator, to my mind, is essentially to fix a broader guardrails for adopting the soft touch regulations. And it is also helping to promote the digital lending with a sustainable future. These are some of my thoughts on the subject. I wish all of you the very best and very meaningful deliberations throughout the day. Thank you very much.
Thank you, sir. Thank you so much. Time now to move on and all right. Thank you, sir. Thank you so much for that informative talk. But really, I would want you to come back on stage. We have a fireside chat soon, and I would also request CNBC TV18's Lata Venkatesh to join Mr. Karo on stage for a fireside chat.
No, they didn't give me any specific place, so. Thank you very much, Mr. Kara, for joining us. Well, technology and banking, or technology and finance, is such a vast space that a former City banker has almost explained or described banking as technology companies with a banking license. So it's really a vast terrain. Since financial inclusion is going to be covered by the next panel, where your colleague, Mr. Tiwari, is also going to be present, I will exclude inclusion and look at two or three other questions that have risen just over the last, few months, and they face, they may change the face of financial sector and technology in India. One of them you raised yourself, of course, the DPDP bill, the Digital Privacy Bill. But before I come to that, let me ask you or request you to put the, the journey of banks and fintechs in perspective. Do you think the relationship between the two has changed in any way? Was it more competitive and combative initially when fintechs appeared? Has it become collaborative, or has it not? If you could just explain how you see it.
Thank you very much, Lata, for this opportunity. Very interesting question. The way I look at this particular space, banks have got an advantage in terms of network. Banks have got an advantage in terms of the trust which they have built over the years. So naturally, when it comes to India as an economy, it is essentially a bank-led economy. Having said that, banking actually is now very, very critical, and also is forming part of everybody's life as a person, and also a very critical role it plays for the economy. So in that context, the size of our nation, the complexities which are there, perhaps banks are the one who deal with a huge set of data. And while doing that, the fintech or the technology providers, they have a major contribution to make. We have seen that over the years, there is an increasing adoption of technology in the banking system. And now we have come to a stage where we are observing the technology being adopted practically in areas which are beyond imagination. I would say that perhaps it's a stage where banking is coming to meet the expectations of the customers. And while doing so, there is an effort in terms of offering the frictionless solutions. And to really offer the frictionless solution, to my mind, technology has a very important role to play. In order to really make an assessment about the customer's profile, right from there, where actually banks are now using analytics. Banks are thinking in terms of offering the hyper-personalized solutions. So this is nothing but the next level of collaboration between the fintech and the banks. Having said that, I also must mention, over the years, banks have been accustomed of operating in the regulated environment, where the boundary conditions are very tightly defined by the regulator. And fintech are relatively the free birds. So how to really make them understand that in the financial sector, one has to operate, if I may say so, use the anomaly of a bird and the cage. The boundaries of the cage cannot be oversighted ever. So that is something which I would like to say, that as banker, we can probably hold their hand and probably help them in operating within the boundary conditions. And this eventually, believe me, will lead to the trust creation in the fintech also by the customers. Because eventually, this is one sector where you play a fiduciary role. You play with the savings of millions and billions. Yes. And you also help in creating the lives of millions and billions by lending. So it's a it's a fiduciary responsibility where the regulator has got immense role to play, and we must not undermine that.
Fair point, sir. Looks like it's becoming collaborative, but one can notice the the boundaries of combativeness, or at least disagreement between banks and fintechs. Let me just develop on that point. The Reserve Bank governor looks like is at the moment on your side when he alerted in a recent speech that algorithm-based lending needs to be recalibrated constantly. There was, of course, the risk weights also placed on unsecured loans. So do you think, or is it a common practice now, both among bankers at State Bank and others, to relook at the co-lending partners? Are their algos good enough, or do you fear that fintech algo-based lending needs to be overseen? Are they too facile or perhaps not very relevant in terms of the parameters they use, considering the threat or the caution raised by the governor?
No, I think when it comes to digital lending, we as the bank also, we have got various algorithm-based lending principles, and we have also created a book. But as a banker, we also keep on revisiting our algos, because unless and until the algos are something which are relevant in the current day context and also meant for the target customer segment, we can have a challenge of the quality of the asset which we have underwritten. So with that in mind, it is, I think, what Honorable Governor has mentioned in terms of validating the algorithms or the models, I think is a very, very right approach. Even as lender, we have observed that over a period of time, we probably cannot afford to have the similar set of principles for lending, particularly when it comes to algorithm. So algorithm, we have to keep on revisiting. And actually, we are using a lot of machine learning, and our experiences which we have, we keep on integrating our actual ground level experience with our algorithms so that we can improve upon the algorithms. So as a bank, we keep on doing that.
Lately, has it changed?
Yeah.
Lately, have you all upped the ante in terms of new to lending customers that are originating from fintechs? Has the surveillance increased?
Yeah, that is true. When it comes to our co-lending principles, which you had referred to in the previous question also, our effort is, of course, when it comes to the customer selection, which is essentially done by the co-lending partner. But when it comes to assessment of the risk, we do have an oversight. And if at all we are not comfortable, we do prescribe the standards which are required to be administered to underwrite a particular set of customers. So new to business, of course, due to business, there is another plus is that now today, the unstructured information which is available, that is actually increasing every day.
Yes.
And that is giving a much better insight into the customer behavior, and also it helps the lender in assessing the credibility of the borrower also.
Okay. So the other new news in this area of fintechs and non-fintech bank lending is the fintech repository that the governor has announced. From what little we have been able to understand is that they have invited, it's a voluntary effort, they are going to invite fintechs to register in that repository and describe themselves. So my understanding is that, you register, there are fintechs with perhaps one or two or a few apps, and they describe the apps, and banks can perhaps pay a license fee and use them. How do you see this repository? What are your hopes and fears with respect to it?
No, in fact, I am a major supporter of this particular idea for the simple reason that today when it comes to banking, we consume a lot of fintech services. And when we consume a lot of fintech services, we have to have some kind of a standardization of those fintechs. Because why? Because, this is one sector where the contagion flows in no time. I would say, it flows as on yesterday. That is the kind of a pace. So with that kind of a situation, unless and until if at all there is a repository at RBI end, it will actually help the lending institution, or for that matter the banks, to engage with the right set of fintechs whose credentials have been looked into by the regulator. I would say that it is not licensed, but at the same time, if I may say, it's a marketplace from where the bankers can pick up the fintech. But again, being a marketplace, I expect that there would be some kind of a validation of the credentials of these fintechs. So I would say that maybe the way I perceive it, perhaps it's an SRO kind of effort on the part of Reserve Bank of India, but certainly a very well thought of effort to ensure that the whole ecosystem is secure.
I am not sure the Reserve Bank has so far said that they will validate those who register. They are hoping that those who have the courage to register consider themselves above board. So I'm not very sure whether they're going to validate. What is very clear is that they're going to hand it over to the SRO as and when it comes.
Yes.
So any further thoughts on this?
No, I think even if that happens, see, the point is that, as I mentioned, that it's more like a marketplace of the fintech. So at least it has become an aggregator, and from here on, the journey will be very, very clearly charted how it should move.
Okay. A final question to you, sir. This public cloud that Reserve Bank is just announced it's going to put in place. An earlier speaker mentioned that whereas in the US, a larger part of the fintech is for creating tech infrastructure and smaller for customer interface. In India, it's the other way around. 70% is customer interface, only 30% is infra. With the RBI stepping in to put the cloud infra, do you think that this is a quantum leap in terms of, everything, cybersecurity, availability of digital information, maybe application of AI?
It's a very major step, if you really ask me. One, of course, as financial institutions, we were always unsure about the cloud policy, that how much of the financial data, how much of non-financial data can be kept in the cloud. One, of course, the data residency had become an important area, which of course gets addressed if at all the cloud is hosted by none other than RBI. So I think it's a very major development, and I would say that because today when it comes to the financial system and also the players in the financial system, they're of different hues and colors. And naturally, everybody would not have been in a position to invest into cloud, or maybe this is a better way to ensure if at all they have to go to the public cloud, they might as well go to the RBI's cloud. So that I would say that it is, and also it has to be kept in mind that the new DPDI which is coming, even that will also give lot many obligations on the part of the players in the financial sector. And if at all the cloud is hosted by the Reserve Bank of India, then perhaps even those aspects can also be addressed in due course. So I think it's a very positive development and in the right.
Okay. From a very lay citizen point of view, for me it looked like a cloud, a public infrastructure. A cloud as a form of public infrastructure does at least two things. Data localization is not a problem because there is no fear that data will go out. And secondly, there is no fear that a sanction on SWIFT like, sanction on some global, big tech will not harm us. We are perhaps isolated. You think those are obvious advantages?
No, see, again, SWIFT and all those kind of things are essentially, if at all there are international trades. If at all you are inbound economy, then there is no challenge whatsoever.
Okay.
So, but nevertheless, what I always perceive is that the credibility of this particular cloud will be significantly more. And perhaps institutions will feel free to host and also come out with the products which should be cloud native also. Okay. So actually computing will become very fast.
That was what? You are on Meghdut, your own cloud.
It's a local cloud which we have created.
Okay. Would you also think of shifting?
No, we have got a huge requirement for when it comes to our data storage. So as of now, we were doing it on-prem and something we are doing it on Meghdut. Okay. But yes, of course, increasingly, we are quite open. We are evaluating all kind of options for consuming the cloud services too. Okay.
A final question to you, sir. Do you think this DPDP bill is going to slow down the process for some time, as and when it comes? I mean, you have to take permission from, 200 million bank accounts in the country? I wouldn't know.
Yeah, consent is a very critical component in that. And of course, we are waiting for the final guidelines. Once those guidelines are available, we will be in a position to assess the work which is involved. But yes, of course, as it happens, that invariably, I'm sure even I expect that maybe there would be some time given for the transition also. So that time will have to be optimally put to use so that the organizations becomes ready for implementation of this bill. And also mind it, it is going to be all across. It is not merely banking system. It is the life as a whole. Because when it comes to data, everything is a data today. My coming over here is also data.
Yes.
So I think to that extent, how much of that data I would like to share, whether I can click a photograph of somebody, I'll have to take a permission. So there has to be a consent manager. So these are the kind of things. When the GDPR got implemented, there were initial instances, some of the commercial shops had the camera which are outside the branch, outside the office, maybe the commercial establishment.
Yes.
And somebody went to the extent of saying that it is infringing into my privacy. So that is the kind of a situation. And I am not really aware what will be the size of the complications which will emerge in this bill. But nevertheless, as an organization, we're all geared up. We have seen so many changes. I think change is the only permanent in life.
Okay. Thank you very much, sir. So this covers a very large gamut. More collaboration with fintechs on the part of the legacy banking sector. But there are edges of areas where collaboration and cooperation has to be achieved. But I think you end with a very important warning that, the DPDP bill imposes, the Data Protection Digital Privacy Bill imposes some very important responsibilities on all sides, and we will have to see how that evolves. That discussion for another day. Thank you very much, sir, for spending time with us.
Thank you very much. Thanks a lot.
Thank you, Lata. Thank you, Mr. Kara. Thank you, Mr. Kara, for your time as well, for that wonderful fireside chat and also the address. Thank you, sir. And now, ladies and gentlemen, it's time for our first panel discussion titled Tech-Driven Innovation Fostering Credit Inclusion. In a world driven by digital transformation, the panel discussion promises to unravel the intricate tapestry of technology and its pivotal role in shaping the future of lending. How can innovation be harnessed to extend the reach of credit, ensuring inclusion for all? Well, steering us through this thought-provoking exploration is CNBC TV18's Lata Venkatesh once again. Along with her, let's warmly welcome our panelists. Put your hands together for Shri Ashwini Kumar Tiwari, Managing Director, Risk Compliance, State Bank of India. Mr. Sandeep Batra, Managing Director and Head of Wealth and Personal Banking, HSBC India. Shalini Warikar, Executive Director, Federal Bank. Ratan Kumar Kesh, Executive Director and CEO, Bandhan Bank. And Ajay Rajan, Country Head Digital and Transaction Banking, Yes Bank. Over to you, Lata.
Sir, please, when Mr. Tiwari comes, we will have... Mr. Tiwari is here, but I just saw him leave the place for a bit. So maybe if we can go and invite Mr. Tiwari, we don't want to start without him, do we? He just went out with the chairman. Okay. We will have to wait for 2 minutes. I hope it's okay by all of you. You don't want to start without the biggest bank in the country. So just 2 minutes before Mr. Tiwari joins us. Mr. Tiwari, may I welcome you, sir? Thank you, sir. Thank you very much. We are going to, we have a very elite panel over here, actually comprising the entire gamut of sizes and shades and nuances of the banking sector. We have Mr. Ashwini Tiwari, of course, who represents probably 1/3 of the banking sector, the Managing Director of State Bank of India. Shalini, of course, represents the private sector bank, but one of the largest private sector banks, Federal, perhaps 3rd or 4th. So clearly represents a large segment here today. The foreign banking sector is represented by Sandeep Batra here from HSBC, from Bandhan Bank. Ratan. We have Ratan from Bandhan Bank, and that represents a large MFI sector. And Ajay Kayan of Yes Bank represents, again, the private banking sector. So a fairly well represented panel over here. We are primarily discussing inclusion over here. So let me start with Mr. Tiwari on that note. Mr. Tiwari, do you think that there has been a quantum leap in terms of lending? We have financial inclusion in terms of opening of bank accounts, which the government championed. But what has been the scale of growth in terms of giving credit?
Yeah, I think you've raised a very, very important point. The financial inclusion journey in our country has been synonymous with the growth of the Jan Dhan accounts, and these are essentially saving accounts. So while there was an element of overdraft linked to that, 20,000 and then another 30,000, so totaling 50,000, but that didn't take off too much. There is some penetration there, but what is more important is that these accounts, as they had some balances, they were zero balance, but as they grew in balances, they became eligible for a lot of other lending services. And later on, the Mudra scheme, which was launched, etc. All of these things have now enabled a significant pickup in those kind of accounts. So, for example, in our case only, we have seen about about 25 lakh odd accounts opened in the lending space alongside the Jan Dhan accounts, which is a significant number for us across the personal segment and MSMEs, because some of these are lower MSME micro segment as they are called. So in my view, this really, the lending thing has taken off now, and the entire summit today on digital, I think while we have all kinds of protections to be built around the fintech lending, but this is also a kind of inclusion which, in my view, many people who are not able to get loans from banks perhaps and from NBFCs because of the lower ticket size and lack of documents have been able to get. So in that sense, this also has caused inclusion.
Well, in terms of numbers, what I've given to understand by CIBIL is that the total number of unique loan accounts, and remember, this is not total outstanding. This is only outstanding at a given point in time. So obviously more people would have taken loans than the numbers I'm giving you. From 2017 to 2019, the numbers rose from 91 million loan accounts to 179 million loan accounts, and represented 12% of the population to 22% of the population. That's 21. Chances are that there has been a significant growth. I've got some extra numbers from CIBIL on 2023, and the numbers indicate that there has been a 14% jump from 21 to 23. So we are probably talking about, the 12% of population becoming something like 30% of the population. That's the extent of financial inclusion that's been achieved in the last 5 years.
I'll just add that many of these could be repeat loans to the same microfinance borrowers. So the number might be a little lower than the 25% we think, but still, considering from 12% to 20% plus in just about 4 or 5 years is massive.
Okay. Now that is really reading my mind, because the last word from CIBIL is that MFI, I will be a little careful because there are repeat customers. So, okay, even then there is a doubling of the credit culture, which is significantly important. Shalini, there are various, pillars through which inclusion has happened. How good has been the credit through UPI, which I guess is RuPay cards? Has that made significant contributions to lending?
So thanks, Lata.
We can hear you. Just keep it close.
Yeah, thanks, Lata, for that. And pleasure to be here. I think credit on UPI is still very nascent, Lata. It's still, few months old. A few banks obviously have launched it, Federal, ourselves, HDFC, etc. I think it will take a little more time for us to get it. There are two aspects of it. One is credit card as an instrument to use UPI. That is really an existing credit card customer getting one more avenue to pay. So will it expand the credit market? Not likely. What it's likely to do is convert some of your normal debit card transactions or your savings account transactions to credit card. It will not expand credit. But the other one, which is credit line on UPI, which all of us are working on with NPCI, will definitely expand the reach of credit. So if we were to have this summit, say, 6 months later, I'm sure all of us can sit together and see how much of it we have been able to kind of leverage that infra to grow the credit and inclusion. The fundamental issue, however, I see, Lata, is how do you assess the credit, right? That is the real core problem that all of us face. And there, I think credit on UPI can help us, because we can use a lot of the analytics that we do currently and superimpose it on savings account behavior, superimpose it on cash on delivery behavior to see how that is being enabled to get more understanding of the individual concern before I say I'm confident to give him a 1 lakh limit, for example. So that's where the biggest benefit is going to come from, but I think it'll take another 6 to 12 months before we can sit on a panel like this and say how it's exploded the financial inclusion market.
But it can be a quantum leap, you think?
Yes, it can be definitely a quantum leap. It's clearly something that's going to be enabled by all banks first and foremost. And given the propensity for using UPI, given how UPI has proliferated the payments market, it can only help a financial inclusion. So it will clearly think. But just give it a little time. Yeah.
Okay. Can I toss that to Bandhan? Since you would normally have, a larger number of MFI customers and who are increasingly coming into the UPI net, I would assume the incremental numbers of people who are using UPI would come from tier 2, tier 3 cities, because tier 1, I assume, is already converted. They may already have been on Paytm and now on UPI or GPay or PhonePe. What is your expectation? Do you think credit on UPI is going to be a game changer? Has some work already started?
Yeah, so thanks, Lata, and thanks CNBC Lentra for getting us in this conference. So quickly, before I get into the specific question, there are a couple of points. I think as a country, the financial inclusion has broadly been solved with PMJDY and a whole bunch of things. It's not about financial inclusion anymore. I think it's more about financial empowerment. The whole microfinance industry is 3.5 lakh crore. And you realize that roughly around 20 to 25% people have access to credit. There is huge opportunity and a lot more to be done by collectively between banks, MFI industry, fintech partners and entire ecosystem. We can do a lot more in that area. The formal templates of credit evaluation for the large corp or the large banks does not fit into this model. We got to have a lot more surrogates, a lot more tech-driven and human interface to be able to do it a lot better. So the identity layer has been solved with digital public infrastructure. That's got solved now. But you still need bureau score, which is there, I think, getting matured over a period of time for this segment of borrowers. Then you don't have those surrogates. Like you still have to go physically with a tab and do household income assessment. Do I have what Salini was talking about? Do I have the other data points? Because they are now into digital payments. They are using heavily with 10 billion transactions, UPI transactions happening. They are using it. How do I use that as a most surrogate to be able to provide access to the credit to this segment of customer? Those simple jerry makers, the leather goods producer and all of them. I think that's the key, which is, I think a lot more work needs to be done.
Are you getting increasing digital footprint of that category of people?
Clearly it's happening. You are seeing that because they're coming using the digital payment system more and more, they have the identity layer solved. We are seeing some more data points for us to take few calls beyond the bureau score or beyond the obvious sort of household income assessment. But that's where technology can really help us make it a lot smarter. I don't think today there are enough and more technology who are willing to sit with me and really design processes and technology to be able to cater to the segment. I think it's a lot more work to be done, and some of the partners who are sitting here, we are actually working with them to create those solutions.
Okay. A similar question to you, Ajay, but yours is the other end of the spectrum. You all more began as a tier 1 metro bank. How have your co-lending exercise helped to penetrate? Has it meant more financial inclusion? And has it meant more secure lending? Because you are probably able to get more digital footprint.
Sorry, you mean core lending or co-lending?
Co-lending.
Co.
Yes,
CO.
CO, yeah. What did you think it was?
No, I said core lending.
No. CO lending, co-lending.
Yeah.
What I mean is your partnership with fintechs, basically.
Yeah. So on the partnership part, I think, one bank which you have associated, for the longest time, probably with partnerships, would have been Yes Bank, which but predominantly was on the payment side, and which is where, we built our leadership. Today, 1 out of 3 digital payments would go through the bank. What we have extended that partnership is actually now towards lending, obviously with an eye towards financial inclusion, not necessarily, down the curve to start with, because right now co-lending as a model itself is quite nascent in the industry. So the way we are working with fintech partners, and actually more foremost was actually to look at our own lending platforms and reshape our own lending platforms. The original platforms which we had were not attuned for lending, and definitely not for digital lending, right? It was a more traditional base of lending which it was used for. So first and foremost, the platform itself was more made attuned to algorithm-based lending or cash flow-based lending, looking at surrogate information to do assessment, etc. And then of course what was easier to do was actually to extend our partnership with fintechs from payments towards lending. And that is something which as a bank we have been very consciously looking at, while of course we are not very aggressively pursuing it, but we are being selective in terms of the partners that we choose with, the segments that we go towards, and looking at proliferation on that. The other thing which we also did was, and the ED sir, ED RBI referred to it, which is the frictionless credit platform. So we also work very closely with the Reserve Bank Innovation Hub, who has created this frictionless credit platform, which is aimed at democratizing or standardizing surrogate information for usage for all banks. Now you will find that various banks are at various phases of digitization, and that is really where RBI and the regulator itself have been very pragmatic towards getting all the banks at the same getting all the banks the same amount of data and allow them to use those data points for increasing lending, especially in these segments where it is required, right? So if you look at agri-based loans, KCC, MSME loans, consumer loans, so these are areas where the more level of digitization is happening and which will be used by all the banks across the board.
Okay.
So
well, Sandeep,
sorry,
from
Lata,
a
can I
foreign
comment on
bank's
that? Can I quickly comment on that? I'm sorry, but I just thought I should add to what Ajay very rightly said. If you look at the challenge on lending, there are two kind of main segments where I think we see a challenge. One is the MSME side, which I'm sure we'll explore a little later in the conversation. But there is another set of customers for whom, if you were putting it on a 2x2 matrix, these are a set of customers who are probably not financially as privileged as what you would see in a tier 1 city, and also probably digitally not as savvy as you would see in a tier 1 city. So if you put it on a 2x2 matrix, that is a sizable population in India. They haven't really evolved from a digital perspective. They may do a couple of payments, they may do it, but they're not really completely familiar with it. That segment of customers needs a very different approach from a lending perspective, needs to be approached with an assisted model rather than a self-service model to get them onto that journey where they can later be and
GSTN would give you some preliminary digital
on the
footprint.
MSME side, GST would, but if you look at individuals, GST is not likely. So I'll just give you one example of thing, and I think it was referred to by, I think it was DV who referred to it with HDFC Bank, but we also do the same thing with dairy farmers in Gujarat, which is a very sizable population. And the digital bovine loan that we do with them is based on one, it's an assisted model. So I'm sitting next to the farmer and helping the farmer through the process. Completely digital, but assisted. So it's Aadhaar authenticated, it's PAN, or whatever, all that stuff. But the underwriting is done very differently. The underwriting is done based on data we take from Gujarat Cooperative Milk Marketing Federation, Amul, which is on their pouring history. So you have the last 6 months of milk that they have actually given to their cooperative society, which then goes up the chain. And we use that to arrive at, okay, this customer is good for 90,000 rupees, which is the value of a cattle. So he said, okay, you go onto the marketplace and choose your cattle. You're pre-approved for 90,000. So we've done that over the last 6 months. And it's brought in, a very different dimension of financial inclusion. It's also got a gender perspective because most of these dairy farmers happen to be women. And therefore, it's bringing in that element also. So finding those solutions which are bespoke, which are kind of literally personalized and have to be done is where part of the challenge is.
No, I take your point. In fact, I was going to bring that in when we discuss ONDC, which will give, hopefully, a similar, in Amul is one of those niche areas where a huge homework was already done. And that perhaps will be done by ONDC. We do not know. A word from you, Sandeep, on, for a foreign bank, which has always worked on niche areas which are already digitally evolved, is there any further inclusion that technology brings to you? Or is it more deepening and better understanding of the clientele?
Well, it's all of that. So when you talk about us as a foreign bank, remind everybody we've been around 170 years in India, from getting India's first ATM.
No, it's just that you're restricted in branches.
No, of course, to be a part of NPCI from the starting moment. So I think clearly HSBC has been around and partnering in India's growth as we kind of go further. So clearly, whether it's partnering with fintechs, whether it's use of information, whether it's bringing ONDC in a box, we were the first bank to bring ONDC in a box to MSMEs to be able to participate in ONDC. So I think this will be about both deepening as well as understanding new segments and being really a part of that growth. I think we talk about the economy getting to 5 trillion or 7 trillion, and I think access to formal credit will be a very important part as the country grows further.
but you'll have been able to increase the concentric circle of your inclusion because of recent developments, data available from fintechs?
A lot more, because clearly the cost to serve, the ability to access, the ability to partner, all of this has come phenomenally together. So it's a wonderful moment where you don't necessarily need to be the neighborhood branch to be able to bank the client.
Mr. Tiwari, now to come to you. There have been recent developments in the form of, say, account aggregators. What status is it? Has it helped increase the amount of data available for either new to credit customers or even existing customers? What stage is it, or is it still work in progress?
Yes, so the amount of data available for sure has increased because CIBIL has only borrower data, but this also gives us the insurance data, the deposit data, which is not available in CIBIL.
Apparently GST and data.
Yeah, so a lot more data is available. In that sense, the overall underwriting becomes much better because CIBIL clearly is driven by whether you have taken a loan earlier and how many inquiries, etc., and various models. So in that sense, yes, this has really turned out well. What is a little bit of a work in progress is two things. One is that the traditional banks like us, for us, though we are now building models around it and we are thinking that how can we have better customers new to bank, even our own customers whose deposits with other banks is not known to us perhaps. So that knowing our customers better and new customers better is something we are trying to do. But otherwise for us, it seems like that it's a bit of a challenge that any NBFC can get this data for our customers, offer a product which the customer may or may not understand. I mean, the point about assisted modes is, I think, very, very important. And what we are also seeing is that many of the reasons for which customers have given consent and the actual usage for that data ultimately, that's not very clear. Whether there is a one-to-one correlation.
I can add to that. There were bankers who complained to us that the aggregators are normally asking us data about accounts where the balance is less than 25 or 30,000. So this doesn't look like they are asking for a big loan. This is probably fintechs using it to give loans. So do you think the account aggregator needs some guardrails to be put in?
Yeah, I was coming to that. So as for example, the majority of the reasons for asking the data when we see that, because that's the only thing we see, is personal finance management. And then it is used for any and every purpose, ultimately. So, as you rightly said, that no player in the entire ecospace of finance should be unregulated. And this is one player which is currently unregulated. There is a so-called self-regulatory organization concept here, which is, in my view, not working properly. So, unless it is regulated as to what data is supposed to pass through, they are not supposed to see that. Are they actually not seeing it? Or is it something which is happening which customers are not very clear as to what kind of consent is being given, how do they get protected, what kind of offers they are getting, are those offers right? We don't have any visibility on any of that. So I think there is a need for a proper regulation here, or proper oversight here, because without which every other player in that chain is regulated except for this. Yes. So why not this?
Okay. Ratan, would you want to add to this? Have you all been faced with multiple questions from account aggregators? Do you have any reservations or a desire for more rules on account aggregation?
Yeah, look, I mean, data is absolutely abundant and people are using it. So consumer finance as a subject, not just the banks, the NBFCs, but even the payment aggregators, even Ola is actually offering BNPL. Yeah. So essentially you have got everyone offering you consumer finance. Fintechs are helping. And it's good for the country, but at the same time, you see the whole commentary around regulatory commentary, etc., are also talking about that. 52 lakh crore is not a small sum of money. Is going through this segment, 41 by the banks and another 11 through the NBFCs. So clearly, you have data and you just take an exposure. That's the easiest thing to do. But then what next is the question. Therefore, for an individual also, sometimes I may fall into the lure of having easier access than necessary, and that can result into an accident. I think it's important that you have some guardrails around it. It's good to have democratizing data in the country, which is very, very important for us to coexist, both banks and the fintech partners. I think it will be helpful if we had some guardrails, both for individual security as well as for overall economy.
I think very strong arguments have been made. Yeah.
Just to add, I think to some extent the analogy would be with credit, like credit bureaus were a few years back.
Yeah, this is an evolved credit bureau.
You know, it started a little bit hazy, people not being sure what the bureau is going to do, etc. And today, I mean, all of us and everybody in the audience knows the bureau very well. There are guardrails around it, as Mr. Tiwari and Ratan were saying. Account aggregator has to go through that pain, to get a thing. But clearly, with good customer consent, with the overlay of DPDP and etc., I think there is a wealth of information there which banks can use. It's really up to us to use it responsibly and correctly.
Also, I think while there is a use case in lending, there is a unique use case in personal financial management as well, because clients now have a single view to all their bank accounts, their funds, even the broking. I think our clients' ability to get better advice, able to keep tab of all their money at one place is going to be phenomenal. So the use cases are just beginning to come into the country, and the rails have been laid out. So the use cases will be across lending and personal finance management, and I think you will see lots of partnerships between banks and fintechs to get this together.
Okay, yeah, so a lot of partnership as well, but at some points in time, it can be a bit of a tug of war, depending on how much data is being sought and from whom.
It's also a credit mitigant, right? So one is the opportunity part of it, I think, which we all understand. We all spoke about it, right? That you are getting a single view, of the customer's entire persona. You're able to identify what kind of loans, what kind of financial products, or to what extent of financial products you can give. So that is one part of it, which is the revenue generation. But it also helps you design the early warning signals, right? You're actually having access to the account statement. You're actually seeing if the person is delaying any repayments. You can also create those early warning signs to see how you can ring fence, some of the lending or other opportunities which have been done. So it actually plays both ways. It's too nascent again.
Yeah.
Account aggregators right now, I think it's banks only giving information. The extracting is very less. But as the behavior changes, the volumes go up, I think it will really be a game changer in my view. The way account aggregation
when it came, we all thought it was game changing. I mean, I remember having a lot of discussions on television, thinking that a huge.
We just need to be a little more patient, I think.
But later on, we have seen that even rules have to evolve. Would you say, at the moment on account aggregators? Mr. Tiwari, the other big product which astounded the financial sector was this 59-minute loan that the government started, and there is also, I think, 59-minute online PSB
entity is called online
platform.
That's the company.
How is that evolving, or is that also work in progress?
No, so that is essentially an in-principle loan. It's the disbursement doesn't happen online straight away. The documentation part, etc., still has to be done.
But has it improved inclusion?
No, it has improved inclusion in the sense that a lot of people who actually went online and got the sanction, etc., then subsequently visited the branches and they got disbursement. It did. See, we are a country with, I would argue that we are a 34 nation countries, agglomeration of that. We need thousands of solutions. No one solution is going to be good for us. Of course, the base level has to be things like Aadhaar and all, which essentially gives an identity to everyone. So this one also, the PSB online, now the efforts are on to marry it with the NSCL digital documentation, which is a work in progress. Once that happens, it will be online end-to-end. And once that happens, I think many of these mudra and all, which banks are also doing online, by the way, end-to-end, will all start to happen there. And in the middle of this, you heard the RBI saying the end-to-end, what they have created. So we are coming to a situation where there will be at least 4 or 5 platforms in the public domain, which will all claim to have end-to-end digital and all integrated with all the GST, etc., all the data which is available. So which is a good thing in my view, because these are all, in a sense, BCP for each other. So I take it that way also. There were multiple platforms, could be a confusion, but at the same time, there are so many people, some need assistance, some don't, and we are just one cyber incident away from one platform. So one doesn't work, the others are working. So in that sense, it's all good.
Okay. Well, actually, this was going to be the last 3 rounds that I want to ask from you all. How do you see the digital platform evolving? But an added question that I want with it is, what is your ask from fintechs? Since you have a captive fintech audience over here, could you add that before I hand it over to Shalini?
Yeah, so clearly fintechs are very important partners. I mean, we have seen solutions and we are already integrated with many fintechs on many journeys as part of our account opening and loan.
You're free to accuse them also.
No, I'm not accusing anybody. So it's all a process of evolution. So they've all taken one piece of the journey and really addressed that very well, not only UI, UX, but also the ease of journey. So we are open to partnership with all the fintechs. The only ask we have is two things. One is be really good on the cyber side, because we cannot have a situation, especially after DPDP, that data privacy and cyber security will be compromised. And we have our in-house tests as well, so please be strong on that. And the second, of course, is have strength in the after-sales service, because we have seen very small teams develop something very well, but when a bank like us deals with somebody, and if we have a problem, we want a response in seconds and not days or something. So those are the two asks.
Okay, Shalini, your vision in terms of how you think, where do you see a quantum leap, and a word to the fintechs, either ways, what you want from them or what you want to thank them for? Okay.
Thanks. I'll quickly cover both of them, Lata. On the first part, I think the quantum leap has to come, in my view, from the whole MSME segment. I think individuals, we've evolved a lot on a scale of 1 to 10, probably at about 7 or 8. But on MSMEs, there's still a lot more work to be done. The online PSP that we refer to, all banks use it in some form and fashion, including us. And as Mr. Tiwari rightly explained, you can get an in-principle acceptance. MSMEs can walk into our branches and, with just the data being pulled out from GST and IT, all of that, you can get an in-principle approval. How do you take it to the next stage? Disbursement, collateralization of the security, where can we get the necessary APIs to do that? How do you get to, just doing the whole documentation from a disbursement? That's where the next level of innovation has to come from, in my view. The digital documentation has evolved quite a lot, so that's helped a lot. But the whole MSME segment and how do we address their credit needs in a more digital manner is where we believe the next, kind of leapfrog of technology has to come in. On the fintech side, Lata, I think you're familiar. We work extensively with fintechs. We do a lot of work with them. Clearly, we see a huge benefit in that collaboration, whether it's the customer experience, whether it's innovation, whether it's customer journeys, all of that stuff, the agility, all of that. And it does put some amount of reverse pressure on me and my team to make sure we do it. What I really ask for, and this is something that any of the fintechs you speak to who work with Federal Bank will tell you, clearly, supplementing again what Mr. Tiwari said, an absolute understanding on the risk rails, whether it's credit risk, operational risk, regulatory risk, whichever risk you look at it, it has to be something the founder and the team have to understand very clearly. And the second is transparency in customer communication. I mean, there is nothing more sustainable than making sure there's transparency in customer communication. So I think those are the two, which to a very large extent, 4 years back, situation would have been different. But today, I think fintechs understand it and appreciate it and work with banks on that.
Yeah, one can understand there are new frameworks coming for loan aggregators also. So clearly not too much transparency or in communication to customer is in place. Okay, let me change the question a bit now. The fintech repository, how do you see that, helping you or helping the financial inclusion ecosystem?
No, I think this is obviously voluntary and people want to register, but it is a great opportunity for firms to be credible, for firms to be registered, for firms to be able to relate to banks. And I think as banks, we are in a business of trust. So you are looking for reliable counterparties because ultimately you are there in the long run. And I think we have some of the best and brightest of India in the fintech industry.
But you think that that's a huge leg up, a huge platform for fintechs? How do you see the concept itself of a fintech repository?
Again, it is an opportunity, but still early stages. We need to see how volunteering happens and how people. But I would imagine that the industry started to mature. But we are still in early stages of the fintech revolution of sorts. But Shalini spoke about the need for risk and compliance, and I think this will go a long way.
Ratan Kesh, I wanted to ask you, have you lately seen an increase in the number of, you can't call it hacking, but customers getting caught in the wrong foot because of being approached? I mean, by a whole variety of tech. I can't call them fintech. There have been complaints that some bankers have told me have come from people who are offering to help on, passports. And then it actually leads to hacking of the bank account. Or, other kinds of way in which customers have taken for a ride. So what would your worries be in terms of financial inclusion through technology, but the risks it brings with it?
Yeah, I think it's a very important point that you make, Lata. Clearly, the number of frauds in the country is going up significantly. The banking frauds are escalating. And it is happening partly because of the point that Mr. Kumar said that, look, there is no guardrails around access of data and providing access of data. Oftentimes, it is used for good purpose, but then customers don't realize which one is used for good and which one is not so good. And therefore, they end up falling into the lure or even fall into the prey of some pressure, tactics, etc. by the fraudster. And they are actually few cycles ahead of the banks and the fintech players. So I think one of the asks that I have from the fintech community is to really create enough enabling environment for us to protect customers' money and really hard-earned money. That's one area. But I think since you asked this thing, what's the ask from the fintech, I'll also talk a little bit more on the MSME side. I think if you give me
absolutely,
one more
please.
minute. So, look, it's very interesting dichotomy that the SME sector, MSME contributes to 29% of the GDP, and the credit gap is something like 15 lakh crores. And you sit in the meeting rooms, the reviews of the business guys, they don't have business growth. They are saying that where do I see the growth? I don't see it coming. Now, that probably is because we are not necessarily solving the problems of the MSMEs. What they need, what are their problems? Their problems are that you are asking for a standard credit model of collateral. They don't have. They have that one house, you say that put it on mortgage, they cannot do that. You are asking, saying that, can you show me your last year ITR on the balance sheet, which has really been growing significantly? He has got a good product, good technology, but he's not able to grow because he doesn't have marketing capability. He needs money to be able to build that. He may have a good product, but there are some operational inefficiencies, the margins are not so good. He needs to invest in technology to be able to get that. How do you really bring in the not so formal credit models to be able to bridge into that, the gap? And then both in the review meetings as well as the MSME will get the benefit. And I will go a little bit of saying most banks actually go into, we take 2 steps forward and 1 step backwards. I mean, one accident happened and you go back to say, no, that's the right model, and let's not do all of that. Let's go back to our traditional model. It's like 2003, India Saurav Ganguly took batting first and lost the final. And therefore, 2023, Pat Cummins should have taken the batting. He didn't, right? He still won. So you have to have the ability to really think on the spot and do things a little differently. That's my view.
Actually, that's very brilliantly put. It is where the political homework has been done, like in Amul's case, where, the community is ready for marketing because somebody else has done that homework. So it's easy to give credit. But as you point out, that kind of, say, political, sociological homework or cooperation has not been done in so many sectors in India. And a banker can't do that. It has to come perhaps from the social sector. Ajay, your thoughts in terms of what you would want from the financial sector? And let me start another conversation, which I will end with Mr. Tiwari, on, how do you educate? Because this digital privacy would mean that so much of the data is going to be available, but you have to tell, seek the permission hereafter from the customer himself. So how do you see that evolving?
So on the digital, the DPDP you're referring to, right? So see, customer consent is obviously, going to be very critical. First, let me address the point on, the ask. So India...
Ask to fintechs.
Yeah, so the ask from fintech. So India, in my view, is it is really at the cusp of digital transformation. We've seen various public digital infrastructure, being created by the government, which effectively, has led to 2 things. One, digital proliferation at scale. Because it comes with the highest level of trust being promoted by the government, enabling regulations, by the regulators, so that it, gives the consumer, whether it is an individual or a business, the highest level of trust that they can actually adopt it, right? And the numbers speak for itself, whether we, and, you started with the point around on credit proliferation, right? The credit bureau coverage itself has actually doubled over the last 3 years if you actually look at it. So that itself shows how much, credit has actually included, not only in terms of existing credit, but also new to credit, right?
New to credit, or at least the amount of credit coverage has gone from 12% to about 25% from 2017 to 23. Do you see from 23 to 30 a similar doubling?
I would definitely see that. So 400 million is, 380 million is actually the number, that I read about. And I definitely see that the number doubling will not take as much time as it did in the past, right? So with the slew of initiatives like, the frictionless credit platform or the account aggregator, initiatives like Open, all of these are actually meant to standardize or democratize in a way, information and also credit protocols across the sector, right? So whether it is a bank using it or an NBFC using it or a fintech acting as a LSP, facilitating banks to proliferate credit inclusion, in my view, the next doubling will actually take far lesser time than what has happened, in the past, right? But I think the most important part, which the regulator has also alluded to and, come out with regulations around risk weight and also, some warning signs around usage of algorithms, etc. I think that could slow it down a little bit, while it will not definitely stop. But what it will make sure is that it will consolidate the players in terms of, the ones who are arbitraging information to one who are using it in a more, careful or a calibrated manner, right? So they're really putting onus on the regulated entities to calibrate their own risk engines or rule engines and then take the credit. Of course, they can use surrogate information, but finally the call needs to be taken by the regulated entity. So I think that will make sure that credit is being done in a more prudent and scalable manner.
Fair point. Actually, I didn't get into this risk weight and what impact it might have, simply because I think Ritu Singh is going to speak to NBFC chiefs in a minute, and I think that will form a very important part of whether that is impeding inclusion or simply improving inclusion by making it safer. But I leave that to the very able hands of Ritu Singh and her very eminent panel. But I have to end with this last word of caution, sir. This DPDP bill coming in, let me elaborate it, Digital Protection and Data Privacy Bill. Do you think that now we have to, go up from financial literacy, which we have not yet achieved, but we have to go to financial education to tell the lowest common denominator and even the highest common in this case, how and what data they can reveal and cannot reveal. Are we in for a very challenging period? How are you looking at the DPDP bill?
Yes, so I think Mr. Khara did talk about that a little bit. So before coming to DPDP, very quickly on Ratan's point, and you raised a very important point. I think the biggest risk today is the protection of the individual customers, not cyber. This is largely the social engineering kind of activity. And the challenge we see there is, very educated people like you and me also falling prey to such instances. So there are 2-3 basic issues which needs to be solved there, which are a work in progress. One is that, of course, we need to prevent that, and therefore all banks have to have those alert mechanisms in real time. We already have. But more importantly, once the money goes, how do you stop it from going out of the system? And how do you get it back? Today, the need of a physical FIR to actually get the money back is very, very difficult. The money has been defrauded in Mumbai, the account maybe in Punjab, and somebody else, 10 accounts in between. So all the state police, so this is one systemic issue, I think. So we are working with the Ministry of Home Affairs and the I4C on all this, but all states to be on board. So that is one challenge. And the second, of course, is prosecution, that these people need to be caught and put in jail for a long time. And many of them are unfortunately not adults. So we have all heard and seen Jamtara, etc. And believe me, that actually happens. We've seen that happening actually. And we see this more changing all the time from different clusters to another cluster to another cluster, because there's no downside. You try 100 times, one guy gets defrauded, your day is done. And the last piece there, which I think the government has very seriously taken up, is with TRI to actually block SIMs, and also the latest idea is to block IMEI numbers. Because changing the phone would be hard. It's expensive. SIMs are like I mean, though there are a lot of controls being put, still not very effective. So I think that piece is real thing which we need to solve on a systemic level. And coming to the DPDP Act very quickly, I think we did an in-house analysis and it's still a work in progress. The implications can be simply huge because in each step of everything we need a customer consent. So we have requested two things from the government so far. One is give us much more time because it's new customers. Perhaps we can build in the next 5-6 months a consent layer and a consent manager, etc. But for the existing 400+ million customers, we need time to actually get their consents for everything. Or allow us an omnibus consent. Even that may take time. So that is one piece. The second piece is that the customers sometimes do not understand how much consent to give, till what time, how do you take it back, or for what purpose. And there are purposes to protect the customers. And so our ask has been that whatever data is asked by government or RBI, and there are things like gender, etc., which we don't need actually in our account opening, but it is needed by the RBI, minority status, etc., all of that. So all those things, we are saying that please put those things, plus those things which we need to protect customers, for example, getting the profile, etc., just so that if they do any transaction which is outside the profile, we stop it or give them an alert. These things should be put under maybe not needed, consent not needed kind of stuff. Because unless we actually do this, it will create a huge problem area and there will be many people suing us, putting RTI to say that this was not the mandate. And so these clarifications need to come. I'm sure the rules, as they are being framed, the government also very open to the idea. They said, please tell us what more you need, and we have been telling them. So hopefully it will be addressed.
Thank you very much.
The other side of the coin is also, in my view, it will also become a catalyst for digital adoption. See, today, while of course digital adoption is very high in India, but there is also a sector of people, who are averse to digital, right? And or maybe using it only for certain purposes, not maybe for others. In my view, some of these will also help build that confidence and trust that digital is actually now safe, and it will be only done once I give the consent. So it could also pave the way, if done properly, for the next level of digital growth.
Oh, absolutely. When you read some data, some articles on how your digital footprint can be used and how much you are leaving behind, every time perhaps biometric and selfies are taken without your knowledge, you're in somebody else's selfie, and you don't know how much of that is also getting integrated because of AI and because of the ability to run programs on big data. It really scares you. You're worried whether you can do the next Google Pay. You're that scared. But it's important that technology is also opening the doors for inclusion. The panel has left us with a lot of hope that you're going to see quantum leap in, amount of credit being disbursed and financial inclusion, but also leaves us with a lot of warnings and caution on how data can be misused, both fraud as well as, the likelihood of being sued. Something which even fintechs should be worried about and individuals should be worried about. Every time we are asked to check the box on, have you read the terms and conditions? I mean, ever so many times, ever so many of us are guilty of putting that tick without having even opened or gone into that page of terms and conditions. Perhaps we all have to be very careful.
Just try managing the cookies, that managed
yes.
cookies.
I mean, either it is all or restricted, but we have always ticked it because we want to use the data. I agree with you, sir. We are all guilty of it. Thank you very much, Ajay, Ratan, Sandeep, Shalini, and Mr. Tiwari for an extremely enlightening chat. Thank you very much.
Thank you, Lata. Thank you, panelists. Thank you, ladies and gentlemen, for that wonderful interaction. With that, we prepare for another enriching fireside chat as we have the privilege of hosting two very distinguished leaders who have played a very important role in shaping the landscape of retail assets and financial services. Our esteemed speakers will delve into the topic of profitable scaling in retail assets, sharing insights and experiences that promise to be both enlightening and inspiring. And to moderate this session, may I please welcome CNBC TV18's Ritu Singh. Also put your hands together for Arvind Vohra Group Head, Retail Assets, HDFC Bank, and Rakesh Singh, MD and CEO, Aditya Birla Finance.
Audible? All right. Thank you, Mugdha, for that introduction. And welcome, Mr. Kapil Vohra, Mr. Rakesh Singh. Thanks very much for being here. And, you know, we're talking about profitability in building or scaling retail assets. And who better than some of the country's top lenders from the banking space and from the NBFC space to really spill the secrets on how you're doing it. So welcome again. Thanks very much for your time. Mr. Vohra, I'll start with you on the profitability aspect of it. You know, in the second quarter, banks have posted, I see you're looking worried already, but, you know, it's been a stellar second quarter for the banks when it comes to profitability, with HDFC Bank also almost 33% growth over the previous year on an industry-wide level. As you look at the year ahead, just tell us what are the various factors in the current macroeconomic and regulatory environment that are going to shape the trajectory of how banks like you grow?
Well, I think the aspect of growth in India is really about looking at the size of the prize. India is in its sweet spot right now. From an HDFC Bank point of view, we are very large, and some of us do talk about that. But on the other side, there's still 80-85% of the country that we have to explore into. And that's where we are looking at expanding our reach from a physical infrastructure point of view. We are looking at expanding our access through digital lending. And really the fundamental anchors being insight-driven innovation, a very, very disciplined risk management approach, rock-solid corporate governance, and just be focused on doing the right work for customers.
And Mr. Singh, do you share that optimism? As an NBFC, you had a 40% sort of a growth in the last financial year. What will this year look like?
So if you look at, first of all, look at the Indian economy. I think Indian economy is doing very well. It's the fastest growing large economy in the world. The GST collection, if you see, that clearly indicates the economic activity in the country. That's been doing and has been growing quite robustly. So the economic activity and the GDP growth, if you look at in the country, really provides opportunity for players like us, the banks and the NBFCs, to really do business. But we are in the lending business. We do business with, and we are also in the business of risk management. So every loan which we give today, I think we give it for 3 years, 5 years. So I think one needs to be very risk collaborative. It has to be calibrated with the risk in terms of how do we manage our risk, because to sustain in this business, we need that aspect as well. Risk management is the key to our business. So we see big opportunity in the next 3 to 5 years, and not only in this financial year, but in the next 3 to 5 years, huge opportunity for a player like us to grow business across different customer segments, whether it's the MSME. MSME is a big driver for the Indian economy. We are focused on the MSME. If you look at 50% of our loan book is to the MSMEs. And that's the segment what we think will grow even more. If the economy has to go from a 4 trillion to 5 trillion and 7 trillion, I think this piece of the economy will grow quite fast. So very, very enthused and encouraged looking at the opportunity, but we have to do the business within the guardrails and in a risk-calibrated manner that we can sustain this growth and the business over a period of time.
I mean, since you brought up the guardrails and growing in a risk-calibrated manner, do you think the retail piece is growing a bit too fast?
No, so it depends on if you're talking about the industry. There are some pockets which has grown slightly faster than the overall industry credit growth. So unsecured loans below 50,000 rupees loans, which RBI has flagged off as a segment which has grown really fast. And anything which grows really fast
and exponentially. One needs to really be watchful for that and needs to really see that we are doing business in the right manner. And recent regulations or changes which has happened by RBI, I think that really tries to focus on that in terms of managing the risk. So yes, anything which grows too fast needs to be watched carefully, and that's what RBI is doing.
Well, we'll get back to that piece, but first, Mr. Vora, if you could give us a sense of how retail lending itself is changing. Banks are not overtly only reliant on, expanding the branch network to get to that last mile customer. As you're adopting technology with the evolution of systems like the account aggregator framework, the GST data giving you a lot of insights, the UPI expanding payments to a new to credit customer segment that never transacted before, how is technology enabling your bottom line when you look at retail segment as a piece today?
See, we believe the transformation is happening at two levels. One is, as we were discussing in the previous discussions also, banks see themselves more as technology companies. The fintechs are there, and I think this differentiation is going to get more and more blurred. So this transformation happening in traditional organizations, they are becoming technology-centric. Two, I think the whole digital public infrastructure, whether we call it account aggregator framework, e-sign, UPI, credit on UPI, all of this enablement starting from JAM in 2014, which has driven bank account as basic as that, penetration from 40% to 78, 79%. And some of these things have become the cornerstone for these two transformation to intersect and really be able to expand to different parts of the country. What retail, in the retail segment, digital lending does is, one is very, very clearly access. The access becomes ubiquitous, right? India is a large country. There are going to be limits to the physical infrastructure reach. So every segment of the customer can be reached through digitally. And if in the far beyond areas of Jharkhand that we were talking about, Instagram can be one of the popular apps, that why can't digital lending be as popular as that? However, that has to happen with the right risk management, underwriting on the fly, right algorithms, right kind of surrogates for different segments, urban, rural, semi-urban, different customer segments, profiles, and so on and so forth. And while all of these, the new DPI elements, be it account aggregator, all of these are huge, huge enablers. But some of the things like SLAs, how the account aggregator framework works, and so on and so forth, those will need to be also resolved as we sort of try to get the full impact out of that. So interesting sweet spot, a lot more to be done, but I think next 2 to 3 years, as long as we pursue these two transformations parallelly, both happening in the ecosystem as well as in our own respective place, I think that's where the magic is going to lie.
Well, a sweet spot it is, but just for our audience to get a sense of how digital is changing the nature of the game, any statistics you could share with us that, for instance, could tell us how many of the new retail loans that you're originating are done digitally now versus physically, and how that looked, say, 5 years ago?
See, again, this is a layered question. I mean, at some level, we can answer that question, and it's there in a lot of investor reports. For some categories, it could be as high as 90-95%.
What categories would those be?
For example, personal loans, for example, it's almost 99%, which is digitally originated, right? But we have to unpeel the onion and look at various layers of it. How many are digitally originated? How many are assisted digital? Which segments of customers need assisted digital? And then how many of them are unassisted digital, right? A large part of the segments would work fine, absolutely, with unassisted digital. And even assisted digital we see as a precursor for people becoming more confident with the journeys and UI, UX, and getting as comfortable as they are probably on Facebook, Instagram, to be able to do it on their own. So this is an evolution, but I think the journey is really towards unassisted digital more and more. And not just in personal loan categories, but I think in all the different categories, look at digital adoption in a very, very significant way.
But just to simplify it, I know you said it's a layered question, and there are various categories within retail that may be more digitally adept than some of the others. But if you're generating 10 loans, let's say today, how many of those would be done digitally only?
So as I said, in personal loan, almost 100% are originated digitally.
Okay.
In business loan, the number could be different. We could share those numbers. But the good and important thing is all these numbers are rising, right? I mean, the unassisted digital number is rising, and the assisted digital numbers are also rising, which means that customer segments are becoming more and more comfortable with it, point one. And the second part is we have to look at the drivers of what will keep this scale going up, you know, how we are designing the UX part, right? If you have to look at rural India, do we have vernacular, right? And what can really unleash rural from a digital retail lending point of view. The underwriting approach for semi-urban and rural. Maybe there is different surrogates, different way of underwriting for the new to credit in semi-urban and rural will need to probably evolve. Some aspects around credit on UPI, etc. also may help in that journey. So I think a lot of innovation around, one is digital, two is data analytics, and three is building the entire technology backbone to really support these two. And unless all of these three happen together, you know, the results, the right results will still be, you know, away. So that's what we are working on.
Well, you know, Mr. Rakesh Singh, as an NBFC, typically your business model is to go into the areas that banks would not. You know, you'd be going to perhaps what he may consider riskier segments. I just want to understand, with the use of technology, with the use of more data that is available today, how has it broadened the pool even more for you, you know, within the risk guardrails that you put for yourself?
So it's not that black and white that wherever banks do, we don't do it. I think we haven't
very
drawn.
gray.
Yeah, we haven't drawn a line in terms of. I think we do business what really fits into our risk appetite. We have a certain cost of borrowing, and on that basis, we really define what is our risk appetite. And clearly, yes, there will be customers who will go to bank preferably because from a liability side, they will be banking with them and all. But our reach in terms of the way we reach to different customer segments and customize the product offering. So I think that's point number one. But to really talk about digital and all, I think retail and consumer credit is getting transformed in India. Yeah. So if you look at today, you have a KYC. Earlier when we used to do KYC, you have to go collect documents and you have a proof and everything. Today, Aadhaar, OTP, video KYC, you can do the entire KYC completely. Then you have the bank statements. You can analyze the bank statements completely online. You have an account aggregator, as you mentioned. So clearly the entire enablers are present today. Today, once you have built the capability of delivering to the customer a complete online digital journey, you can deliver a 15,000-20,000 rupees loans also to the consumer. Earlier, if we had to deliver a 15,000-20,000 rupees loan, the cost of delivering that would have been as much, because you are reaching out first of all to the customer, you are collecting documents, you are analyzing, you are assessing, then you are underwriting the loan. So today we are in a position that a small ticket loan can be delivered to a customer in a very simple process and at a very minimal cost.
Okay.
So what FMCG companies did with sachet products, I think today we can do for sachet loans. So clearly that piece in terms of reaching out to many more customers and consumers in the country, I think this digital journey, which is powered by your KYC, your banking analysis, your entire digital UPI, you have the digital and the payment transactional history which is available, and you can underwrite customers. So credit bureau has become so strong in the last 20 odd years in the country. So consumer credit and small ticket loans are getting transformed.
So you're telling us you're using technology to get to customers you would not have been able to get to before. You're telling us how even small ticket loans, considered not the most profitable pool, the cost is coming down thanks to technology and so on and so forth. But what are the challenges that come along with you know, extending digital credit? I mean, we hear enough and more about it from the regulator. You know, whether it is slowing down the unsecured piece, whether it is the digital lending guidelines, whether it is the risk sharing with the FLDG and so on. But what would you highlight as the key challenges that you see when you're looking to expand this digital lending pool?
So I mentioned earlier also, we are in the business of lending.
Yeah.
We give money today, we collect after 3 years, 4 years. So we are in a business of a risk management. Whether we do a large ticket transaction or a small ticket transaction, the entire due diligence of the customer has to be done thoroughly. You cannot, it's not that you distribute loan, because as we say inside our company that we celebrate when we collect the loan, when we don't celebrate when we give the loan. So clearly it's about the collection as well. It's just not, the job does not end when we give the loan. So building robust and strong underwriting models, understanding the customer behaviors, understanding the customer's cash flows, understanding the customers, I think these are important things which through data, through these digital infrastructure which I spoke about, has made it quite possible to reach out and underwrite. In terms of challenges and all, there can be some frauds, yeah, which is because you are not face-to-face. I'm not coming and doing a personal interview and saying you are good for a loan. So there can be frauds. How do we mitigate that risk? There are certain in terms of leverage. Again, when you, so credit bureau information will come with a lag. Once a lender has given a loan, you don't know how many more loans the borrower has taken. So what is the kind of leverage which has built up at a customer level, at a consumer level, and their ability to service that debt? I think these are the risks and the challenges which we will have to really work on in terms of we need to watch out leverage. That leverage should not at a consumer level, at a customer level, doesn't go that they find it difficult to serve the loan. Mitigating the frauds, online frauds. I think these are the issues and challenges which we need to really mitigate.
Okay, Mr. Vora, would you like to add on to that? So of course, with digital, we've seen rising instances of frauds and steps have to be taken to correct that. But, you know, at the end of the day, the weakest link is what sets off the whole chain. One there, and secondly, also on the aspect again, the second challenge that he outlined with frauds. What to your mind have been some of the biggest challenges? And, you know, if you could give us your sense as a bank, what you faced.
See, at an industry level, the biggest imperative in this business is to have a disciplined risk management approach. Very, very disciplined underwriting. While some of the elements, FMCG like sachets, etc. can be done, but this is very unlike FMCG kind of a business. You know, unless underwriting is rock solid, ending up with you know, poor quality of book is going to just take the cycle back. So from that point of view, for example, our unsecured book, which the published numbers on our NCLs, the credit losses, etc., is significantly superior to the credit losses of the secured book of the industry. You know, so I think we believe in a disciplined risk management approach to go along with the, you know, digital lending, enabling the opening of the size of the opportunity, and also this risk management approach has to be an integral part of this digital lending itself, because without that it will be incomplete, and then it will make us prone to a lot of other risks coming and you know, facing the industry.
Or the over-leveraged risk as well.
See, that doesn't even work for customer. I mean, if a customer, for example, if there is a fintech player or there is a player X, ABC, not looking at the fixed obligations, and that person is taking 20,000 rupees from 3 players and just over-leveraging, that's not going to even work for that consumer, because a negative credit record is going to put him out for a home loan or an auto loan years down the line when his life is moving on. So it's very important to integrate disciplined risk management into the whole digital lending piece.
Well, you know, you've spoken about some of the challenges when it comes to digital lending, but you know, what is the size of the opportunity I want to understand? And, you know, we often say India lives in its villages, and that's a fair statement given 2/3 of a population is there. And you brought up sachetization as, you know, which is often touted as one of these big solutions, you know, to cater to that last mile customer. Perhaps if the size of the loan is smaller, if it's profitable for you to do so, that would solve that piece of the rural puzzle. To your mind, when you look at retail lending in the rural regions, in the unbanked regions, you know, what are emerging as some of the big solutions thanks to the advent of technology?
So the two big challenges that the digital lending can help us solve for rural. The first is the, you know, access. Geographically remote areas, villages, and even semi-urban towns, right? Very difficult to put the physical infrastructure in each and every town of the country. So that's where the digital lending piece comes in. The second equally important part is that, you know, when we look at the formal credit in semi-urban rural, especially the lower echelons of the semi-urban and the entire rural segment, still there's a large part of the, borrowers, the adult borrowers that are there, a significant proportion are still out of the formal credit system, right? And I think that is waiting to be explored in terms of, what is the right way to sort of get into those segments, bring them into formal economy. And it should be possible now. I mean, the way the whole Jan Dhan Aadhaar mobile penetration has done it, 650 million smartphones in the country, almost 100% mobile penetration, 80% banking account penetration. So it's feasible to do. But I think we'll have to innovate in our credit approaches, credit algorithm, differentiated leverage of surrogates for semi-urban and rural, solve the challenge of access through digital lending, use vernacular, lose other medium, the short video formats, other formats that the people are a little bit more comfortable with. And so I think those are the variables that will have to be, played around to be able to penetrate that segment. But the opportunity is, of course, very, very large.
Okay. I just quickly want to move back to the unsecured piece. Because, you brought that up earlier about how the Reserve Bank of India may be a little worried about how one particular segment is growing much faster than the industry. Now, when you look at this retail piece, I want to understand, while it's reversion to mean, so to speak, in terms of the increase in risk weights now, in the short term, do you see some disruption in the growth of the retail piece? Because banks, on one hand, have to set aside higher capital, NBFCs have to set aside higher capital, and your cost of borrowing from him will also go up.
No, so if you see, we do business across different customer segments. So we do business in the consumer segment, retail, which is MSME, mid-corporate, large corporate. So we have a very diversified business. Retail and a consumer segment and an unsecured segment is a small part of our overall business. But in terms of risk weight going up, will it impact in terms of the cost of borrowing, first of all, and the risk weight on the capital side? The answer is yes, though very minimal. And if there is an increase in cost of fund, we will have to pass it on to the customers. I think because if the cost of doing business goes up, it will get passed on to the customer. So clearly, we are looking at in terms of, and to your question, what will be the impact of this? I'm sure there will be some moderation in terms of the growth in this segment, because I think the way the regulators have seen that the growth in this segment has really gone up significantly post-COVID. And there must be some reason of cause of concern there. So you will see some moderation in the growth in this segment. The way I see it in the coming quarters, you will see some moderation.
Since our time is up, final comments from you. Do you think that is going to slow down the retail piece in the very near term? And if not, what will be the biggest drivers of retail growth in the near future for banks like you?
No, not for us. I think we have said it before. We have enough capital, and we'll continue to make sure that we continue to accelerate, along with making sure a very, very disciplined risk management. But that to us is more integral to our making sure that the vision that our MD has given of doubling over next every 4.5 years, that we build it in a very, very sustainable manner, and that can only happen when risk management is integral part of the whole business. And I think as part of the digital lending, we are excited about all of these three areas. One is digital lending, which is about creating digital properties, journeys, the right UI UX, frictionless. Two, embed data analytics, the predictive data analytics, and that is both from point of view of underwriting and also from point of view of propensity, right? We do a lot of analytics around. We talk about a lot of analytics around underwriting. But I think propensity is as equally critical, so that we are able to understand, and personalize proposition for different customer segments. And three is the whole technology transformation in terms of APIfication, in terms of technology backbone, cloud native strategy, and so on and so forth. And I think these three pieces have to really go hand in hand. And that's what we are really working on. We are very excited with that. And that's really the backbone of what we are saying in terms of the growth outlook over next 4 years. So I may not be able to make you happy on why you started by saying that I look worried, but I may not be able to tell you my growth outlook for next quarter, which is what you may be trying to get out. But over next 4 years, our ambition is to be able to really, double our book over every 4 years.
Yes, a new HDFC bank every 5 years.
Yeah.
Yes, Mr. Singh.
Yeah, so I just wanted to add that, yes, moderation will be there in this segment, the unsecured segment.
Only in the unsecured piece.
But the other segments, your SME, your secured businesses, I think that will continue to grow. And given the way the economy is doing and is growing so well, the GST collections are so robust, we see a big opportunity and growth opportunity in the coming years.
So up and up from here on that very optimistic note, Mr. Singh, Mr. Vora, thank you very much for sharing your thoughts with our audience. It was a pleasure speaking with you. Thank you.
Thank you.
Thank you so much.
Thank you. Pleasure.
Thank you.
Thank you, Ritu. Thank you so much. Thank you, Arvind and Rakesh. That was a wonderful chat. Ladies and gentlemen, as we now progress through the summit, a very exciting moment awaits all of us. Brace yourselves for a very special moment, the much anticipated reimagining lending using AI, a glimpse into the future of innovation that promises to redefine the landscape of digital lending. The Lentra Gen AI launch stands as a testament to the commitment of industry leaders towards pioneering advancements. Today, we are on the cusp of witnessing innovation, advancements at their best, a showcase that will not only captivate our imaginations, but also underscore the potential for revolutionary changes in the digital lending landscape. Witness the future unfold as we showcase innovation at its best. I would like to invite on stage Ankur Handa, Chief Product Officer, and Rangarajan Vasudevan, Chief Data Officer, both from Lentra. Put your hands together for them, ladies and gentlemen.
Good afternoon, everyone. Ladies and gentlemen, esteemed partners, friends from the financial world. Thank you once again for being part of Lentra Digital Lending Summit. Ranga, the stage is set. The anticipation is electric. Shall we unveil the future?
Absolutely, Ankur. Looking forward to making all these fantastic products available in the market. Today marks a significant milestone for us as Lentra, and I can't wait to share what we have been actually cooking up over the last couple of months.
Picture this, everyone. Lentra, your trusted partner in digital lending, is about to take a leap in the new era. Well, brace yourself, because today we are introducing India's first and one of its kind Lentra Intelligent Lending Cloud.
Yes, indeed. The Lentra Intelligent Lending Cloud, it's not just another version of the Lentra platform. It's in fact a symphony of innovation and intelligence coming together. We have harnessed the power of generative AI, which has been making the news all over, but to make this entire process of lending an experience and not just yet another transaction.
Yes. Let me share a story. Imagine you are a lender. I mean, half the room actually is a lender. Rest of you and me, maybe, let's imagine you are a lender navigating through diverse regions, meeting borrowers from different cultures, different backgrounds, each one of them talking different languages. Lentra Convo, conversation, Convo. Lentra Convo, our first gem, is like having a multilingual lending assistant by your side.
Exactly. Lentra Convo brings the magic of natural language to every aspect of the lending journey. This makes the entire experience a lot more personal, because we literally now have a guide that speaks the local language. That's Lentra Convo.
Marathi, Gujarati, Bengali, we've got all covered. Multilingual, Lentra, Convo. Now let's shift gears. Let's talk about Lentra Insights. We all know how crucial it is for lenders to make informed decisions. Think of Insights as your financial oracle. It only helps you assess the impact of credit policies, but also provides targeted intelligence to fine-tune those policies for optimum take-up rates.
And trust me when I say this, this isn't just yet another tool. It's actually a weapon that helps you continuously optimize for your asset business, keeps it growing. So it's like the compass which guides you through this labyrinth of credit policies that exist, helping you work with parameters and the optimum choices of the credit policy so that you get the best out of your business.
Better insights, better book. That's Lentra Insights. Now for the grand finale, we all know the unsung hero in lending journey, the underwriters. Picture this, Lentra Wingman is having a superhero sidekick for every underwriter out there.
Yes, the Wingman is here to streamline the underwriting process. It intelligently summarizes the financial information, comes up with a concise summary, and picks out the alerts that the underwriter needs to really focus their attention on. It's like having Sherlock Holmes whispering in your ears as the underwriter certain key alerts that you need to be really watching out for. Right? That's Lentra Wingman.
I know Shalini spoke about enabling MSMEs in a digital way. Here was Lentra Wingman literally enabling the underwriter to play KBC with an applicant on what are the 5 or 6 very relevant things that they have studied on that application to ask and make it very, very relevant. So there you have it, folks.
Lentra Intelligent Lending Cloud, Lentra Convo, Lentra Insights, Lentra Wingman, a quadrant of innovation, intelligence, and incredible lending experiences.
But wait, Ankur, before we wrap up, I would actually like to share the ethos behind why we created the Intelligent Lending Cloud. It's not just that we're launching products and we're using this as a showcase, but it's a commitment to staying ahead of the curve. It's a commitment to use the latest and greatest, but still make it accessible and not be relegated like Sandeep's homework machine that he mentioned before. We want to stay abreast with everything that's evolving in the technology landscape, but make it really accessible for every one of our clients.
Absolutely, Ranga. Our journey is intertwined with the pulse of India, from the vibrant streets to the regional markets. Everything presents a unique challenge. Lentra Intelligent Lending Cloud isn't just technology, it's a reflection of our commitment to financial inclusion, to localization, and for making AI accessible.
So here's to the future of lending. Thank you for being a part of this launch today. We're looking forward to making these products available to every one of you and transform your lending experiences.
Thank you, everyone. Let's embark on this exciting journey. Thank you.
Thank you.
Thank you, gentlemen. Thank you for that very spirited presentation. I'm sure our audience is also excited about this new product. Well, also to share more insights on GenAI and how it is reshaping the lending landscape, I would now like to invite Mr. Anupam Mishra, Director AWS, to please come up on the stage. Anupam?
Hello everyone, namaste. What an exciting set of new product offering which we learned about recently from Ranga and Ankur. Looking forward to see how everyone makes great use of those. My name is Anupam. I lead the technology team for AWS India. And today I'm going to take you on a quick journey to show what we are seeing across AI and generative AI, especially across how companies are solving different types of problems using the new set of technologies which we are hearing about. So as we all saw in the morning, this is we're calling, are we still in the hype phase? Are we still deciding whether this is a technology which is here to stay? Is it a fad? What I can say for sure is we are just scratching the surface right now. I think most people get to know about generative AI through chatbots, which are becoming more and more popular. But chatbot is just a small part of it. There are so many possibilities, and so much is yet to come, especially in terms of this technology getting democratized, it becoming accessible to everybody. So I'm looking forward to what possibilities it will have few years from now. But I'll tell you what experiments are being done using this tech right now on AWS. So if you look at how Amazon has been innovating, we have been using machine learning across various businesses, be it retail website where we recommend products which uses machine learning. On the fulfillment side, we have robots which are doing fulfillment or in our stock, in our warehouses. They use path finding. How do they go from place A to place B? We have an offering which we are working on called Prime Air, where we're delivering items to customers using drones. That uses machine learning. Amazon Echo, I'm sure hopefully some of you use it, which can talk to you in natural language. And many more possibilities, including things like just walk out, where you don't have to go to a checkout clerk. You just pick whatever item you want. You just walk out the store, and we automatically bill the customer based on what they have picked from the store. It's becoming very popular, just walk out, where we are seeing it on airports and many other places. Now coming to why moving quick is necessary. This is an example from Axis Bank, which is using AWS for their digital transformation. And this was shared a few months back at our Mumbai summit, where they talked about how they're able to quickly evolve and quickly adopt technology to do what their customers need. For example, in this one, if you look at how many customers are originating for savings account online versus in branch, a very large number is starting to come from
online already. If you look at savings account, for example, 23.39% on a given month, whereas on current account, almost 48%. But I think one thing is very unique here, which is as the age of the person goes down, like 18 to 24 or 25 to 35. So below 35, majority of folks or new customers are coming online. So I think these are things which are becoming more and more standardized now. All of us are getting aware. But we believe if customers can move quickly and adopt what is really needed, it can make a very big difference to their business. So in the same spirit, let me talk to you about what is happening in GenAI space. What are the type of things currently getting solved? So generally, it falls into 3 pillars, which depending on who the problem is getting solved for. So you could be solving the problem for a customer of yours, or you could be solving this problem for an employee of yours, or you could be solving this problem where a system already works, but you are making it more efficient. Those are the 3 pillars under which you can classify almost every generative AI solution today. Now, when you apply a lens of industry, you're going to see a lot of use cases which are already providing a lot of values. We can pick different industries here, but we start with healthcare, for example. I'm seeing very good implementation where these machines are able to understand a discussion between a doctor and a patient and can transcribe it, can recommend what type of actions have happened to the customer, can send a follow-up to the customer, can decide what type of medicine should be prescribed. So that is on the health scribe or scribing discussion between a healthcare provider and a customer or a patient. But if you look at, let's say, a retail side, a lot of work is happening on how you can have more effective discussion with the customer, where a customer is asking for, let's say, you are trying to, as a seller, you are trying to advertise to a customer, and how can you generate much more relevant images using generative AI to help customers pick the right product. And even in fashion industry, for example, we are seeing customers are designing new products using generative AI. It can tell you what possibilities exist. For example, you can say, I'm trying to create a new type of, let's say, a shoe, and it can generate possibilities of what those shoes are, what colors are across the industry. Now, quickly talking about what it means for financial industry. In financial industry, again, there are 3 types of use cases we are seeing. One is improving the customer experience, thinking about more efficient systems, and creating new products. Let me give you examples in each one. So when it comes to improving customer experience, we just saw some examples from Ankur and Ranga, where they are talking about how your customers can get more real-time responses. And we are seeing a lot of companies are working in that area where they're thinking about when an email is received, let's say you're working on a loan processing, and some customer says, Mera loan approve ho gaya kya? And in India, I see a lot of people use English. Some of these are written in English, Hindi but written in English, or mixture of words used. Generative AI is able to solve a lot of those problems where it understands the context and also classify those emails into different types so that customer can get much more real-time response of what should be done. So you can free up a lot of your bandwidth of responding, but you can have much more effective calls where you are triaging a lot of this using machine learning to a very high quality. So that is one which we are seeing a lot, understanding the language, responding in the native language of the user, be it Hindi, be it Gujarati, be it something else, and then also understanding what is happening in this case using the content provided. The second one is efficiency of workers. Efficiency is where we are thinking about, you have a lot of documents, and how do you understand the documents? What actions can be taken using those documents? And finally, the third one is creating new products. This is where a lot of innovation is happening. Again, new types of companies are coming. Especially, I'm pretty sure some of you are working on those problems as well. I'll just quickly share one startup which is in US called Thea Insight. What they do is they are starting to look at portfolios, investment portfolios, which companies have or individuals have, and trying to correlate the risk which you have because of the exposure which those portfolios will have, which are hard for humans to understand unless you spend a lot of time. For example, let's say you're investing in a solar company. It's very likely you're dependent on e-vehicles, you're dependent on charging infrastructure, you're dependent on a lot of other things. Similarly, let's say you're investing in a gaming company. You probably are dependent on GPUs because gaming companies use a lot of that. You're dependent on streaming platforms, so it can understand context around things and offer new offerings. So this is the area where a lot of companies are thinking in a very different way. That I was working with a customer, they said, we had 7 people who used to read the annual report of every company and give us insights. Now, a lot of this can be automated and make this team much more enabled to act on it. So I feel we are just scratching the surface here. We are going to see very new type of experiences where machines can understand many, many more documents and correlate those things much better in an unstructured way. Now, coming to how AWS is making it simpler, our approach is to democratize machine learning for everyone. We look at 3 pillars here. One is, how do we give if you look at the bottommost, which is, how do we give infrastructure which is very, very scalable and cost effective? Middle layer is, if people know how to use generative AI, how do we give them right tools? And the third one is, how do we create applications where you don't even need to know about machine learning, but it does give value to you, be it assistants, be it systems which can help. So quickly sharing few innovations in this. We have started, we created 2 new hardware. One is called Trainium and Inferentia. Inferentia is used for inference, which is a part of the problem where you understand what is happening given a data from customer. And training is where you build the model. So for each one of them, we have custom chips, which was created a few years back. And now it has led to efficiencies which we didn't imagine earlier. So with Inferentia, for example, you're getting 4 times more throughput than the traditional Inf1. We had 2 versions of it, Inf2 and Inf1, and 10x lower latencies. So the lower the cost, the more applications can be moved and brought to the market. Because one of the other things which I have learned is, while you can create very exciting products, the unit economics have to work. If a customer is paying you 10 rupees, you cannot build a product which charges or which costs you 20 rupees to serve the customer. So a lot of innovation happening in bringing the cost down. The second one is Bedrock, where we allow customers to use whatever models they want and customize them. The biggest issue, especially when we talk to financial companies, is how do we keep it secure? Companies, and we saw this discussion throughout the day, security is a pillar for whenever finance comes into the picture. How do we not give any data which you have, be it your data, proprietary data, or your customer data, to any third-party provider? So what we do is we keep all the data in your own machines. We call them a VPC, Virtual Private Cloud. We are not sharing it to any model. So you have complete control, and you can use that to bring the experience which you want without worrying about data getting shared with any provider. And finally, products like Code Whisperer, where developers' efficiency can be increased. Developer is a big piece of bringing these applications quick to the market. With Code Whisperer, we have seen it can generate code automatically, where you write a comment, you say, please write a code to download this file, transform this file, upload this file. It can generate all of it. It can generate test cases. It can find security flaws. So a lot of developers are using it. We are seeing 30 to 50% efficiency for developers. So this is another place we are building more and more tools to make developers more efficient, where they're not copy-pasting from one place to another, rather than that using generative AI to bring real value. And this is how it looks overall. A lot of work happening in the bottom layer, which is building new hardware. In the middle layer, we are building tools like Bedrock and agents. And in the shortage of time, I cannot go into details of everything, but allowing you to really add value. And finally, applications, where we recently launched an application called Q, Amazon Q, where you can interact with all the data which you already have in your systems. For example, you may have a wiki data, you may have some lessons which you have learned, maybe your troubleshooting data, and that can be used in a natural language. Any of your employee can ask, should we approve a loan if a customer has this and that thing? And if that data is existing across multiple documents, all of this can be used together. Finally, how can you start? If some of you are thinking of starting on generative AI, I'll just share a few tips with you. One, select the right problem. It's very important to pick the right problem. I've seen a lot of cases where companies jump on this, but then they realize cost doesn't work, the use case is not important enough. So it's very important to know, assume that success will be there. Let's say this is successful. What ROI will your business get? Do you expect some new users will start coming? Do you expect more conversion will happen? Do you expect your unit economics will become? So have a very good clarity on what you are chasing. Second is, this is quickly evolving field. What we are talking today may become outdated very quickly. And of course, it happens with every tech. But this one is very, very fast moving. So it's very important to empower your teams to learn and be aware of what is state of the art. For example, some companies I've seen are creating generative AI-based videos. Right now, that is not a technology which is available, but in future, it's going to be available as well. And finally, how do you make sure you can take some baby steps towards making it a possibility? So start with a POC where you have a very clear outcome, clear hypothesis, and the team is empowered to learn and bring it to market. And we as AWS are happy to help. We have something called AWS Generative AI Innovation Center, where we have invested about $100 million to build a team which is dedicated to help customers do really what is important for them. With that, thank you so much, and looking forward to see what innovation we see in India using generative AI. Thank you.
Thank you, Anumam. Thank you so much. All right, ladies and gentlemen, as we navigate through these insightful sessions, we are now poised for a compelling exploration into the intricacies of beyond banking, NBFCs, and tech-enabled credit inclusion. Now, what this panel will discuss? This panel will discuss synergies that underpin borrowing expansion across various sectors. Let us reflect on the broader context of borrowing expansion in a global landscape where economic sectors are increasingly interconnected. Understanding the synergies become paramount. The strategies employed in one sector have a ripple effect on others, creating a complex tapestry that defines the borrowing landscape. To moderate this session, I would once again like to invite on stage Ritu Singh. And I would also like to invite her panel of industry experts, each of them bringing a wealth of experience and diverse perspectives. Join us in extending a very warm welcome to Karthik Srinivasan, Chief Business Officer, HDB Financial Services, Ramesh Iyer, Vice Chairman and MD, Mahindra Finance, Alok Agrawal, CEO, Muthoot Homefin India Limited, and Shachindra Nath, Vice Chairman and MD, Upro Capital. Over to you, Ritu.
Thank you, Mugdha. So, our panel is about beyond banking, because I think in the first half of the day, we've heard a lot from bankers. But, we want to know how you're taking the financial inclusion agenda forward. And that's what we're going to focus on here. Let me just start by setting the context. And Mr. Agarwal, for instance, if you could start. We look at the data, it says 78% of Indians have bank accounts today. Somebody in the morning was telling us 22% of them have taken loans, so they're using the account. Now, RBI also publishes this financial inclusion index, where it says our score is about 60 on a scale of 0 to 100. What does all of this mean? Where are we really on the financial inclusion space, especially in the last few years where, Jan Dhan has given a big push. But what beyond that?
Yeah, thanks, Ritu. See, just to set the context and come back to your question, traditionally, NBFCs have been predominantly the entities which have been focusing on financial inclusions. It's been an age-old story that the customers who were unlendable to the bank historically have been funded by NBFCs. And the trend, as on today, stays. But yes, there are many changes which have happened over the last decade. Socio-economic factors like Jan Dhan accounts, access to bank accounts, overall growth in the economy and penetration of the availability of credit to the rural sector have increased the penetration of credit offering to the rural sector and also the access of formal credit. Traditionally, there were money lenders who were lending in these markets, but now, as we experience month on month, we have close to 25 to 30% of the borrowers who are first-time borrowers, who are new to the bureau itself. They don't have any borrowing history. And I represent a housing finance industry. So they are buying a home. It's not that they're buying a television set or a two-wheeler. So they have evolved in their journey and reached the stage of buying a home. And also what we learn is the demographics of the borrower profile is changing at a rapid pace. The average age of a consumer today has declined much more. I mean, reflecting straightly the average age of the country which we live in, the number of Gen Z and the millennials which have, started getting employed, started working, and even in the smaller cities, they have an aspiration to own a home. So that way, the advent of borrowing in the rural sector at the bottom of the pyramid, even in the Tier 4, Tier 5 cities, has seen a tremendous increase. And a big boost to that is access to bank accounts, because ultimately, even if we lend, we need to look at the repayment and how the money would come back to us. So there is a need for a customer to have a bank account, even though they may not be borrowing from the bank. So that way it has helped tremendously, and it's in a big growth.
Well, it's great that you're saying almost 30% of the new customers every month are actually new to credit customers. At that rate, Mr. Iyer, I mean, we would have been somewhere else on financial inclusion, right? But why is it with the 12 large public sector banks, the 14 or so private banks, the thousands of NBFCs, the formal financial system that we have in place today, financial inclusion, especially to the last mile, remains a challenge?
So I think we all should understand it's not only about lending, right? So if you had to only give money, I think by now everybody in the country would have got the money. It's also the ability to get back the money. So therefore, there will always be caution on how to lend and still be able to recover. And which is why you'll find this goes a little slow. But if you kind of overall look at it, earlier who got the money? Someone who could come to the branch or someone whom we could reach were the only ones who were getting the money, right? Now with the coming in of digital means and supported by an ability to underwrite through data, that number is increasing, and that's where you see the financial inclusion now taking, at a much faster pace. Because this is not a new word, right? This was talked about 10 years back, and we were talking about financial inclusion, and all of us said, if we gave it to someone who otherwise could not get credit formally, we called it financial inclusion. Slowly, if you see the pace, it substantially increased the number that was just quoted, and it will be even growing faster. So I think the ability to reach now through digital means is increasing rapidly. And you will find the same, that they're also repaying digitally, and therefore the confidence to lend also will increase. So I think we shouldn't look at it as a static position. One should always look at it as how is it continuously increasing or improving. And maybe if you do the same panel 1 year down the line, the percentage growth would be much faster than we're talking from where it has started.
Well, we're certainly making progress and not regressing. But Mr. Srinivasan, let me ask you then. We always talk of technology as this big game changer, and it has been. But, with this digital lending, and I was asking the previous panel as well, there are challenges that come along with it. In your sense, when you're looking at reaching to this new to credit customer using technology, what are the big areas of opportunity it has opened up, and what are the challenges that still remain for you, to not be able to get to that last mile customer?
Yeah, so let me answer that question in two parts. One is, I think, the proliferation of public digital infrastructure, right, in terms of whether it is e-KYC, whether it is collecting mandates digitally through e-NACH, e-agreement. Some of these have enabled basically two things. One is obviously reach a wider audience. Obviously, we have expanded the base. So what we are able to do physically, let's say in 2 days, we are able to do it in minutes. That's number one. And obviously, I think India is continuing. India is going to be young for another, I think, 15, 16 years, right? So we are going to have a new set of borrowers who will come into this pyramid every year, right? Now we have fairly evolved, I think, rule engines, ways of, deciding the customer without any track record, etc., which is what is helping the access for these new to credit much faster. I think this is continuing to go. I think this is a journey which will probably go on for another 10, 15 years. So just one point, I think you mentioned, we are also bankers, by the way. So I think you mentioned that you had bankers, and then we are introducing a different set of people. We are bankers too, to a different set of probably some overlapping clients and probably the same India.
No, certainly. And, everyone acknowledges the role that NBFCs are playing in financial inclusion, going to the segment of customers that, what I call bankers would probably not go to. But Mr. Nath, this digital phenomena, again, that everybody's speaking about, To what extent has it penetrated into the rural, semi-urban area? Because, that new Gen Z customer that he's speaking about, they're very much concentrated in the urban areas. And, Mr. Ramesh Iyer, before the panel started, was telling me now the problem is not that, I'm not getting a loan if I'm in an urban customer to figure out how to use it, but it's, I've already got this loan, now what do I do with the money? So, there's a saturated market in the urban areas, not so much in the rural.
Yeah, so Ritu, as you know that we are a very dedicated small business lender.
MSMEs, yeah.
And the reason why, we thought that what some of my seniors have achieved in the industry, because we think that India belongs to Bharat, and if Bharat has to remain stable, people need to get employment, and that can only come from SMEs. If you look at, and our definition of inclusion is different. I think so inclusion, and we struggle this with most of the DFIs of the world, new to credit is what is only considered to be inclusion, which we think is the wrong definition.
Okay.
If you look at MSME credit in India and its gap, it's 85 trillion rupees, of which 20% is the formal and 80% is informal credit. Of that, 95% this gap belong to the SMEs, which are in the turnover range of 15 lakh to 15 crore. The new to credit small business portion is extremely small. So that's why we focus only on that segment. It doesn't mean that he has to be new to credit. He has some credit, but when you extend more credit, then the level of employment which gets generated is far more significant. So all of our work related to impact is to provide credit to underserved market, not the unserved market. That's point one. Number two, that there is a massive transformation which is happening through two things, data plus technology. Why we differentiate? Because like it has happened in consumer financing business in 2008 onwards and personal loan business, we think next 2 decades, data would drive the credit decisioning. So 3 things of the lending, the intent of the customer, the eligibility and ability to repay. The data ecosystem is allowing lenders like us and many others to assess the ability to repay, and technology is facilitating that. Having said that, the under-penetration and the segment of the market and what role can play is still, I think, so we are very far away. When I look at the opportunity and amount of work can be done, I keep saying that, this Om Shanti Om's dialogue, कि किसी चीज को अगर दिल से चाहने की आप कोशिश करो तो पूरी कायनात आपके साथ लग जाती है. But I think so kainat, when it comes to MSME lending, is still far away. So our kainat consists of equity provider, the debt provider, the regulators, but the whole kainat is actually still is bifurcated. So that focus, if you have to really create a revolution when it comes to inclusion with respect to small business, kainat has to support it. Right now we are just, drumming our own beat. Okay,
Mr. Iyer, is kainat supporting, your growth in this area? And I wanted to touch upon the regulatory environment as well. There are some segments of, retail lending, for instance, that are growing too fast, and we spoke about how the regulator wants to probably put a spoke in the wheel for the time being so that, credit growth is moderated. How do you see the regulatory environment, how enabling it is for inclusion, specifically, in the retail segment?
So, since we are in the movie mode, from Kainat, it actually, we sometime have to be Kayamat se Kayamat tak. So we have to move from one situation to another situation. And I think NBFCs are very, very trained and tuned for that. See, so far as the regulatory framework is concerned, I think they normally come out with a broader thinking about how they see things. And each model will have to look at it as how it impacts them or affects them, right? I think the industry players are talking less about it, and everyone else outside the industry is speaking too much about this problem. Because I don't think we have seen it as a problem of not able to raise liquidity, or as the interest rate zoomed, or having to bring so much more capital, having to give up so much more business. None of that has happened, but in the public domain, this seems to be the discussion. So I think it's important to understand that when a regulator comes out with the guidelines of this type, he's trying to put you on watch to say that while we appreciate you're growing aggressively, be mindful of this growth, because our data tells us a different direction. So I think it's for the industry players to finally go deeper and understand how does their model behave, and is there a need to do. If I speak for ourselves, We don't have an unsecured loan book. We have a completely secured book in the form of vehicles and tractors and whatever
But
else.
as an NBFC who's borrowing from banks to lend, your cost of borrowing is also going up at the end of the day.
I mean, it's okay. Why are we only worried about this industry? In any industry, the raw material price goes up, the end finished good price will go up. And same is true with NBFC. I mean, if we look at what we borrow as our raw material, we should accept the fact that if the raw material price is going up, the finished good price will go up. And I have not seen that if the finished good price goes up, the demand falls. If there is a need for the product, the demand never falls. You take vehicle, for example. Prices keep going up and the number of vehicles sold keeps going up. Because there is a need, right? I think if we try and create a product which is not required by the end consumer, the demand will fall. It's never fallen because of the price, right? Similarly, the ability to deliver as required, because this is one product which requires to be delivered as required on time. Somebody is asking for some money today, and if I'm going to take my own sweet time and give it tomorrow, it's gone. So I think the concern is not about what happens because the price is going up. I think the concern is really about, are we designing the product right, and therefore does it meet the needs of the consumer? I think if that happens, I think this will remain a debate of, is this pushing up the price? Will the demand fall? I don't see it happen that way.
Mr. Agarwal, how are you designing the products then when you look at this, rural piece of the puzzle, for instance? How are the aspirations of your typical home loan borrower changing today as opposed to what they were, say, 10 years ago?
Yeah. See, one of the key changes which we have as an industry noticed is the need and the ability to try and acquire a home much earlier in their lifetime. It has seen a lot of shift from, say, an average age of a home buyer from early 40s to late 30s. Now it's come to early 30s and even late 20s. So in their journey of life, people want to acquire home on an earlier stage. And that is true both for urban and rural customers now. We see a lot of applications from Tier 3, Tier 4 cities where the age profile is between 27 to 35. Now, how do we alter or try and offer a customized solution to a product? The customers we cater to are mostly customers who are from an informal segment. They are not your, say, formal salaried customers having a, take home of a bank credit at the end of the month. They are having small businesses, unorganized cash flows, and not a very regular flow of cash. So it is more of an customized assessment-based business on each case where we use both technology and physical touch and feel to assess the customer. And then the loan amount, the tenure, the EMI, what he's comfortable to pay with based on the risk assessment is then done. But over a period, we have developed a lot of understanding of such customers. And that's why we have internally temporalized and customized the solution offering. In a way, we are able to cater to unorganized customers much better as we understand their credit and cash flow profile. So this has helped a lot in terms of bringing them to the formal sector of, lending.
Okay, Mr. Nath, how would you apply that, say, for instance, in the case of MSMEs? In the last 7-8 years, a whole host of schemes have been announced by the regulator, by the government, to enable faster credit for MSMEs. Which ones have moved the needle, which ones haven't, and what more would you like to see the industry, the regulator, the stakeholders do for this?
It's a difficult question, but it is a fact that, let me define it this way. See, ultimately in any economy, the policy maker, which is the government, defines what need to grow. Now, the largest voting bloc in our country belongs to MSME. So latest Udyam data, only 3 crore registered Udyam people and 15 crore employment has been reported. Historical data have been 6.3 crore of MSME and 11 crore employment, which means the actual number of people employed by MSME is far bigger than what we think.
These are just the DPIIT registered MSMEs.
Yeah. So, which means that for policymakers, such a large pool of employable, population is their vote bank, and that's why they need to be supported. So that's the good thing about it. That then translates to regulator, and then that translates to the business. So everyone, right from the government, the regulator, the lending institution, everyone want to do the MSME. But the problem is little more complex. While the data has come, while the technology is enabling is, while by multi-product approach we are reaching, but this problem is so complex. Think of this way, and I keep giving this example, a Chettiar girl getting married to a Punjabi boy, and now they have a child, and they, after 5 years, and I was listening to this generative AI thing, they gave him an Alexa because both of them every day go home. And this child is telling Alexa, Alexa, please sing me a song which is in Tamil, but my father listens it in Punjabi and I listens it in English. Now Alexa is confused that how can it sing a song which actually is listened by 3 ears in 3 different languages. So that's the complexity of a small business, that we all want different things but not being able to solve the problem collectively. But it is a matter of time. I think so. If you look at the pools where the small business are getting created, the micro market through multiple marketplaces, the ONDC, the OCAN, the account aggregation, the reach of distribution, all is getting settled. It's just that with Dil Mange More, the speed and what you could do versus what it is happening, you feel very frustrated why it is not moving in that direction.
Mr. Srinivasan, or kya dil mange? I want to ask you, I mean, what are you seeing at HDB?
Sorry?
What are you seeing at HDB, for instance? I mean, or kya dil mange? He's saying, there are, we have the account aggregator, we have the ONDC, we have the open network, OCAN, for instance. Or kya chahiye?
Dil mange more or customer mange even more. So,
how are financial aspirations? Where are you seeing, how the credit needs are evolving for your customer base?
So if we look at HDB, I think we serve the lifestyle needs of a customer, right? So typically you start either with an exigency loan or a small time consumption loan, which is typically a new to credit customer in India will start with either a consumer durable loan or a two-wheeler loan. And that's how he starts building his credit history. Now that has, as I said, proliferated. There are more people coming into the base. And as they progress and they move up in lifestyle, right, in terms of owning an asset or income generating asset or home finance. And I was surprised at the number of NTC which he's talking about in home finance. I mean, it is obviously staggering, right? So I think that is what I think most of the NBFCs now are moving towards. I mean, I think the large ones are multi-product companies. So obviously they will serve the customer at various points of time. So typically things like cross-sell, how do you engage the customer throughout his life cycle? I mean, those are the more important aspects which are coming in. Earlier it was still run as a very, very monoline. I give this product, then I come back, some other team goes and tries and do something else. So that evolution and that journey getting stitched together is like playing a big role now going forward.
Well, given that we've been speaking about the role that you all have been playing in financial inclusion, I want to ask you, how important is collaboration with the technology players on one hand and with the legacy banks as we know them on the other hand today? Or do you not think, because all institutions like you, for instance, are evolving into more tech first than, legacy first, your traditional finance first, will the need for collaboration reduce? Do you think you'll be able to capture a larger market by yourself?
Fundamentally, when all of us started, we were trying to do everything ourselves, right? We were setting up branches, doing credit, meeting customers, collecting, resourcing business. Everything was being done by us. It only takes you up to a point, right? If you have a growth aspiration, both penetrated deeper, working with all segments of customer, wanting to be in all products, it's not possible for any one entity to be all of that. That's what gave birth to collaborating with people. And that's the time it moved away from competing to collaborating. Right? Earlier we saw everyone competing. I mean, if you recall a few years back, there were discussions about the banks feel that you're competing with them and therefore they may not want to give you enough money. And today we have completely turned it around and say that the banks want to work with you and want to co-lend. You see where the competition has moved from whichever way, from wherever it has come to wherever it is. I think what's extremely important to understand is each of us as a player have to understand what is our core, whether core as a product, core as a geography, core as a segment of customer, whatever we may decide, or a combination of this. Anything outside of this core, but you are still able to resource enough of consumer, do you want to let them go or you want to collaborate with somebody and operate? So if we look at us as an example, if we were to get, let's say, a very Primex customer in rural market who's demanding a very fine rate, we may think that's not the customer we want to service, but we may take them to a bank as a co-lending possibility, right? So I personally think if we are talking of overall expansion of the market has to happen, then collaboration is a must. I think the other thing all of us have to recognize is we as intermediaries, if we don't expand the market, we will always keep talking about how will you compete, will the rates come down. I think intermediaries have a phenomenal role to expand the market, whether the OEMs on the other side accept it or not, right? And therefore, I think the twin role that we as intermediaries have to play is to fulfill needs of the consumer that you think are your set of customers and be able to be a provider to the other set of customers by collaborating with the other players and in the process overall expand the market and make it much bigger.
You know, Mr. Srinivasan, for instance, could you tell us how, you know, what strategies you could put in place to expand this market? You know, whether there will be more collaboration required, whether there will be a transformation in your own, you know, business models required, or, you know, how do you think lenders like you could do that?
No, collaboration is the key. I don't think, as Mr. Iyer said, I don't think we can do it ourselves. I think we don't have the expertise. We don't have the, beyond a point, we don't have the mindset, right? And obviously there is something which we are good at. We are good at distribution, we are good at identifying risk, we are good at designing products, we are good at engaging with customers, right? So now what is the best way to engage with the customer? How do you make the journey faster? At the same time, I think there is always a two-edged sword. Any customer journey faster has to be measured with risk mitigation, right? I think a couple of panelists before also spoke about this. I think that's the primary objective which we have. And I think collaboration is the key. Collaboration basically not in terms of just technology, even in terms of, as you see, many nuanced partnerships are evolving, right? In terms of co-lending, in terms of some of the other areas. So I think those will continue to thrive and keep going forward.
So nobody here thinks a little bit of healthy competition would be good, huh? Mr. Agarwal?
To each his own, but you know, going forward, as we want to expand the market, there's nothing better than collaboration because it doesn't hurt anybody. It is a win-win for all. And you have your own skill set, you have your own strengths. Like we want to understand customer mindset, customer underwriting, our ability to risk. But it doesn't take anything to get a specialist on board who will aggregate customers for me, who would help me facilitate underwriting better and faster, who would help me deliver that loan to the customer much faster than I'm able to do. And why only technology? Today we are collaborating with government. They are facilitating us with PMAY data. They are facilitating us with CLSS data, EWS data. We are working with municipal corporations at the ground level to see which are the subsidized housing scheme available for customers. Where can we participate as lenders? So across the way, if you are able to help the consumer at the end and the customer wins at the end, you as an organization will win. So in that way, collaboration is a win-win approach, and I think that is the way ahead.
Okay, we just have 5 minutes to go. So closing comments from all of you, starting with you, Mr. Nath. You know, what do you think are, you know, some of the available technologies, some of the initiatives, some of the schemes or regulations that give you most hope as an NBFC that, you know, business will grow from here, you'll be able to enable better financial inclusion with profitability?
So that your audience don't feel that I'm very filmy, on a serious note, I must tell you this. First and foremost, the reason why NBFC exists, besides there are so many banks, NBFC existence doesn't mean that banks are not capable. But, you know, we are same set of people, we come and work for the banks, and sometimes with the NBFC, banks have better cost of capital, you know, much higher size of capital to dispose. It's just our sheer focus on a customer segment which makes us relevant. Whether it is Mahindra for tractor, whether it is HDB in their customer segment, that's why our relevance is always there for a customer segment which otherwise difficult to serve from the mainline financial institution. Second, we believe that time has come when it comes to MSME financing, that what you have seen in terms of the development of tech and data architecture starting from 2010, it has now come in play when it comes to small business financing. And there are a host of activity, whether it is Udyam, whether it is OKEN, whether it is ONDC, whether it is KYC, and the availability of data to underwrite the credit gives hope that next 2 decades, you will see the explosion of credit for small businesses. Now some of them are very small initiative, where Udyam is just an identifier for an MSME, but the ability to understand a customer and see the data through them is very, very powerful, right? The entire priority sector lending norms and the identification of MSME customer has become so simple, just by one simple thing. So there is host of things which are happening. The challenge still continues to be, for somebody like us, which has not a parentage advantage of like an HDB or Mahindra, is to be highly collaborative and work with banks, financial institutions, and funnel this and make a large business. So, and we continue to keep doing that. We are nimble. We think that we have some ability, which is probably 5 or 10% better than some of our peers set in that segment of the market, and we have to keep selling that to larger financial institutions and be collaborative with them.
No doubt that all the stakeholders that are in the system are needed for better inclusion. But Mr. Srinivasan, what gives you most hope?
Most hope, starting with the big picture, is GDP growth. I think that gives me the biggest hope. Then obviously an aspiring population, which is coming more and more into the I would say acceptable credit filter. Right? That's really changing in terms of a segment of population which we can lend to, sustain it, maintain a portfolio, and therefore achieve economies of scale. Right? A lot of it is like I would say a virtuous cycle. So the more adoption customers have, the more economies of scale we are able to drive.
So the overall growth of the economy and financial institutions are going to be reflections of that.
And on the digital front, I think primarily, whatever we want to do and what the customers want, I think there is a convergence towards both, right? It's not that the customers want something else and the suppliers want something completely different. I think
one hopes there is alignment there. Mr. Agarwal, your final thoughts. What gives you most hope?
I think things are looking very bright, and the India growth story is looking very promising. We are very hopeful because still housing is at a very nascent penetration level in India. So there is immense scope. We are the most populated country in the world. Everyone needs a house. So the market is very big for all of us to play, and it is ever increasing. So it's a lot of positive side and a strong story ahead.
You have the final word.
Yeah, I think it's a misnomer that we all think that we choose a customer and give a loan. It's actually the customer chooses from whom he wants to borrow, right? And therefore that gives me a lot of hope that if you run a business with a purpose very clearly, and you design the product and deliver the way the customer expects it, and you're able to communicate that possibility, then the customer will choose you. And that gives us hope that for the last 30 years we've run the business, and every 3 years I've been asked this question, that the competition is enhancing and what you really think. And every time I say that if you are useful to the customer, I think there is enough to do. I think we as a banker or an NBFC, the way we have to think about all the time is what are the changing aspirations of the consumer and what are we doing about it in the form of product, process, delivery, channel, whatever you call it,
to stay relevant,
and allow them to choose.
All right. On that note, Mr. Nath, Mr. Srinivasan, Mr. Iyer, Mr. Agarwal, thank you all for candidly sharing your thoughts, and thank you for your time here. Thank you.
A big thank you to the panel of the day. Thank you, Ritu. Thank you so much. And thank you all for being a lovely, patient audience and engaging in all the panels for the day. We now break for lunch and we resume at 2:30. So go ahead, enjoy your networking lunch. Thank you so much, ladies and gentlemen.
Welcome back, everyone. Hope you all enjoyed the lunch and saved some room for dessert, because the real feast is about to begin, as we have a jam-packed afternoon with some insightful sessions. So we are having two parallel sessions. One session will be in this grand ballroom, and the other session is in the Grand Salon, where we have SBFC Finance Limited CRO, Mr. Pankaj Poddar, focusing on the SBFC growth story, leveraging the lending platforms. Perfect. And for this particular session, please join me in welcoming Mr. Sumant Rampal, who is the Country Head, Business Banking Group, Rural Banking Group, and Sustainable Livelihood Initiative, HDFC Bank, who will be sharing his views on navigating the evolving landscape on MSME and agri-lending. Mr. Sumant has been a corporate and wholesale banker throughout his 2-decade career with HDFC Bank. And under his leadership, HDFC Bank was acknowledged as the best SME bank by SIDBI, by Asia Money, and by Euro Money for multiple years. Joining him in the discussion is Mr. Kiran Morris, who is the Executive Vice President for Products at Lentra. Mr. Kiran is another industry veteran who has served as the Chief Information Officer at Highmark Credit Information Services, pioneering India's first microfinance credit bureau. So please welcome Mr. Sumant Rampal and Mr. Kiran Morris.
Thank you, Paulo. Thanks, Sumant, for taking your time to meet us here. I think the MSME and the agri are the most important sectors. And I think since morning, there have been a lot of been talked about in these sectors. How do we navigate, especially in the whole digital lending space? So I just want to ask you, how the landscape has changed, evolved last few years, especially, with the technological advancements and also consumer behavior. So how do you see the evolving happening?
So good afternoon, everybody. Thanks a lot for inviting me here for this event. On this question, Kiran, I think fundamentally in the last decade or so, the biggest change which has happened is that whether it's a micro unit or a medium-sized entity or a farmer, there's a lot of data which is flowing into banks. There's a lot of information which is flowing to institutions. And I think that has become the most powerful tool available in making sure that the end consumer gets the benefit of it. And I think thanks to the government, thanks to all the institutions, thanks to technology and the work done by banking industry, to kind of reach out to more and more consumers and making sure that cash flows come into an account. And the minute that happens, I think it's wow there for the consumer. And that's the fundamental change that has happened. With GST coming in, with the workflow on GST and, consumers looking at the benefits of that, it's helping banks like us to kind of grow, and that's the reason HDFC Bank today is the largest MSME bank in the country. We are putting all our efforts to kind of go out and build a very strong agri ecosystem and work with various partners and take the agri business also, because at the end of the day, we believe it's the micro and it's the agri. It's the small and the agri which is going to go out and take care of the future of the country in terms of employment, in terms of generating more and more opportunities. So data and information flow is what is helping all of us.
That's very interesting, actually. You started off, I think the CRB business started off in HDFC in 2021. Within a very short period of time, you have made a significant impact in the industry. We just wanted to know, that when you started off, what was your vision? And also how you navigated that kind of a growth in this segment as MSME and Agri.
So, very honestly, as HDFC Bank was always present in various segments. If you go into the history, we were a large corporate bank, then the retail banking, and then we started looking at the commercial side of things. The whole idea of our managing director and Rahul was that we go out and create a unit which kind of encompasses all the elements of commercial banking into one place, all the elements of agri in one place, because at the end of the day, all of this has a very strong linkage, whether it's called an ecosystem, whether it's called a supply chain linkage, whether it is the cash flow management linkage. And what we realized is as soon as we brought all of them together into one controlling sphere, whether it's the business unit, whether it's the credit unit or the technology unit, we got the benefits of it. And clearly, as a bank, we are seeing a huge advantage of that. And we believe that right now we've not even touched the surface, and there's a huge opportunity still. Everybody talks about, and I'm sure in the earlier sessions, everybody talked about the big landscape available on the micro segment, where there are more than 6 crore plus micro enterprises in the country. And the banking industry has just been able to go out and touch not more than 1.5, 2 crores. So there is a 4 crore plus which is coming and made available. On the agricultural side, more than 12.5 crore farmer families, which are, taking care of all of us. Whatever food that we get on our tables and on our plate are all these 12.5 crore farmer families. And the financing which is reaching to the families are not more than 2.5, 3 crores. So the opportunity and the landscape which is available for the industry is just humongous. It's infinite in my view. And that's where we believe that the commercial and rural banking group collectively will be able to kind of build around and take things forward from there.
That's very interesting, Sumant. Actually, it has been like this for many years, right? So MSME and Agri have been very segments which have been starved. And how do you see you navigate these challenges? So especially MSME, you have diverse segments, access to credit, evaluating credit decisions at various different businesses, all of that. Similarly, on the Agri side, you have so many villages. How do you see this, or any strategy that you're thinking of, leveraging technology and all of that?
Strategy is very simple. Take care of what the customer needs. And if you keep the focus is on the customer and you drive your products and you drive your delivery on that, there is never a problem. Clearly, yes, there are challenges. Let me be very honest about that. It's not bed of roses there. It is a lot of hard work. You have to go out and reach out. You have to go out and talk. You have to go out and understand what the customer need is. And luckily now, with the advent of a lot of information which is flowing into bank accounts, advent of data flowing into the whole GST play, advent of data which is made available by the ecosystem, you are able to use those to give seamless credit. It's not that earlier or in the earlier parts of banking in history, money was not being given to farmer or the money was not being given to micro enterprise. We are all here because whatever the history has been. But I think right now, the pace of it, the ease of it, the convenience of it is what is making the difference. And the more a consumer brings about data upfront, and I always tell in our various programs to the customer reach that we do, we as a bank put a lot of effort in reaching out to customers. Our relationship managers, our branch managers, our banking partners, our business correspondents reach out to a lot of customers and let them know the more information is available in the bank account, the more they are transparent on their taxation, the more they are paying out GST, the better it would be for them to get faster credit, easier credit flow, and with that easier credit flow, it's the multiplier effect that comes to them. And over and above that, it's not about just credit that is talked about. I have this beautiful thought process that I always keep talking about is called as a thali concept. You got to be making sure that your consumer gets everything from a roti, from a paratha, from a puri, from a biryani, from a rice to all the sabzis that you can give. And let him pick and choose in terms of what he wants. And that's the thought process that we go out and deliver and work around on.
That's very interesting, Sumant, that you said you make the consumer aware that more and more data he provides, better product that he gets. Now, the education, the credit education has been a significant issue, especially in the MSME and the rural side. How do you tackle that, in terms of educating the customer?
Again, there is no set rule for it, Kiran, because these are things that you have to keep testing. There are individual programs which are run as small, programs at a village level or at a development council level or at a municipal level. Or we do these big loan melas. In the last 6 months as a bank, we've reached out to the village level locations. We've reached out to tier 3, tier 4 locations and done loan and credit and banking facilitation programs where more than 5,000, 7,000, 10,000 consumers come. And there we really talk about what banking is. We talk about what credit is. We talk about how they can get easier, faster, beneficial banking facility, which has really done a lot of good to them and good to us. It's a win-win that we've created. I was just there a few days back in a location called Sonpur in Bihar, where we did a Pashu Loan Mela, where we are reaching out to cattle buyers who are supplying cattle for milk to the local dairies. And all the consumers that we talked about, they were so thrilled that, a bank is coming and talking to them, and we are able to kind of process things really quickly. So that's the way that we are trying to reach out.
That's actually very impressive. I think also maybe that these kind of melas brings also your staff, right? So I think they also get educated.
Absolutely.
Because one of the things that I see, how you kind of collaborate with the consumer to educate them, and your RMs and the BCs also, they get a good glimpse of what bank wants to do.
Absolutely.
With the customer. Just want to a little bit focus on the government schemes and RBI, mandate on all of these things. How do you see that is helping these segments?
Oh, in a very big way. And very honestly, one of the inflection points, apart from the GST and the cash flow coming into bank accounts, if you see COVID, and that's a time when we tested the portfolios. All the banks, all the financial institutions tested their portfolios. Thanks to the Government of India and the work that the banks did with the Government of India on the ECGLC scheme, which was a game changer in my view, because the mindset of the government, the mindset of the institutions, and the mindset of the consumer changed. The government went out and backed the micro enterprise, the small enterprise, and the businessman. The banks reached out digitally and physically to these consumers during that time through that guarantee scheme and supported the entire industry. And that's the reason today the MSME segment is doing and is flourishing, in spite of the pain that they went through in those 1.5 years. Similarly, there are beautiful schemes which are there from the Government of India. CGTMSE is a scheme for micro, small, medium enterprises. The CGFMU, which is basically going out and supporting the agri, ancillary, and the small enterprise. There is the AIF, which is the Agri Infrastructure Fund, which in my view is a huge value add, because end of the day, the biggest challenge that we all face is the poor farmer and the independent individual at the village is putting all his heart and soul in growing the crop. After harvest, the biggest challenge that he faces, he does not get the right price. Because at his village, at his location, there is no good infrastructure available for him to go out and put that crop there. So he is to sell it at whatever price. By the time that crop comes to our tables, there is an inflation of whatever, and there is a wastage of about 30 to 35%. So the government has done a fantastic job on some of those schemes, and we as a bank are really putting a lot of effort on through these programs to reach out to more and more consumers. AIF, we are one of the largest, processes of funding to the consumer. CGFMU, CGTMSC, these are great schemes, and I think they are fantastic.
Do you see, it is very nice to hear that there's so much push is there for the private sector, but do you see that kind of awareness and adoption is there? What could be done to improve both from the consumer side and also the, the facilitators?
It's only and only communication. I think all of us here, if you just keep talking to our consumers regularly, I think you will be able to reach out, and that's what we as banking community or financing community has to do. That if we really want to get India to the next level of growth and we want to call ourselves the developed nation, I firmly believe that we have to just keep communicating with our consumers, keep letting them know, whether it is through a physical route or through a digital route. And a consumer is a very smart man there. He knows what is beneficial to him. He knows how he can use the benefits of it, and he will flourish, or she will flourish. So that's the way it is.
Yeah, I think that's a good answer for that. We just wanted to understand, Suman, if you look at the era of distribution, right? So you had branch-based distribution, people on the, foot on the soldiers, leveraging it. Now, coming into this era where there is a significant opportunity that you could leverage both on the MSME and agriculture, what do you see that kind of a transformation that needs to happen to bring in that distribution?
See, that is a challenge I think we are all facing, and I'm sure in the earlier sessions and in the later sessions, that's an area that we will all talk about. That there is data, there is an institution, there is bank, there is consumer. How do you integrate this whole thing? Getting that integration is the challenge. Making sure that the APIs of one institution or one bank talk to the other is a challenge that we all have to collectively solve for. It is not going to be that one guy says, I'll be able to do it. It's not. And naturally, if you keep customer in mind, it starts from a customer's permission. It starts from customers should be told clearly that this is what we are going to be using your data for. And hooking up till the last stage of disbursement, and then post that the regular servicing. So I think that is where the whole integration process needs to be looked at. There are a lot of great analytical tools which are able to use the data and bring about outputs, but we have to just keep hammering, keep working like a woodpecker on a daily basis, keep knocking on the tree for a nice warm home there. We will be able to do it. So the API linkages and the connections is something that we have to just keep hammering on.
I think thanks for that. I think today there has been a lot of discussions around how banks can collaborate with fintechs. We just wanted to know your views about it, and also how do you see these kind of big challenges could be, conquered with this kind of collaboration?
So, everybody is talking about collaboration, and yes, of course, I totally agree that collaborations certainly are required. They are the need of the hour, and collaboration, why only fintechs? Collaborations with consumer, collaboration with the ecosystem in that sense. But again, it has to be like-minded. It has to be with a very simple thought process in terms of what the customer needs. There has to be a lot of work which the regulator has to help us out, because, the 2-3 regulatory entities which take care of fintechs or take care of NBFCs or take care of the corporate world have to kind of align from a documentation and process flow perspective. But it will take some time. It's not going to happen overnight. Let me be very honest. We've tried something on co-lending as a program. We are seeing some very initial successes, but it's going to take more time, because there is a lot of work which has to do when we marry two entities. And as you all know, marriage is not a easy thing to kind of manage. You have to work on it. So we have to work on all these collaborations like a typical husband-wife, and work and see the fruits of it at some stage.
Absolutely. I think the collaboration is the key. Picking on the thing that you mentioned about how we can collaborate, I see significant issues to conquer the agri world, especially there's so much disparity in, let's say DLTC or an MSP databases, district level decisions are made. How do you see, to scale and also to sustain, how do you see these kind of challenges are managed? And also I want to you to reflect on the agri stack. Is it something that you see something?
On the agri side, let me tell you the 12.5 crore farmers that are there in the segment right now, which is only growing. If they have to grow, first of all, in our minds, we have to bring about that a farmer is making money and he's not only doing rice, he's not only doing wheat, he's not only doing maize. Life of the farmer has moved up. And you have to look at the cash flows that the farmer is generating from the ancillary activity. And the ancillary activity is a great value adder. Whether it is a cattle, whether it is piggery, whether it is fish, whether it is poultry, whether it is beekeeping, there are a host of activities that a farmer does. If you really go out and travel into the villages, you travel onto the roads, you will actually see whether he's a small and marginal farmer or a large farmer. They are going out and doing a lot of these multiple activities. And you have to use that as a very strong play in making sure that you are using that from a credit standpoint perspective. Not many people know this, but today 23 or 24% of agri GDP comes from the dairy segment. People still believe a farmer is, wheat and rice and paddy and, maize, some of the typical agrarian kind of thought processes, but 23 or 24% is coming from dairy. So we have to really go out and see how we can go out and reach out to those sets of people, provide the cattle, provide financing around that, provide solutions around that. And it's not about a cattle, it's about a shed, it's about the food, it's about making sure that how he's able to move the milk from his collection center to the milk collection center to the cooperative society. So we believe that is where the agri stack and that is where the agri ecosystem will work. We are talking a lot to the regulator. We are working very, very closely with RBI, with ministry on using data, on using all of these inputs, which is land records, which is the DBT, which is going on. So if all of that data flow starts coming in, I think sky's the limit for all of us.
Thank you, Sumant. I think Lentra has been one of the beneficiaries of working with you on the dairy cattle loan, which got presented in GOP. We would like to continue in this journey as well. I see the time is kicking, but just want to have a small. What I notice is that your NPA and MSME is the lowest in the compared to the industry. While you manage such a massive growth, you managed to keep the NPA very low. Any inputs that you could give?
Again, it's all about how you manage the relationships, and our relationship managers, our credit folks, our branch banking teams. We don't go out and just provide funding. We go out and create a relationship with our customer. We believe that end of the day, it's not about the whole thali concept, that the customer should be free to reach out to us and we should reach out to customers with value adds, whether it is about, getting a fast tag to his car or his vehicle, or providing a solution on the tax collection, or making sure that his entire collection and payment solution is digitized, or providing trade solutions. And I think once you do that, the hook is so strong that the customer only sees value add. And then the chances of non-performing assets becomes really, really remote. The more you communicate, the more you talk to your customers, you actually build relationships. And that's what my 25 years of banking knowledge has brought about.
Fantastic, Sumant. I think more awards to you. We heard already, we got some 4 or 5 awards across India and globe as well.
Thank you.
So we look forward to working with you.
Thank you. Thank you very much.
Thank you, Sumant.
Thank you. Thank you.
Thank you, Sumant and Kiran. That was really insightful. I know earlier during the day we heard a lot of prominent speakers, and ensuring compliance and data security was one of the key messages I think all of us heard about, and that's what our next session is all about, right? Reimagining lending with cloud-native technology and ensuring compliance and data security. And for that, I would like to invite Akshat KB, Head of Enterprise Greenfield, AWS India. Akshat has been working with Amazon for over 9 years and works across financial services, telecom, and manufacturing to help them either transform their existing businesses or build entirely new digital businesses from within. Akshat has over 20 years of experiences in business consulting, solution sales, and strategy, working with a range of startups, mid-market companies, and enterprises alike. To host the session, I would like to invite Kanhaiya Gautam, Chief Technical Officer at Lentra, and is among the pioneer in building, maintaining, and innovating software applications and products for the company. Alongside him, I also invite Vikas Madhok, our CISO at Lentra. Vikas is another industry veteran who has rich experience in telecom, IT, information security, and infrastructural security related to projects. Please welcome them, and thank you so much for joining us.
Good afternoon, everyone. I hope the spirits are still high. Great to be joined by Akshat and Vikas. So we'll discuss a bit about technology, what role does it play, and compliance and security, and the data aspects of it, because since morning we've heard a lot about DPDM, the bills, and the concerns that financial institutions have when it comes to data, right? Now, the two key pillars of any business per se are the business acumen, which gets translated into products, and technology, which makes it happen, right? Which realizes the dream a product manager would have. So if we talk about a loan onboarding system and different journeys, right? An unsecured lending journey may be very different than a secured lending journey, right? Now, technology plays a very important role into making that happen, and with India Stack coming in and so much digitalization happening, right? It's truly the right time to offer all our customers, all the financial institutions and banks, a truly presence-less, paperless, and manual decision-less lending, right? So spoke about a lot of automation. Gen AI was also brought into the picture, right? Now, when it comes to technology, the key 4 pillars are technology, with which you build something, you solution something, and then implement, design solution, and then implement. Then it's people, though we have Gen AI and Gemini, right? The newest kid on the block, right? So though we have a lot of LLMs coming about, people, engineers are the core of anything that we do, right? Any business, to just realize it, you need people. Third thing is the moment, timing. So everything has to be done at the right time, right? So you have to ride that wave. Unless you ride the wave, it becomes kind of either you are way too early or way too late. The only exception I would I have for all of you is maybe perhaps Apple, because even if they implement something or some Android feature 5 or 6 years after them, after Google, I mean, that feature is met with so much reverence and love, right? So Apple, I have always found them to be very, very peculiar, and the love that they have of the general public, right? And the last important aspect is the tool set. Now you have technology. How do you use the technology, right? So you need the right tool set. So you have the technology, you have the people, you have the right time. Do you have the right tool sets? So if you don't have the right tool sets, technology can't help you, right? So all these four are the key pillars of technology, and for translating the business acumen into products, and to realize, let's say, a loan onboarding system or loan management system, various other products that you can think of. And earlier in the day, we saw some very, very innovative products presented by Anupam. So it was a very, very nice session. Good to see Gen AI finally powering some real-world applications, though will take some time for it to come in banking, but good to see. Now, given that entire scenario of technology, people, tool set, movement, and the appetite, my first question to Akshat is, with financial services trying to innovate, right, and digitalize their entire portfolio, what is it that you feel, or how is it that AWS can help them realize that potential?
Yeah, thanks for the question. A very interesting question, right? So firstly, I want to start off by saying that both digital and innovation does not have a start line or a finish line, right? It's just that you got to make sure that you're running faster tomorrow than yesterday. If you keep that at the center of it, that's how we look at it, not just in AWS, but even within Amazon. In fact, when we started AWS in 2006, it was pretty much with the hypothesis that something such as basic primitives called compute, storage, networking will help us run faster in our business. Did that work? Probably initially it worked for really startups, developers, etc. in the first few years. But by about 2011, 2012, some of these startups itself have become really large companies. And that's when really enterprises realized, for me to differentiate myself in the market, really on the digital curve and the innovation curve, I need to be faster. And that's where I would say they really started adopting cloud, right? So a little bit of history there. After that, about 5 or 6 years, while they were experimenting with really peripheral experiments included things like test and dev, a website, a mobile app, etc. They realized that agility is needed not just for those peripheral aspects of a business, pretty much. You also need it for your data platforms, your core platforms, because only if you are ready at the back end can you be ready at the front end. The customer demands that agility. That's where I would say financial services started their, in a way, a cloud journey. And that's come a long way today, right? So today, if you look at it pretty much worldwide, there is no workload that a company does not want to move to the cloud. It's more about, I would say most financial services companies have moved from the why cloud question to the how cloud question, right? That's the first thing that I would want to state, which means you want to be clear at the senior most levels, is cloud something that's going to solve real problems for you where your customers stand? The second element, if you see as to what are they doing within cloud, there are multiple patterns, but broadly I'll generalize into 3 buckets where we see companies leveraging the cloud. The first is really building new customer experiences or enhancing customer experience, right? And that's a pretty vast, spectrum, if I can call it, which is primarily, if I look at, for example, let's take like an Indian example, like an AU bank, a fast-moving small finance bank. They wanted to differentiate themselves with video banking. They built a complete video banking platform where at the back end they've got 500 plus people servicing their customers through video banking, and that's built on the cloud. And they could scale it to as much as they want based on customer demand using the cloud. We heard Anupam speak about Axis Bank. They could build really a digital savings account, current account onboarding platform which could onboard a customer in about 6 minutes, right? So while those are easy examples, today if you see, if any bank or any financial services company is looking at rebuilding any digital platform, it could be a digital mobile banking, it could be internet banking, it could be pretty much any new platform, cloud is becoming increasingly a default choice. So that's one big bucket. The second bucket where we see a lot of activity happening is really on the data and ML side. Anupam covered generative AI. Hey, but you know what? To get your generative AI journey right, you need to have a strong backbone of a data platform. It's not just for regulatory reporting, it's not just for operational reporting, but also for new age AI, ML use cases, which even might be experimentative, but you need to again have a strong data platform to even run small or big experiments. So that's a second area where we see a lot of activity going on, even with, for example, banks are setting up in-house data science teams to be able to run that experiment. The third is really core modernization. And core modernization is a long journey, right? And there are 2 or 3 aspects to it. One is, you've got this, most of the core banking systems that have been designed in the last many years were designed probably about 10, 15 years back when the kind of volumes that you see today didn't exist, right? But it's hard to modernize a core, because of which banks have been taking, and financial services in general have been taking various journey. Either, of course, ideally I would want to have core running in the cloud, but sometimes it takes a long time to get there. We see a lot of hollow the core strategy going on, where people are saying, if there are surround applications around the core, can I offload it to better systems, more agile systems, run it on the cloud? As a cloud provider, we provide usually 2 options. One is, of course, you can modernize an existing application, or we work with a lot of ISVs in the market. It could be in the space of treasury, in terms of cards, etc., where they themselves make their applications ready, available in cloud native, the term that you used a while ago, available so that the bank doesn't need to do the heavy lifting of really making that cloud native available. So I would say these 3 buckets is where we see that evolution from a banking perspective.
So the next logical question, and that's a great answer, right? With governments focus purely on public infrastructure and AWS being one of the prime public infrastructure provider, right? What do you feel, what does AWS feel, what will it take for the financial services organizations to really harness the power of cloud? So how do you see that going in the near future?
Yeah, I think great question there. If you look at the government itself, I think especially in the last 8 to 10 years, the government itself has set the tone of, especially with India Stack, why, if at all anybody had a doubt that digital is a question mark at any point in time, government has made it very clear with the India Stack, just making it easy for every business. Financial services obviously has reaped the benefit of it, right? In fact, even in the government, for example, platforms like a CoWin, DigiLocker, something like a Digi Yatra recently is all built on AWS on the cloud. So you see government itself leveraging cloud pretty heavily. Coming to the banks and financial services companies, the first thing that really I would recommend is to be clear on, at the senior most exec levels, if you're clear cloud is going to make a difference, you got to quickly move the entire organization from the why cloud to the how cloud phase. And that's really a lot more than technology transformation. It's really culture transformation. You've got to start thinking differently. You've got to start thinking about, hey, I am not just a bank, but also using technology as my core lever to offer a better customer service. There, I would say 3 or 4 fundamental things that we see successful financial services companies do, which is make sure that you have a strong security and compliance foundation in place, right? You've got to get that. That's absolutely paramount in the financial services industry, pretty much in every industry, honestly, but even more so in this industry. Which means, for example, you've got your regulations, you've got to map it to how will you apply those regulations and provide the same level of compliance in the cloud. How will you make sure that your internal process adapt to some of the possibilities with the technology in the cloud? So security and compliance is one big pillar. The second pillar is really governance. Your procurement mechanisms, your deployment mechanisms, your rate of change of applications, everything changes to the cloud, but you need to have a pretty strong governance mechanism internally to be able to harness that. And I would say the third is really skills. Cloud has a lot of art of the possible. It's much more than infrastructure. But to be able to harness that, you need to have the skills internally as well. Unlike the previous world where you could have it all outsourced to one service provider who would do everything for you, that more or less doesn't work increasingly. And that's where you need to also have in-house skills to be able to harness that. So I would say these 3 things.
So maybe perhaps you also kind of can do platform modernization first before migrating, right? Because that also helps.
Absolutely. We see that pattern as well.
Yeah. Now that, so very well put, Akshat. So Vikas, coming to you, a very important point that Akshat brought in was around data governance, security. And since morning, we've been hearing a lot from the industry seniors, from RBI, from SBI, and all the other bankers in this hall, right? So data privacy, protection bill, and with whatever is coming, how has Lentra ensured transparency and data governance and security?
So let me, yeah. So as you know, Lentra thrives on technology and digital innovation, right? And this landscape which is there threat landscape is ever evolving, right? It's ever changing. But principally still, the risks that in this landscape that we are confronted with is data breach or a data loss which can take place, right? Maybe some sort of a malware or a ransomware attack, anything which can impact your business continuity. And the third, also a very important thing is legal and regulatory non-compliance. Yeah, so legal and regulatory non-compliance. So for this, we at Lentra, I'd just like to cover some of the processes that we have, some of the steps that we take so that we ensure that we have a very robust and a secure platform, right? So this, we give a 360 degrees view to security there. Starting right from software development lifecycle, right? We ensure that the security of our code, quality of the code, software composition analysis tools are used, right? We also carry out vulnerability assessment and penetration testing of this code before it gets deployed, right? Any change that gets deployed also goes through the same process, right? In addition to that, you were talking about AWS. There are a lot of tools which are there in the AWS which we use. We use the AWS inspector which is there to look at the vulnerabilities, to look at the vulnerability posture of our EC2 instances which are there. Right. Also, we have levels, appropriate levels, access levels which are there at all, at our applications, at our databases, at the platform, through enforcing of multi-factor authentication, VPNs, right, and even PIM tools which are there for privileged access. Right. We also have at the network security and the cloud security perspective, we use the firewalls, well-tweaked rules there, and Cloudflare, web application firewalls to protect us from any application level attacks that are there. For example, SQL injection, etc. From DDoS protection, DNS security, right? We have our own GoTrust, top of the line, yeah. Identity and access management tool, which has got authorization, authentication built into it, and one session, one login. We also have extended detection and response system, which is there, right, to protect us from any known and unknown threats. So that's not all. We have a SOC, 24/7 SOC for an incident management and response. We have certain empaneled auditors to carry out our risk assessment, to carry out internal audits, and a very well-curated security and a training awareness program with phishing campaigns for our employees. But it doesn't finish there. You see, what is there? We are also certified and attested to a lot of certifications, because at the end of the day, our customers are regulated entities. So this certification and attestations give a certain amount of confidence and a trust to our customers that yes, security is a high priority for us, right? So therefore, if you see, Lentra is ISO 27001 certified. It's also 27017 and 018. 27018 is for controls on use and controls on PII on the cloud. In addition, we are also 22301 certified, which is from a business continuity management system. We are also SOC 2 compliant, right? So that SOC 2 compliance is a lot of our customers actually ask us for it. Right? In addition, in the roadmap, we have a lot of other certifications going forward. You talked about DPDP Act, right? So because of the importance we give to privacy and to data protection, we are also going in the roadmap for a 27017, which is a privacy information management system, GDPR, and also for the Cloud Security Alliance Star 2. So if you see at the end of it, it's a 360-degree effort which is made towards security to ensure that what the customers get is a very, very compliant, secure, and a robust platform. It gives them the sense of confidence that yes, they have a secure product to work on.
Very, very nicely put, Vikas. So, catching on that security and cloud native architecture or stack that we spoke about, right? So at Lentra, what we realized was cloud native is in the mind, right? So what it entails simply is just a breakdown of your monolith systems, right? So that you have very fine-grained particles. Microservices paradigm is one way with which you achieve that. Then with non-blocking calls, non-blocking communication, async comms, right? You achieve that. So as less blocking as and more async. So cloud native is in the mind. So at Lentra, we realized that earlier on in the game, and we kind of really focused onto that. And that helped us and put us in pole position. And we were warmed up and primed up well for us to kind of then go to a public infrastructure provider. So that's what we did. That also kind of reinforced our commitment to resiliency, right? The scalability and the auto scalability part of it. Then the full stack observability, which is very, very important, right? You should always have an X-ray of your system as to what's happening. So given all of this, and with your future roadmap, Akshat, my last question to you is, what kind of roadmap is AWS thinking within BFSI? How are you planning to work very closely with banks and financial institutions in the near and the midterm to kind of just get into this digital transformation bandwagon?
Yeah. Yeah, it needs probably more than a couple of minutes to answer that, but I'll give you a quick preview of the way we are thinking about it. One, we realize that in financial services, there's a lot of dependency on legacy, which is, I've already got a set of applications, landscape, investments made, my SI partners are already in place. So we realize we've got to work through it, and we see that in really three parts. The first is we need to work with the existing partners who already work with for example, it could be a core insurance provider, a core banking provider, or for that matter, a trading platform provider who've existed for many decades. And we've got a pretty robust partner program where a lot of these providers are available today, where we help them become cloud native in the first place so that they can make the banks cloud native. The second element is really the modernization part that you touched upon very well, is going in and seeing, before doing technology for the sake of technology, working backwards from what does their end customer need, and then look at, hey, what should be built, right? We realize, at least that's what we do within Amazon and AWS, we believe that's what you would want to do even for your end customers. That sometimes means it could be in the form of, we can help companies in the form of, for example, a hackathon to really solve, even define a problem and then arrive at a solution. Or it could be core, hardcore re-architecture. Or it could be just going in and saying, hey, what small experiments can I do to enhance my existing applications? And the third is really also increasingly startups. Many of the existing financial institutions want to partner with startups to be able to unlock that innovation, right? Because India, incidentally, is the second largest startup ecosystem in the world. There, incidentally, we work a lot with them. So what we do is essentially create forums where startups can interact with some of these large enterprises, and enterprises can then, of course, share their problems and really co-create solutions for the future. So I would say these three buckets is where we are very excited about.
Very nicely put. So just to wrap up, technology, tool set, everything is there, right? The onus is on us to leverage them to innovate and to succeed. Thanks a lot, Akshat. Thanks, Vikas. Thanks for your time. Thanks, audience. Thanks a lot.
Thanks, Vinaya. Thank you.
Thank you.
Thank you, Akshat, Kanhaiya, and Vikas for another great session. We just explored the cutting-edge innovation and evolving landscape within the cloud, technology, and data security. Continuing the momentum, let's cover another tech topic, accelerating innovation in digital lending and financial services by Bhavesh Punjabi. He's the Regional Director, Enterprise and Public Sector for MongoDB. Please welcome Bhavesh with a round of applause.
Thanks, Pritesh. Am I audible, guys? Is the mic on? All right, great. Thanks a lot, right? You've been hearing all morning about how important it is to be able to structure data, to be able to go ahead and make sense of the data that's available. Speakers before me have spoken about how data today is growing exponentially and how a good job the systems have done today to be able to make that data available for companies like yourself as you make critical decisions about your business, right? Akshat, can you hand me the clicker? So as we go ahead and companies like yourself try to make sense of this data, you will be wondering why MongoDB is here. What are we doing in a digital lending summit? What's our agenda? I think what's important and what everybody realizes, that data is precious, right? Systems, people, processes will evolve. They will move out, but data will stay. Data is eternal. Data is universal. And therefore, organizations across the board need tools and technology to be able to manage this data well. They need to make sure the data is available today for any application today or in the future, any platform, anytime and anywhere. And that's where we as MongoDB come in as one of the leading providers of a data platform that is new age and ready to drive and run with you as you modernize your applications. What is MongoDB, right? Let me spend a few minutes talking about what this platform offers. I think the first step of any platform is the ability to handle multiple kinds of data, be it transactional data, be it time series, be it relationships, be it graphs, right? You should be able to have a format that is able to accept both structured and unstructured data and store it efficiently. And I think that's clearly where we come in with our document model. It's a unique model which today lets you not just cater to data needs of today, but also go ahead and look at the new data types and formats that will come out as technology evolves. Once this data is now available and stored, I think it's important now to make this data accessible to different applications for different use cases, where you need a unified query language or a unified mechanism for you to not just analyze the data, but also provide data to third parties. In the case of lending, be it with co-lenders like fintechs, right? Or also make the data available to different systems, be it internally for management consumption to analyze data trends in businesses, or for other parties to look and statistically see where the entire trends are going. And therefore, this unified interface language is very important as you go ahead and you start putting the data together. And finally, I think what's important is where is data kept. We've heard enough about the Digital Data Protection Bill, about different data privacy laws. And it's important that data today is available and kept, first of all, close to you, where in our case, we tie up with all the 3 cloud providers, AWS included. It is kept in country, so it is meeting the laws of the land. And finally, it's available in different ways, securely and resilient. So the data is safe, it's available, and is securely stored with different technologies. And it is sort of this 3-layered structure that drives our developer data platform and is made available to organizations like yourself as you go ahead and start building out your data strategies. What does it mean for lenders like you? Very clearly, as you reach out to different consumer types, as you reach out to different organizations, you will look at different ways to integrate and use this data for your customers and internally for your employees. And that's where we come up with different sort of models or products. We've got our on-premise solution, which is called Enterprise Advanced, that lets you store data in your own facilities, lets you store data in your own secure environments with your own guardrails. Or then we've obviously got our Atlas solution that lets you work across multiple cloud providers and lets you store data if you're on the cloud, on any of these players, or also in a multi-cloud setup. Finally, once this data is stored, there should be 3 key reasons why lenders like yourself will look at MongoDB. I think what's important here is the 3 key important things. One is agility. Is your data available? Are your systems agile enough for you to make use of this data? What we bring on the table with this flexible data model and data platform is the ability to be agile, to be able to make use of your data and quickly innovate around the learnings that you get from the data. The second is your data resilient? Is it available to you in case of when there is failure of systems? Is it available to you when there's a calamity? Right? And again, you need a resilient architecture that makes sure the data is not just resilient, but also securely stored. And I think finally what's important to you as organizations is the data real time? Is the data available to you as it's generated? If today a customer has made a payment for a long outstanding loan, and therefore his credit score has now improved, how soon can you access the new credit score for you to be able to make an immediate decision, do you want to provide a new loan or not? Right? So is it real time? Is it mirrored with what's happening in the environment? And not data that's stale, data that is maybe a week old, a month old, maybe 3 months old. Right? And that is where having an integrated data platform is very, very important, and is something that we provide. If I talk about MongoDB across the financial service industry, we work with a lot of large global players. You will see banks, which are obviously there. You'll see larger institutions. You'll see fintechs. If you look at India today, from the top 10 banks, the largest 7 banks in the country today are using MongoDB for very critical systems where they store, analyze, and transact with this data. Right? I'm just going to spend a few minutes maybe talking about exactly what we're doing with some of these organizations. Let me pick the first one, which is HSBC. Right? It's a familiar name. It's a global bank that you all work out. The journey with HSBC started way back in 2015. And like all journeys, they usually start out small. Right? You come in, you explore what you can do. We started with real periphery systems, be it your web or mobile app, be it certain systems that are with third-party integration. And as the confidence grew, and they realized that having a unified single repository for all data types really would help them become faster and better, they started slowly migrating larger and larger workloads to the developer data platform of MongoDB. As we progressed from 2019 to 2022, we saw that certain key systems where there was customer-critical data, data that had PII information, data that required encryption, slowly started moving to the single data platform. Today, if you talk of it, I think our largest sort of success with HSBC is something we call the operational data store. It is a single data platform where all their applications across the bank globally talk in and are able to store as a single repository. It is this operational data store that is the heart of their decision-making process, where they're able to go ahead and are able to decide what to do with customers, how to engage customers, and what decisions to take when it requires corporates or organizations. Right? And that's the HSBC story. Maybe let's talk a little about Barclays. Right? A similar story, a similar journey. We started back in 2014. They wanted to modernize their entire data stack. They went about, like HSBC, started centralizing data, building this operational data layer that went ahead and gave them the chance to view data in a single pane. As they started integrating more and more applications, I think what they realized is that having real-time information was very, very critical to them. Right? They wanted to be able to assess customers, assess organizations, assess transactions with what's going on at the moment and not what is stale. And as they started evolving towards that journey, they realized that it's important that they're able to not just store data in a single place, but also query data real time. And that's where MongoDB came in with a unified interface and a real-time streaming. We were able to analyze data that was in stream. We were able to analyze data that's in store, be it cold or hot. We give them a unified interface for them to query all kinds of data. And therefore, they realized that that would help them go ahead and build a larger unified platform where they could take quick decisions. So that's the Barclays story. Let me talk about something that's more closer to home. Canada HSBC is a large insurer, primarily in the life space back here. And for them, as they evolved in their journey, they initially started on-premise. They had multiple applications that were there on-premise. They went ahead and they started deploying MongoDB on-premise in their own data centers. Somewhere along their journey, they decided to build something called Unified App. The Unified App at Canada HSBC is a single app that serves as the information store for the field agents who are out there talking to customers, for the underwriters, because underwriters need to take decision of what insurance and what policy and what premiums they want to work on, and thirdly, to their leadership. So for these three customer categories, they built this single app where they said, this will be the single source of truth for anything you do in the market. And that's where they decided to build that up on MongoDB, provide that integration and single view to that entire stakeholder community. Now they've gone a step further. And what we're talking to them is on AI. And we've spoken a lot about AI as we have through the day, right? How is AI helping you write better, make better claims, reduce credit risk, reduce NPAs, right? I think earlier on the day, people spoke about the growth of unstructured data and how do we drive intelligence out of the unstructured data. And Canada HSBC is now in that journey. They're in that journey where they're able to take the data available to them through multiple systems and then go ahead and run AI models on it. AI models for auto underwriting, AI models for claim processing, right? AI models for the customer service engineers, customer service people to know what to sell, what to upsell, what to cross-sell when someone calls in, right? And so that's the journey that they've taken. Now, all through this journey, what's important to understand is who we are and sort of what we bring on the table. MongoDB today is a global organization. We today have close to 45,000 customers globally across industries. Today, we are freely available for organizations to test out and try. Our source code is open source, and you are more than welcome to go ahead and to download it and run it with your data engineering teams and see how you want to use. Once you sort of evolve in that journey, then we can obviously engage you for enterprise capabilities and larger solutions that are out there. Today, we have a very large developer community. MongoDB typically works on JSON, which is a traditional development language. And today, you can talk to your developer community, and you will realize how comfortable with the solution. We are taught out of college. We are taught out as developers grow and evolve in their career. And therefore, availability of skills in the country is not a challenge. You can easily get skills to be able to build applications on the solution. Right? We're today also ranked as one of the fastest growing databases in the world. Right? We're fairly new in this space, but you can see that we've picked up and become very popular among the development community in general. And finally, I think what's important to see, what do the analysts rate us as? And where do they take us? So if you look at a very recent Forrester report on transactional analytics, or trans analytics as they call it, today we're in the leaders quadrant in such a short space of time in terms of the transactional capabilities we bring into the platform. Right? And they've tested us on multiple different parameters. With the number of customers, with the performance that we bring in, the scalability we offer with a multi-cloud, multi-country model, and also the ability to be able to go ahead and stream data and analyze data on the move and on the fly. Right? So that quickly covers up sort of where we stand, sort of the value we bring on the table. We're today available at a booth outside, and you can come visit us, and you can come and talk to us and find out how we can help you specifically in your journey. We are happy to engage and to see how we can partner together. Thank you. Thank you for your time, guys.
Thanks, Bhavesh, for an insightful session. Moving on, let's uncover the strategies for credit card growth, enhancing acquisition, conversions, and usage. I now invite Chitrabhanu KG, Senior Vice President, Country Head, Retail Assets and Cards, Federal Bank. Chitrabhanu has over 25 years of remarkable experience across a spectrum of products, including retail liability, insurance, investment, products, and collection. Joining him on the stage is Hitesh Sahejwala, EVP, and the central pillar for sales and growth at Lentra India. Let's give them a big round of applause.
Good afternoon. Are we audible? So, welcome, good afternoon, and welcome to the Coffee with Karan show. Right? Am I sure this is a fire chat with Mr. Chitrabhanu? My apologies, it's not Coffee with Karan. It's the Lentra CNBC Digital Lending Summit, the breakout session. We're truly honored to have Federal Bank and Mr. Chitrabhanu out here. I think Federal Bank, most of us no one should be asking what is Federal Bank. We all know about it, I'm sure. It's one of the largest private sector banks. And one of the things, Mr. Chitrabhanu, I like about Federal Bank is the messaging. Digital bank with a human face, right? And digital at fore, human at core. I love the messaging, so that's great about it. Mr. Chitrabhanu has already been introduced.
Not only that, rishta aapse hai, aap se nahi.
Absolutely. And the other interesting part, thank you. So, other interesting part is today, during the day you've heard a lot of sessions on lending, digital lending, right? So we thought we will cut ice with a little bit difference and talk more about the strategies for credit card growth. So that's the conversation I'm going to have. We hope this is going to be interesting for all of you without your coffee cups. We hope we can keep you awake because the session has already gone by after the lunch. So after a small snooze and sleep, we all are up and running. So, Mr. Chitrabhanu, once again, thanks a lot for sharing the stage with us. It's truly an honor to have you out here. First thing which comes in my mind when we talk about credit card is the RBI report. I'm sure you've seen it. Talks about the penetration rate at 5 to 6%, if I'm correct, because we have around 84 million card users with a population of 1.4 billion. That's one side. The other side, most recently, you've seen RBI raising concerns about unsecured loans, What's your take and view on that? It would be interesting to start the conversation from that.
Thanks, Hitesh. Thanks for having me here, to the entire Lentra team and to the entire CNBC conference. Specifically with regard to your point, credit card as a proposition is a long-term relationship product. It's not actually something like a personal loan wherein you give a loan, maybe after 3 years you expect that the customer closes the loan. But this is more like a daily engagement product where you engage with the customer, and if the customer is not very happy, he goes away. So the kind of blocks or the underwriting guidelines that is generally put by all the card players is comparatively strict. It's not going to be something like you make it very easy for them to get into this. So in that sense, this is a premium product. This has always been a premium product. Maybe that is one reason why the penetration has not been very high. The kind of customer profiles who get it, maybe only in the tier 1 cities. You cannot find sometimes credit cards in some of the lower tier 2, tier 3 cities as of now. So in that sense, the product is not too worrisome, I'm sure, for Reserve Bank of India. Maybe Reserve Bank of India was looking more in terms of personal loans below 50,000, the loans which were offered by a lot of fintech companies, or maybe the apps, where it becomes much easier for you to get a 50,000 loan. So maybe that is the profile of customers which actually Reserve Bank of India is worried about, and not credit cards per se. So I don't think, in spite of the fact that the penetration is not very high, I don't think there is going to be a degrowth in this portfolio. Banks, the lenders will continue to be engaged in this credit card product, and we expect that the growth will continue.
Great. So you're saying there are very good guardrails to protect most of the guidelines?
See, over a period of time, it was all done manually. But now, thanks to the lot of identity capabilities now, I think we can discuss more about it, and the income capabilities which is available now, wherein you know exactly who is Hitesh. I know the identity of Hitesh. I know what is your income available with you, etc. Much more easier now. It becomes easier to offer a product like a credit card. So in that sense, I don't think it's going to be a big challenge in terms of offering a credit card to the right set of customers. And I'm sure no credit issuer is going to stay away or stay shy from giving a credit card to the right profile of customers.
Excellent. I think that's a very good point. Now, moving forward, all of us have seen India grow from an offline, cash, informal, low productive economy to an online, cashless, formal, high productive economy. We've all seen that. And we've seen the growth of credit cards. I think around 15% from last year, we were around 74 million users. We are at 86 million users, and I think 46 million to 84 in the last 4-5 years. What is your view on some of the critical success factors which has, accelerated the growth of the credit card in India?
Credit card per se is a very interesting product. It's actually a very interesting marriage of a payment product plus a credit product. So you look at any other product, I don't think so. Sometimes we take it for granted what the credit card is, but it marries the best of both, the payment as well as credit. So we know in the last 8 to 10 years, there has been a lot of changes, a lot of improvements in the payment space per se. You have a lot of fintech companies who have innovated in the space. The UPI as a strategy has been, I don't know, the set of customers who are using UPI on a day in, day out basis is such a huge number. So with all these things, the capability to build a credit card becomes much more higher. So you find a lot of attractive population in terms of fintechs. So you look at it maybe 5 years back, you had only a very few players involved in credit card. Some of the big names, maybe an HDFC, maybe a Citibank, or all of them are only involved in credit cards. But just look at it now. You have a lot of nimble players who are now into the credit card space thanks to technology. So that's been a big defining changer. You look at the other side of it in terms of credit, what I was talking about. Now, what I was earlier also mentioning about, now you have the identity capabilities through Aadhaar. So you, on the flow, in a digital flow, you can actually identify a customer. You can do the KYC of the customer on the flow. Just look at it 7 years back. You had to go physically to the customer, take an identity proof, sign it off, and you're not very sure whether it's the same customer. There is a chance of fraud because most of these DSAs who source these customers are, I don't know how much they're dependable in that sense. But now everything happens digitally. You know exactly who the person is. You're able to do a KYC of the customer. You do a video KYC of the customer. Add to it, on the credit side, you know exactly what is the financial status of this customer. Now, what I heard that we have spoken in the morning about the aggregators, etc. Now, you know the income status of the customer. You know the entire savings account portfolio comes at the click of a button. And you know exactly what the portfolio is. You know what the income offers, what the cash flow is. You have the GST returns. So all these data which is available at the click of the button has resulted in a lot of new nimble players coming to this platform, along with all these bigger players. So I'm sure even these bigger players have now changed. They have a lot of digital first approach which has come into it. So all this is resulting in a larger number of, reaching out to a larger number of profile of customers where you may not have been able to reach. So you know, maybe you see a Hitesh, you know, yes, he is a good customer for it. But there are a large set of customers in India and Bharat whom were not offered a credit card, which now is going to be a possibility. Thanks to the availability of digital technology, the phone, the mobile by itself has become now an option to reach out to customers. So this, I think, is going to be the biggest bet in the next 10 years, wherein everything is going to happen digitally, where you're going to reach out to the customers digitally, and physical is just going to be to do that last bit of conversion. So I feel that credit card as a proposition is going to only grow thanks to all these ecosystem changes which has happened in the last 3-4 years.
No, I think I couldn't agree more. So if I may just summarize it, are you saying the digital public infrastructure is one of them, technology is second of them, and I call it the information collateral. You know, we used to do asset collaterals before. We moved from the asset collateral word to the information collateral. These are 3 success factors, you know. Just taking an extension, you mentioned about these critical success factors. Now, you also heard and definitely know about the UPI credit card. Nobody, you know, out here, everyone knows about the fame of UPI, not only in India, but globally. In month of August, I think we did around 10 billion transactions in volumes with 15 trillion of value. You must have heard this the 100th time or the 1000th time. But that's a huge growth which is happening. And UPI today has got around 300 million customer base, if I'm correct, estimated. And credit cards have around 86 billion. How do you think UPI credit card is going to accelerate the growth and fill in the void?
UPI as a proposition has not caught the attention of India, and not only India, across the world. So thanks to a lot of people now using this as a payment option, marrying this UPI to credit card is going to only explode the opportunity of this credit card business. That's what I feel about it. There's going to be huge opportunities in that sense, because presently it was more like a push product. So you have a sales guy who goes to the customer and tries to push him a credit card. But now we can see that practically it's going to be a big pull product. I've heard from some of the big issuers that they are offering now RuPay cards on the fly as an add-on card to the present card. So if you have maybe a 1 crore customer base who's got a MasterCard or a Visa card, they are offered a digital card which is a RuPay card. And large set of customers are taking it every month on month. So we expect that this is going to be a huge boom for the country. The biggest advantage is that you have merchants from maybe the minimum number of merchants which is available in the ecosystem to millions of merchants, the MSME customers, the MSME merchants, etc., who will now use your card. Yes, there are going to be challenges in terms of the MDR and all those things which is coming, but I'm sure at some point of time all this will come into some discussion and negotiation, and then we'll be able to reach at a right number. But it's going to be an exciting journey in this entire story of UPI linkage to credit cards. It's going to be a wonderful story. In the next 2 years, you're going to see it. A real change is going to come in this credit card business because of this. That's what is my feeling about it.
I don't think so. It's not that I would not disagree with you, but I think I tend to totally agree with you. If you look at the POS terminals today, it was 70 lakh POS terminals, if I'm correct, right? And UPI is going to offer you 210 million or 21 crore UPI QR codes.
Very true. Very
to
true.
access
yes.
credit cards.
So you don't even require a card now. The form factor is gone. You just require a mobile and you can go to any place and you can start using it. So that's the biggest advantage. Presently, you could do it only from your account. Now from that, you're moving out into another proposition where you have a Google Pay. You can use the same proposition and you can use it credit card and pay. So I'm sure it's going to be a huge change.
30x the growth is what you can see that, you know.
Very true.
It's good business for Federal Bank and for Lentra.
Hope so.
So just moving on a bit, we heard some of the critical success factors, great, but you know, it's always a double-edged sword, right? You have growth, success factors, benefits. What are some of the headwinds or roadblocks, you know? For me as an individual, the headwind is nothing much. My wife and son start spending more on credit cards. My balance sheet starts dipping. But overall, what's your view? What are some of the headwinds from a technology perspective or an ecosystem perspective? And do you think, you know, not Lentra alone, but technology partners like Lentra have a role to play in your credit card journeys?
Yeah, I think this is a very good question. And I think somewhere I had mentioned about this earlier also. So from what we used to do physically before, now it's become a digital first approach. Maybe some of the players like us, we just started off 2 or 3 years back. And in that sense, we could start off digital straight away. So I'm sure the kind of experience we have had with Lentra, we straight away have engaged with Lentra in terms of the loan origination system. And I don't know how much of you participants are aware about it. For all our pre-approved customers, just in 3 clicks, the customer is able to get a digital card. So there's nothing more required. Can you think of it maybe 5 years back or 7 years back when you had this physical application flowing in? You have an existing customer, he goes directly into the Lentra flow, and you just have to give some basic details. You do an OTP flow, and you have a card digital in the mobile banking platform of Federal Bank. It's called as Fed Mobile. The customer is able to transact right from the next minute. So was there an opportunity before? No, it was never there. So I believe that digital is going to be the way forward. The point which you mentioned about why a customer should now choose a card is going to be based upon this, because everybody is now spoiled for options. And for all the new millennial customers or maybe the Gen Z customers, they are born with a digital in their mouth. I'm sure and they don't see anything but digital. So they have used the Amazons, they have used the Ubers, and they expect this platform also to be as good as that, if not better. So immediately if you find that it's not that way, they just move out of it. I'm sure none of these new customers, maybe the 30s and 40s, and not only that, even most of us now also have got used to maybe a Netflix or an Amazon. We don't want anything different from that. So if you are available on the same level as that of these Amazons of the world, then yes, you can give an experience to the customer. So I believe the biggest challenge is going to be to benchmark not internally to other players, but to benchmark to all these digital platforms of the world. And that's going to be the biggest challenge, where we may need to involve other technology partners. We may need to involve that's what we have been doing across. So who will be able to sit over our platform and then give the customers the necessary experiences? So this is where I'm sure the world is moving towards, where you will have maybe a co-branded card, wherein the bank or the card issuer is going to be basically the management of the customer, but it's over this sitting a platform which will work directly with the customer and engage with the customer and ensure that he gets that best experience which is expected of these Gen Z customers.
Yeah, if I may just...
Yes, true. There are other challenges, etc., which I'm sure, like for example, once a RuPay card comes, you will have a lot of pull factors from maybe from a comparatively low, I won't call them lower end customers, but customers who may not have income in their books, who may not be showing income in their books. So these are challenges we have to live with, and we have to come up with surrogate programs. But I'm sure all those can be, we should be able to find ways and solutions. But the biggest, I believe, is going to be to ensure that you are able to reach out and benchmark with that set of platforms.
No, that's perfect. And I also recollect Mr. Ramesh here from Mahindra Finance, in the earlier sessions. I think one important point he said, you have to be relevant to the customer, Competition will keep coming. You'll have multiple players coming. But just one more point, and, you are the best judge. It's not I'm trying to preach to the choir. What do you feel about the MDR, the merchant discount rate? Because MDRs, if you look at it in UPI, is not there. On debit cards, if I'm correct, is 0.9%. And there's no cap on MDR for credit card. Do you see, could you throw some light on that?
I think we'll have to wait and watch in this. So there are a lot of merchants, they are used to not giving an MDR, especially in the UPI space. But subsequent to the fact that now credit card is also becoming a part of the wallet of this customer, and he goes back to the merchant and says that, yes, there is an MDR. We are hearing about a lot of challenges and concerns. But at some point of time, I'm sure both of them will work together and we'll arrive at a figure which is, I think, commensurate to both of them. I don't know what is going to be the number. From 1.75, it can come down a little bit. But I'm sure there's going to be a number. But for a bank, it's not just MDR which is important. It's also the interest income that he earns. There are a lot of other opportunities to cross-sell to the customer, etc. So I'm sure this is just going to be one small factor. It might be a deterrent over a short term, but over a medium term, I'm sure that this will come. We will cross over this. Because as a product proposition, this is going to be something very interesting, very attractive.
Thanks. I think I tend to agree with you there. I know we are around the time, but I have I think I have 3 minutes more. And my last question would be, India is a huge population. It's a, it's a benefit also, and it's a challenge also, right? With the growth happening, and primarily still the credit access to a lot of the larger population is still a concern, And we do see this being a big challenge for the MSME market. You have, I think, 60 million odd MSME customers. How do you think credit card can help in accelerating the growth of the MSME business. Do you think that's a fair point? Do you think there's a good direction for them to go?
I think you're talking of the corporate cards and the cards which is available for that segment of customers. Yes, over the last 10 years maybe there was a kind of focus on this card, but it was all muted and more towards the corporate customers. So rather than going to this MSME set of customers. But some level of focus has now started. Both the IBA, the NPCI, etc. started giving some focus on this business card wherein you should be able to give offerings to this customer. And for a bank in some sense, a commercial card to an MSME customer is sometimes even better than a working capital loan which he gives to him, because you have a visibility of his cash flows. Maybe if you give him a working capital, he takes it in cash, you don't know where it is being used. But sometimes in this, you know the exact end use of the customer because the entire transaction happens digitally. So thanks to now this UPI on credit coming in place, this is going to be a very huge opportunity. And from the customer, there's going to be a lot of benefits because he gets discounts on the platform. He gets even points which maybe a credit card customer gets, an individual gets, the same points he's able to get. So there are a lot of opportunities for him also in that sense. And for a bank, this is a big convenience because he knows what the customer is doing. He knows how much more he can increase the limits over a period of time. The underwriter is in that sense very happy. And in terms of initial underwriting also, you have digital opportunities like what I mentioned about GST. You know how much of business that the customer is doing. So I believe that in the next 2-3 years, the commercial cards to the MSME segment is something which is also going to take a leap. So I think this is going to be a good opportunity for us to grow in that space.
Great. So I think that's wonderful conversations with you, Mr. Chitrabhanu. I would really like to thank Federal Bank and you for spending your valuable time out here, investing your time. Truly appreciate it. I hope this will be useful for the conversations moving forward. Thank you very much. And I think we are 1 minute ahead of the time. So thank you for your patience. Thank you, everyone.
Thank you. Thank you for this opportunity. Thank you.
Thank you, Mr. Chitrabhanu, Mr. Hitesh, for a very insightful session. And I'm sure we'll build up with the momentum that's been going after lunch, where we have our next session, which is focused on a very refreshing view on unified credit decisioning. We have as our esteemed speakers, Mr. Ashish Abraham, Head of Credit Analytics and Innovation at HDFC Bank. And along with him, we have the moderator as Ms. Ashwini Patil, Senior Vice President for Product Engineering. Ashish. Mr. Ashish has been with the bank for almost 2 decades, during which he's built up a strong team to support analytics-based decision-making across all segments of lending, from retail to SME and wholesale banking. While Ashwini has nearly 20 years of experience in software development, and she has played a key role in leading credit risk and analytics solution development for banks and financial institutions. So with this, let's put our hands together for this showstopper session with Mr. Ashish and Ms. Ashwini Patil. Over to you, Ashwini.
Thanks. Hi, good evening, everyone. Thanks for the long day that you've been spending with us. So, Ashish, I mean, this is the topic that we all have been waiting for. And we have heard this throughout the day. And this has been the talk, around credit decisioning. So what do you think when you think of the term of unified credit decisioning and how important it is in today's world?
Thanks, Ashwini, and good afternoon to everyone. Thank you to Lentra for giving me the opportunity to speak here about our experiences. So, very simply put, unified credit decisioning is that, when you meet the customer at one interface for the bank and the customer is looking for a certain product, they make some information available. how do you use that information to, offer the entire set of products that the bank has to the customer to choose from. And I didn't know, but Sumant has already rechristened this the Thali approach about a couple of sessions back, so we'll call that, by that name now. But so that's the thing. So it is simple in concept. It's actually quite difficult to pull off because at the back end, there are 2-3 different things you need to do. Usually, each product has a different journey. Each product has its own credit policy. It will have its own set of documentation requirements. But, to really give the customer the experience of instantly being able to see all the offers that he or she has, you just, you have to use that information that you have and, rewire whatever models there are, the rules and the policies so that, you can figure out what the customer's eligibility would be across, the range of products. So it's not easy to do and it requires a lot of, reworking of the traditional models, journeys that we have. And the second thing that, needs to be done is that you need to have a strong limit management system at the back because it's not just about showing the customer the range of offers, but if the customer does choose one, so for example, the customer has come, she's looking for an auto loan, and based on that information, you've figured out that the customer can also get a credit card of 3 lakhs, and she can take a CD loan of about 1 lakh for the next time she wants to upgrade her phone. But if the customer picks and chooses some of these products, then at the back end you have to change the limit also accordingly because otherwise you're going to bust the risk appetite that you have on the customer and end up over leveraging the customer. So that's what needs to be done at the back end. I think the concept is becoming quite powerful now because in the older times or even now actually, customers used to come and have CASA accounts with the bank. Banks used to leverage that information and figure out what all you can offer the customers, and all those offers are available for the customer to choose from on the net or mobile banking. But here we're talking about new to bank customers, right? So even for a new to bank customer, can you give that upgraded experience that having touched the bank even just once, she can still see the full bouquet of products that he or she may be eligible for. And what is helping is all the digital infrastructure that's coming in place, the DPI, etc. Where with digital information, it's a lot easier to rewire your models, etc. To be able to figure out what you can give the customer. And so that's picking up how what used to be ETB can now be also offered to NTB customers.
Yeah, so I think NTB customers, as we refer to them, is something that we all in the industry have been grappling around on how to convert them into ETB. So I think that pretty much answers what you just said. So there have been.
You should just clarify ETB and NTB is jargon, but ETB is existing to bank customers and NTB is new to bank customers.
I just assumed everyone knew it here. Okay, so what we've been also hearing about these trends, right? Embedded finance, open banking, banking as a service, all of these terms, and how do you see this space evolving today?
So, very simply put, banking as a service or embedded finance is when the bank makes its products available on a non-banking platform or application, right? It embeds its APIs in that journey, which doesn't belong to the bank. And the customer can then avail of that product without actually seeing, the bank at all. Simplest example would be the customers on an e-com platform, they want to buy something, and then, they need a loan to purchase that product. Can you embed your loan APIs right there so that the customer can take the loan, take the product and leave? That's the most, simplest instance, but it can be more, right? There could be LSPs which distribute, all sorts of financial products. So that's what I think, what we mean when we say banking as a service or embedded finance is. And it is a powerful concept, for all parties, for the non-bank application or platform. It can become a growth driver. It can become a source of revenue. It improves customer stickiness because you're being able to offer, the full range of products. And the advantage of working with a bank is that, you are going to be transmitting information up, back and forth. So with a bank, you have the security that the customer's data is going to be used responsibly. A bank that has great APIs is going to give a very smooth journey to the customer. That's very important because if the APIs don't work as you intend them to, you are ruining the customer's journey, even for the application of the platform, right? For the bank, this is a great concept because, again, coming back to the ETB, NTB concept, with ETB, you had a large base of customers to whom you could offer your products. With NTB, it's always one by one. One customer applies, you give the product. But with this, the bank could technically reach out to the entire, set of customers that application or platform has, right? And offer the full range of products, that it has. So it can help scale, growth for this. Open banking is a little different. It's not offering products through these APIs, but it's offering information through these APIs. And of course, in India, account aggregator is the most prevalent this thing. And it's really taken off. I think if you see where we were a couple of years back, the manner in which account aggregator is being used by, all the participants has scaled tremendously. A lot of digital journeys are being built on that. It is going through, some issues as you would expect, with so many participants across industries, but everybody is very committed to making it work. So with all of that, I think it'll click. And this also ties back, in a way to the unified credit decisioning that we spoke, because you use that data, you use the set of APIs, and you can offer the full bouquet of products. So I think they're, related in that way.
I mean, so we've been working with Ashish since, 8 years now. And so the next question is more around a topic that's very close to your heart that I know. And we just spoke about a lot of data being available. And to process this data, obviously, we need some kind of AI and ML to come into picture, right? So what is your take on the role that AI and ML is playing in algorithmic lending, as we call it?
So I'll break it into two, AI and ML, right? I think they're quite different. So ML is now quite prevalent now, I think, in lending, financial services, with machine learning, you can process a very large volume of data. You can, run at scale. You have a variety of techniques that you can use and, choose the best model for that particular option. And I think it's used, like I said, quite extensively, especially in retail lending. Once you go into the larger ticket size, SME or the corporate lending, then it becomes a little riskier because the data points are fewer. And then there is a tendency to maybe for the model to get overfitted on that data. So there, you may tend to use more linear or logistic regression and, technique and bring in a strong element of human oversight. But that's there. ML, I think more recently, ML is being used to get, structured data out of unstructured data. There are large parts of the country where, digital data is still not available. Customers give pictures of the bank statements, salary slips, and getting the information that you need out of that needs, a whole lot of ML libraries. So a lot of work is on. We've also done a lot of work there. So that's on ML. On AI, so that brings in a concept of cognitive understanding into the decision-making process. So I'll be frank. As far as credit acquisition goes, we are careful about how we use AI. There are a lot of things you can do to hasten. So AI is that instead of taking a month or two to build the models automatically learn and recalibrate, right? But actually, if you see, the longest time, the components that take the longest time to build a model is the data ingestion, is the data processing. And that, if you can use, and this is the kind of stuff that we are doing in the bank. We're building data pipelines, so that will automate the whole, data ingestion process. We use ML pipelines to, build a range of challenger models. And these can be used to check, whether the champion model, needs an upgrade or not. So we're doing all of that, but we do have, the stakeholders who are involved. reviewing, what the model output is. And so that's what we are doing. Of course, the new kid on the block, I think the previous session or 2 sessions back, they discussed is Gen AI, right? And that's changing a lot of things. In lending, so far, we think it's going to be more useful at the front end for customer interactions to make them more lifelike, right? And at the back end, we're exploring how we can use this to improve the coding, that happens. Again, reading large volumes of data as you need to do in SME and corporate banking. There's a lot of information on the internet. How do you take all of that, synthesize it, and bring it to one place? And again, getting structured data out of unstructured data. So that's where Gen AI, I think, is more prevalent in banking and financial services.
Today during the day, we also heard, the RBI spokesperson speak, Mr. Dash, and then that was followed by a few panel discussions where there was a point around, the restrictions or the concerns that RBI has around recalibration of such models, or with the Data Privacy Act being remodeled. So there are a lot of regulatory changes that are coming in this space, and we all know like HDFC Bank is one of the early adopters when it comes to regulations, right? So how much do you think such regulations are going to have an impact on whatever we are trying to do as, as something new or something different using the machine learning models that you just mentioned?
So I don't think I'd say that it's a challenge or it's a restriction. I think it's guardrails that, the regulator wants banks to have. And these are very important because if you don't have them, you could end up harming the bank or the customer, right? You can end up over-leveraging customers, giving, funds to the wrong person. So that's what it needs to be. Like you said, yes, we are always early adopters, right? We're very careful about how we do these things. In terms of data, whatever data we use, we try and ensure that we have the right consents in place. We are always knocking at our information security teams and the data privacy officers' door to make sure that, we have the right consents in place. So that's as far as data goes. In terms of being careful about how we build the models, it's critical. And the way we do it is basically, you have to have a whole lot of checks and balances in place at every step of the model building process, So whether it's at the data ingestion stage, garbage in, garbage out, so you have to make sure you've got the right data. You have to, segregate the data into the right cohorts, because if if there's a dominance of certain cohorts, then that could lead to bias in the model, which is one of the, primary concerns of AI/ML. When the variables are ready, you have to have a common sense check. Do these variables make sense? The final explanatory variables that are going into the model. And finally, even when the model is ready, overfitting is a key issue that you need to look out for. So, you have to check whether the model is overfitted on that data or even on that time period, because, things keep changing quite frequently. So those are, some of the checks and balances, that we've put in place. We have strong governance around the whole thing also. So we have an independent validation team, which does a completely independent oversight of the models that we build and the output that it puts out. We've built an AI/ML policy. There is an AI/ML council, and high materiality models are put up there. So overall, I think we have the right framework in place. Of course, the biggest room in the world is the room for improvement. So we know we will learn, but I think we've got that right. In terms of, I think you also mentioned, the frequency of how we do the recalibration of the models. So we do it with a certain set periodicity, which is, how often somebody would actually see how the model is performing. But, the advantage of using a lot of these automated data pipelines is that you can also continuously have the data streaming in, and you can set the right triggers and thresholds and say that, if the data moves out of the certain range, then that's a trigger that needs to be thrown out automatically, right? So everything need not, even on the validation side, you need not always depend upon people. you can, use tools and techniques such as this to make sure that, the models are doing what you intended them to do.
Yeah, I mean, just cognizant of the time, do you have any last, something for the audience also too?
Well, I mean, since this summit is hosted by Lentra, maybe a few words about our relationship with Lentra. So, I mean, in the context of what we've been speaking, I think as a bank, obviously, we do a lot of lending across products. We have a lot of tech partners that we work with. We use Lentra a lot for the kind of, small ticket, large volume, automated lending. We're doing CD and two-wheeler at scale. And in partnership with Lentra, we've managed to scale them up, quite significantly. Of course, there are learnings along the way. That's always happens when you're building these big businesses. So that's happened well. At the back end, we've using MLB, for our entire bureau orchestration and models. So that's been there. The Brex, which is the new generation product for building and deploying models. So we're migrating to that. Hopefully with that, a lot of our advanced model deployments can become a lot faster and quicker. So yeah, I think it's a journey we're walking along with Lentra. I'd like to say that, I think this is people at the end of the day that makes a difference. And what we've seen with Lentra is that whenever the bank really needs something to be fixed, is something we need to get right about the product. There's, the people at Lentra are always very willing to come and help out. So I think that works very well and, keeps bringing us back.
Yeah, so thank you so much for those kind words. And like any other tech, the tech solutions provider, we are absolutely proud to have HDFC Bank on our platform. And thank you so much for spending your time with us. And thanks everyone for listening this through.
Thank you. Thanks.
Thank you. So with this, it brings us to the end of the first half or the first half of the session. We'll be taking a break now till about, and we shall resume at 6 in the evening, where our evening recognition ceremony starts. Of course, prior to that, we will have, a quick chat with the MD Global Financial Services from IDC, and then a fireside chat with Georgie Rhodes, followed by the recognition ceremony. So thank you, everyone, and we'll see you back at 6.
Good evening, ladies and gentlemen. We are super excited to kick off the next phase of Lentra and CNBC TV18 presents Digital Lending Summit. Speaking of Lentra, Lentra empowers both banks and non-banking financial institutions, providing them with the tools to craft customized lending products and elevate customer experiences. Its API-driven modular architecture ensures flexibility and efficiency, while AI-powered solutions eradicate errors and inaccuracies, accelerating the go-to-market rate for its clients. As we commence the evening's proceedings, let's begin with a very warm welcome from none other than Chief Operating Officer of Lentra, Srihari Gokhale.
Good evening. It gives me great pleasure to welcome all of you to the awards ceremony of the Lentra Digital Lending Summit. May you live in interesting times is an old blessing, or some say a curse. I like to think of it as a blessing. In fact, I feel that all of us are truly blessed that we are not living just in interesting times, we are living in transformative times. Over the last 30 years, we have seen the mobile revolution, where the penetration of phones in India went from less than 1% to more than 80% today, and is growing very fast further. On the backs of that, the Reserve Bank of India and the Government of India have led the way in creating the India Stack, Jan Dhan, UPI, and all the related capabilities that had made India the world leader in digital payments. Honestly, who would have thought 10 years ago that India would be #1 in digital payments, real-time digital payments? And yet we are. Today, last year in fact, we did more digital real-time transactions than any other country in the world. In fact, the next 4 countries combined were less than us. Digital has been transforming the lending industry for the last several years. Availability of good credit bureau data has made it easier to underwrite loans for a large population of India. This didn't exist about 20 years ago, not so easily available. Popularity of digital wallets have made credit and debit transactions available for underwriting loans to even the smallest of businesses. Even the neighborhood chai shop has a Paytm or Google Pay or Pay, some account through which he or she can show those transactions and get access to formal credit. And even in agriculture, we heard about the cattle loans and Kisan Credit Card and several new initiatives that are coming in to make credit readily available at the agriculture level, rural level. We are truly experiencing transformative times. Lentra has been enabling our clients to lead the way in this for the last several years, ever since we started in 2019. Over this time, we have processed $30 billion in loans, 11 of which is retail, and 19 in business loans. Some of the peak volumes we have experienced, just last month, we processed 2 million loan applications in just 1 week, the Diwali week. And the cattle loan that was talked about in G20, we are very proud that that was enabled by Lentra, from application on a mobile to disbursement in 10 minutes. The Lentra Lending Summit is really to get industry leaders to come together and share their insights as we go through this transformation. We've had several incredible sessions since the morning, starting with Shresa George from BCG, sharing the BCG insights on trends globally as well as in India, followed by the Executive Director of Reserve Bank of India, Mr. Jayant Das, and then the Chairman of State Bank of India, Mr. Dinesh Khara.
several panel discussions from industry leaders, breakout sessions, fireside chats, as well as demos. We have two more very interesting things planned for you this evening before we go into the award ceremony. Mr. Cyrus Daruwala, Global Managing Director, Financial Services of IDC, will be speaking to us next, followed by a fireside chat with Jonty Rhodes. Finally, we'll go into the awards. The awards are meant to spotlight, highlight some of the key accomplishments, some things being done well, highlight and share and recognize some of the leaders. So before I hand over to our guests to talk to us, share their expertise on global trends, I want to thank all of you. I want to thank our clients, our partners, our investors, and all our participants for making this Lentra Digital Lending Summit successful. Thank you.
Thank you, Mr. Gokhale, for kickstarting the evening with that note of gratitude as well as welcome. Ladies and gentlemen, as we continue our journey through the Lentra CNBC TV18 Lending Summit, we have a highly anticipated and exciting session that promises to unravel insights into the future. And as Sir said, our next speaker is a seasoned expert in the financial services landscape and a thought leader in the industry. Please put your hands together and welcome Cyrus Daruwala, Managing Director of Global Financial Services at IDC, who will be shedding light on the India Growth Story 2024.
Thank you. Thank you very much. Thank you. No matter how many times you go through this, when somebody's introducing you, you feel a little awkward sitting there. This is home, so it's like homecoming for me. And I'm very thankful to Lentra for getting me back to Mumbai. I'm based out of Singapore. And this growth story, India growth story that I'm going to talk about, is not just an India growth story. I'd like to bring it to you. I'd like to talk about what is it that you see yourself doing along with this growth. Each one of you at a very different, I can say, maturity. Some just starting your job. Some are seasoned CIOs, CEOs, heads of businesses. What is it that you see yourself doing, and what is it that you're going to achieve along with this growth story? Because there are some mind-boggling numbers coming our way. I don't want to repeat majority of the numbers that we have actually been hearing throughout the day. You've heard about how much India is showing up on the global radar. And I stand here as a subsidiary of Blackstone. IDC and IDG Capital is owned by Blackstone. We are $1 trillion of assets under management. A very large chunk of that trillion is in real estate, and a very large chunk of that is here in India. Blackstone, as you know, is a very avid investor, even in various technology decisions. And India's got both. It's got real growth, by which I mean manufacturing and agriculture. It's a huge untapped market. India has growth around technology, clearly. But India also has growth around consumers. And very little was spoken today. And maybe I'll shed some data points with you around the consumer growth story. But again, while you're listening to those data points, I would like you to ask yourself, what do you see yourself doing, whether in the same organization or a different organization, over the next 3 to 5 years? What legacy are you going to leave behind? What is it that you would achieve, and in what field? In consumers, in data, in sales and marketing, and something to do with that growth story. Now, the entire morning we heard about numbers and India growth numbers. Here's another number that we missed out on. In 2022, India got $85 billion worth of foreign direct investments. We were just 12 billion. Blackstone was just 12 billion. But you had government of Singapore, we had the government of Qatar, we had the sovereign funds, we had just about everybody that deals with India investing in India. 85 billion was just foreign direct investments. And I'm not talking about that funny money that comes from Dubai or the funny money that comes from Mauritius. Mauritius is so poor they can't feed themselves. Mauritius comes up with 20 billion in India, and we are like, what? Well, it's actually Indian money coming from Mauritius. But let's not go there. And of course, the UAE, you can say it's India-linked money coming back to India. But nevertheless, it's $85 billion. When we close 2023, it's going to be a little over 100 billion that has made its way into India. Now, if you peel the onion a little bit, you will find out that a huge amount of investments went into agriculture for the very first time. Very few people have been focusing. Remember, India used to be the rice bowl of the world, but we lost it when people start selling farms and move away, and when people start, moving to cities for jobs. It begs the question, there's 8.2 billion people. Who feeds us? We are all sitting here very well off. Have you thought of the supply chain so as to who feeds us? Where are these farms and where are these large-scale agricultural outputs? And suddenly the growth story emerges in Argentina, in Mauritius, in Thailand. By the way, Thailand is now beating India when it comes to rice production. I know that because I have a farm in Thailand, and I compete with some of the Indian farmers, and I beat them hands down because of the technology that we have in Thailand. You're now starting to see Bangladesh beat India left, right, and center when it comes to garment manufacturing. So don't be under the delusion that this growth story will continue. We will be the #3 economy, according to all of the forecasts, in the next 3 to 5 years. That's true. But that's the sheer momentum of 1.4 billion people taking us there. Again, I ask you, during this growth, where are you? What creativity, what innovation, what sliver of work that you're doing right now will put you into this global map? Please think along those terms. You know how Parsis don't like working for someone, and I was one of those breeds. So, I had to do something on my own, and here we are. And much like Lentra, we invested in technology startup companies, and they're doing exceptionally well. That's because I believe that there was a gap in the market. And I'm urging you to find your gap in your company or in this growth story of India. Let's bring it back to India. 120 million people, or 12 crore people, are employed by SMEs. And that number is only growing. SMEs and MSMEs are 30% of India's GDP, which means 30% of India depends on SMEs. And these people are growing at an exponential pace. If you don't believe the real rags to riches story, I urge you to look up a vada pav wala in my own town in Pune. His name is Garden Vada Pav, or JJ Vada Pav, and he's actually an internet sensation. You would discount that as an SME, like Cyrus was talking about a vada pav wala. That guy has a turnover of 100 crores. A vada pav owner stall that started off in Pune, close to my Parsi fire temple, has the turnover of 100 crores. You could have discounted him and moved on, but imagine the amount of banking attention that they have, and the loans, and the entire ecosystem, and the whole employment creativity and the supply chain that this one person supports. And suddenly your eyes open up and saying, SMEs are not to be discounted because they are the next big giants that will come our way. Again, it begs the question, what can you do, or what can I do with the SME growth story of India? And then comes, of course, the tech investments, which you're all very familiar with. And I'm not saying tech investments just of Google and Amazon and AWS and Meta, and that is also coming to India in very large proportions. But I'm talking about startups such as Lentra. And though they are 4 or 5 years old, they are a compelling startup that's becoming a so-called medium enterprise, which will, God willing, become, a billion-dollar conglomerate very soon. And there are lots of investments going there into this other emerging tech. And every single one of these success stories, there are 75 failures that you don't hear of. So don't be bedazzled with the startup stories either, and leave your daytime jobs and suddenly rush into a startup. Because for every one that succeeds, there are 75 that fail. Don't be bedazzled by what we call the one-trick pony. Now, wearing the IDC hat, why do I stand before you blatantly endorsing that we have never seen a more integrated, a more robust, and a more secure end-to-end platform than Lentra? There are 3 or 4 or 5 other companies who do what they do, but they are in the category of what we call the one-trick pony. The one-trick pony, I do credit scoring and I do it really well. Good for you. I do lending and I do that really well. I do analytics and I do it really well. None of this matters to the bank because I don't see it that way. I need this whole integrated framework that I can plug and play. That makes Lentra a lot more compelling as an analyst, as an investor maybe, and even as somebody that's recommending that to an Aditya Birla or a HDFC or a State Bank of India. And finally, what will we be doing with this whole growth story? This is where the rubber hits the road. The India growth story is not to give you numbers that may or may not be relevant. If every single one of you is in a financial institution or a non-bank financial institution, it falls upon you to carve out which segment of this growth story will you be pursuing. Will it be construction and infrastructure? Will it be agriculture and agro-base? Will it be education, which is very neglected in India and has huge upside potential? Will it be healthcare and pharma, which is also very rapidly emerging, and we, as a private equity, are investing very heavily into that as well. So these industries all have one thing in common, you and I. The worker, the community, the executive that constantly needs access to capital. Again, that brings to the front the company that's hosting us here, Lentra. Behind growth stories is the need for capital. Behind the need for capital is the ability to identify and disperse that capital to the right people with the right decision. So I'd leave you with what I would call a new terminology, AIDA. A-I-D-D-A. What's your AIDA score? AI standing for artificial intelligence. So the ability to harness Gen AI, machine learning, or some degree of artificial intelligence to understand the customer segment. The D stands for documentation or enterprise content management. a very, very clunky and pivotal part of lending. And the DA stands for Decisioning Analytics, and hence the word AIDA. So the next time you start looking at your lending capabilities, how do you identify this large swath of untapped customers? They would have a decision, and we saw at the launch and the product launch, they would have products to cater to that. You would go towards your enterprise content and documentation management, the most cumbersome part and the most difficult part and the most disparate part. And that, again, they have a solution for. And then the decision analytics, which is, again, the beating heart of what they do, the ability to identify, score, create a policy, disperse the policy, do the collection, reconciliate the data, and you've got a fulfillment. And it's in near real time. It's very easy to implement. Why do I know that? Because we've seen it with our friends right here. You will hear it from people who are getting awards. And we as an analyst community have been tracking this magical journey of Lentra for the last year or so. So again, like I said, not only were we very bullish on India, when we got the call and we said, why don't you show up and we have a big meeting, I'm like, I'm there, and here I am. So I'll conclude by saying, if you're a part of that growth story, I urge all of you, no matter which industry that you represent or what your role is, to try and identify what is it that I'm going to do here in this company or another company to ride that growth story. Secondly, I'd like you to understand which sliver of this growth story are you going to be a part of. There is no shame in going back to farming. I urge you to look at that, because as people start becoming more affluent, the need for food and the supply for food is phenomenal. And our closest big competitor, China, because they don't have the food source, they are buying out countries. Did you know that China owns 70% of Madagascar? They own 70% of Madagascar. Their food is well hedged over the next 10 years. Even if they stop producing, there is enough food being produced in Madagascar that China will be fed. I'm sure you know that China owns a very large port in Pakistan. China owns a huge infrastructure and port and distribution center in Sri Lanka, and so on and so forth. Why they're doing it? To hedge themselves and the demand for 1.4 billion people, because China is just not producing that much food source. India is soon going to be there. So again, प्याज और दाल आटे का भाव बढ़ने वाला है, and we want to be in the right place, making sure that we are in that right SME segment as well. So India is growing at a big clip. SMEs are the engine for growth. You are a financial institution or a technology company that's servicing this growth story, so you're clearly in the right place with the right partners to be on your side. So I wish you all super success in whatever your growth story. I wish you all a fantastic event, and a congratulations to the award winners that are going to be in front of you. Thank you again. Bye.
Thank you, sir. Thank you so much for that wonderful address. Ladies and gentlemen, prepare yourself now for an exciting session ahead of us as we step into a fireside chat featuring a true icon of the cricketing world. It is an absolute pleasure to introduce a man whose mere presence on the field was poetry in motion. Please join me in extending a very warm welcome to none other than Jonty Rhodes, in conversation with Anand Narasimhan, Managing Editor of Special Projects and Senior Anchor at CNN News 18. Over to you, gentlemen.
For Jaunty Rhodes to say his hamstring's gone, we still can't believe it, isn't it, ladies and gentlemen? Namaste, Jai Hind, good to have you all here. Big round of applause, Jaunty.
Thank you.
And see the fun part. I'm the anchor dressed like a sports person. He's the sports person dressed like an anchor today. But here at this summit, my first question to you is, you said if you don't go for the catch, you never know you can catch it. Have you always done that? Has that been a philosophy for you?
Good evening, everybody. Anand, thank you. Hi, everybody. If you don't go, you'll never know. It was certainly a mantra for me as a cricket player. And, you know, I think growing up, what I was fortunate to have was a father who was a school principal and also a sports master. And the one lesson that and I'll tell you that story one day when no one else is listening, he literally drummed into us three boys, his sons, that he said, you know, if you're going to practice, people work hard everywhere, whether it's in sport or industry, everybody's working hard. He says, but you can go to practice and practice for 2 hours and achieve very little. Or you can go down and practice like it's a match situation. Because he said, people will tell you throughout your career that it's practice that's making perfect. But he said, nay, that's only half the story. Because it's perfect practice that makes perfect. So I was, yes, going for the ball at practice, because what you are at practice, the day before, the day before, the day before, a part of the team culture, a part of your culture, that is a habit that then when the game starts, you're already in the mode of going for the ball regardless of what the outcome is going to be. So I'm really grateful to my father for that, because my career was probably highlighted by 2 or 3 photographs as opposed to 3 or 4 great knocks or innings that saved the country from real defeat. And just that philosophy of if you don't go, you'll never know, it was certainly something that was started as a young schoolboy thanks to my father.
See, the first time you went for the catch, because if you don't go, you won't know. But then when you started seeing those photographs, you know, if it's at backward point, then it cannot pass Jaunty Rhodes. Did that pressure then, pressure of performance, pressure of delivery then act on you? Did it then suddenly start weighing in on you, saying, I can't allow the ball to pass? Did that happen? Because that's what happens. Everybody in our corporate careers or otherwise, like in sport, you first start doing things for the love of it, because you want to do it. You just enjoy it. And when people realize you're so good at it, then the burden of expectations weighs in on your shoulders. Did that happen with you?
Well, the amazing thing about my cricketing career was that fielding wasn't really my job. You know, I was supposed to be a batter. I had a very average for a long part of my career. I mean, I ended on a decent average of 35. But for a long part of my cricketing career, I was between 26 and 28, but saving 20 in the fields. Everybody said, no, you'll be fine, you'll be fine. So the pressure only came really when I was batting, because there you get a chance. You really only get one opportunity. Once you're out, you were done. There was no referral. You were out when the umpire's finger was up. So when it came to fielding, amazingly enough, it was something that I'd done growing up as a young boy in South Africa. I was diving around the field. I was recognized by my school masters as a good fielder. So it wasn't because I have a commerce and a marketing degree, realizing that, hey, everybody else is just fielding like this. Or asking the ball boy, throw the ball back, and there's a gap in the market, so let me become a good fielder. I was doing that as a youngster. So no, I didn't feel like it was my main job to be the fielder and therefore under pressure. I mean, I was rated as the #1 fielder in the world. There was only one fielder. It's easy to be #1 when there's nobody else in the market. So no pressure whatsoever, because as I demonstrated, that was kind of fielding in my generation when I started. And I really was somebody who loved fielding and wanted to field. So yes, if I dropped a catch, if I missed the ball, because if you don't go, you'll never know, I would be a little bit upset. But then my captains in Kepler Wessels and Hansi Cronje, especially a good friend of mine, would just come put an arm around me and just say, Jaunty, we need you. The team needs you to be at your best game. Ramsey, it'll come. Don't worry. You know, just let that one go. So being in the field was something that I loved to do, and I never felt any pressure because it really was just a passion of mine as opposed to my job.
I asked you this question because I remember somebody in commentary said John T had scored just about your career average, 35 runs in the match, but he'd saved about 40 runs in the field. So his contribution is about 75 runs. So you saved more runs on the field, and that was also seen as a contribution. So you changed the dynamic of this third angle of the game, third aspect of the game, batting, bowling, and fielding. That's what you're credited with. Did you ever realize, you said I was the only fielder, but you made fielding a dynamic that became an important dimension of the game. Did you ever realize this is what you've done?
No, not really. I think for a while I felt a bit like the father of fielding. Now I feel like the grandfather of fielding. So and I know what my dad feels like being a grandfather. But throughout my career, right at the start, 1992, I dived into the stumps, and again, a great picture of me running out in Zimam launched my career. But it was only up until the IPL, can I mention, the cricket T20 tournament started in India, that fielding suddenly became a profession, and players had to be good fielders, because every team had 2 or 3 good fielders, but not a fielding coach. So those were players with natural ability. Mohammad Kaif was a great fielder. In that era, Yuvraj was a really good fielder too, but you didn't have a coach that was specifically working on that skill set. So people were talking about it for a really long time, from 1992, that fielding, wow, it can make a difference, it can turn a game. But it was only really implemented quite strongly after the IPL started in 2008. So there was quite a long transition. So for me to look back, I'd left the game. I worked for a bank in South Africa. I'd resigned, retired from cricket. And that was it. My sort of cricket career was done and dusted because there was no fielding coach. If you wanted to coach, you coached your country and that was it. Nothing else available. And it's been interesting looking back because I've seen how much fielding has changed. And that's the amazing thing. Whatever industry you're in, there is so much change happening around you. And it's great to have been a part of that transition, although I think what I started has certainly been taken very much to the next level.
How much did leadership, that means a good leader, you said, you had Hansi Cronje or Kepler Wessels put an arm around your shoulder and say, listen, this is what we want you to do. How much does having a good captain, a good leader, matter to you as a performer? How important is that? And when you got into a leadership role or as a mentorship or a coaching role, how much did that matter to you as to how you manage people?
I think it's a really interesting question, Anand, because management and leadership, we always think it's kind of CEOs or anybody in leadership positions in a business, but you don't have to be the captain to be a leader within a group or an organization. And I think that was the key for me as a senior player in the South African team under Hansi Cronje. Kepler Wessels was a totally different story. My dad, the school principal, that was like having, Kepler Wessels like having my dad as the captain. He not only told you what to do, but how to do it. Whereas with Hansi, it was always a discussion. But in Kepler's defense, he had played for Australia for 10 years. Then he had immigrated, then came back to South Africa. The rest of the team had no international experience whatsoever. There were senior players in the side, the Dave Richardsons, the Peter Kirstens, Alan Donald had played in Warwickshire, but no international cricket. So Kepler felt he had to take control. But his issue was he didn't know when to release it. So after 2 seasons, 3 years, suddenly you've got players with 30, 40 internationals under the belt. And they are, we had a farmer, and a lawyer, 2 teachers, 4 university students. So he had people in his organization that he could have then empowered to make their own decisions. But he didn't know how to release that, having started like it. And that was the difference with Hansi Cronje. Hansi really understood each player and what made them tick. Some guys, like me, needed an arm around the shoulder. Some other guys needed a kick in the backside just to, get them going again. And that was so important because without that sort of understanding of each person as unique and the skills that you bring. That's the beauty of a team, is that we have this dynamic of, can you imagine a team of 11 John T. Rhodeses? It would have been really noisy, very busy in the field, but man, we would have been 5 down in the first 4 overs and then decent in the middle overs. We couldn't bowl at all. So that's a great thing about a team. And the key, I mean, you always hear that old scenario about not only having the right people on the bus, but on the right seat on the bus. So it's so important being able to identify that. And I think the ownership, if you allow that from a leadership point of view, if you allow players to make their own, or be a part, not make their own, you want them to make your own decision. The ball comes at 140 kilometers an hour. You can't ask the captain, what should I do? It's too late. So you need to be able to take ownership. And players take ownership when they are supported by the captain and by the management. And that's been the interesting thing, is that now as a coach, you know, and I talk about if you don't go, you'll never know. That's still a mantra of mine as a fielding coach. But for me, the most important thing, what we work on now, is the process and not the outcome. Because in a T20 game, I mean, we play during that IPL period, there's 50-odd games in a very short space of time. You play, you practice, you play, you travel again now. And you can do everything right and not get the outcome or the result that you want. So as a coaching staff, we support the process. But the interesting thing is that when you allow the players to take ownership, you also require a degree of honesty from them. And that honesty is not between me and the player, it's between the player and himself. Because if they can make excuses, or Jonty said we must do it this way, or the captain said we must do it that way, it's quite easy to not take responsibility. And mistakes are experience. Success is experience. You know, we learn from both. We learn from mistakes and we learn from success. So I think from a point of view where what I've changed slightly as a coach is you really reinforce the process. And just that honesty that, sure, sometimes we might get the process wrong and we've got to dial it down a bit and re-look at, because you can't just keep doing the same thing when you're failing and think it's going to happen, it's going to happen. You have to have a real deep look at it, but support the players in taking ownership for that and encourage them. You put in the effort, you look into process, the outcome, we will support whatever happens.
Did you ever think you'll make a good captain? Did you ever want to captain South Africa?
Never, ever, never, ever. You know, it was interesting. I captained my state team for 6 matches, I think, 6 first-class matches, and eventually I had people abusing me on the side of the field on day 3 of a 4-day match. And I just said, please, man, you got children here sitting next to you. That language is atrocious. I can hear you. They can hear you. Wait until the end of the result. When we lose on day 4, and in fact, we won the game, if we lose on day 4, then shout at me as much as you want. But, I paid for my ticket. I can say what I want. So I'm a bit sensitive in that way. So from a captaincy point of view, making the tough calls, I've never wanted to be a leader. I think that's probably a really one of the hardest jobs as management in an organization, is making those tough calls that, you know, you either advancing people up on a career or on a ladder, or you taking them down a peg or two. So those sort of decisions, it's never sat comfortably with me. I've always wanted to be a team player as opposed to be that person making the final decision.
But let me ask you, when you look at teams, and you've coached a lot of teams as a fielding coach, you've mentored a lot of people, can you spot leaders? There are those who would come and say, hey, I want to be captain. I want to do this. There are others who don't come out and say, and there'll be those like you or me who'd say, listen, I don't want to be leader. I'm happy being part of the team. Give me space to do my thing. I'll do my thing and I'll deliver for the team. I'll step up for the team. Have you ever been able to spot that's the person? That's the person who should captain the side. That's the right leader, manager.
Well, the interesting thing is that the team requires more than just a captain. Because as I said, if the captain's a batter and they're sitting on the side of the field, there's decisions that you have to make as a partnership while you're batting. If you're bowling, and you're the bowler standing at the end of your run-up, and you have to make, with clarity, a decision, you can't seek the captain's guidance. I mean, he can set you a field, you can discuss a plan, but you could change your mind halfway through your run-up. Yeah. You know, and then you can't ask. So a lead or a captain is an important, at the toss, sure, you make decisions and all those things, but having leaders within your organization requires, that's why you need a good captain, because that good captain needs to delegate or allow the authority to kind of permeate throughout the organization. Because if it's strictly a top-down management, and it's a good leader, you could have a great captain, great cricket brain, good cricket skills, good understanding of how to read the game, but if you can't read your people, you're in a lot of trouble. So I'm not looking as it's difficult to have the perfect captain because it does require a cricket brain. We know that. You can't just, okay, let's see if this works. You certainly need cricket nuance, but you really need a high degree of people skills. So finding the perfect captain, very difficult to say. I'm looking more for leaders. So I'm looking for people in the field that are going to add value to the other people, not just perform their role, but support others in allowing them to play to the best of their ability. So, if you've got a team full of leaders, it's kind of what any captain wants. You want a self-motivated team. You don't want to have the captain, sure, you make the final decisions, the final calls, but players, if they can captain their own areas, you then have a consistent performance, not just one game, but over a tournament and over a longer period of time from a business point of view.
All right, let's change track a little bit. A question I've always wanted to ask you, and I think an admission I've wanted to make. We are all largely Indian citizens here. Some of us may know people who are named after Bharat or Bharat, but nobody has named their children India after the country. So I think one of the biggest tributes that you've given to us as Indians is to name your daughter India. Now let me ask you, why is India so special to you? Why did you do that?
Yeah. How much time? Okay, clock is ticking. Well, from my perspective, to take the clock back, I grew up in apartheid-era South Africa. So that was a white minority government where apartheid literally translates keeping people separate, apart, according to the color of their skin. So if you weren't white, you were not right. Everything else was the other side of right. And I grew up like that. I went to an all-boys school from age 8 to 13. There were 600 white boys. High school from 13 to 18, 1,000 white boys. We played against white boys. Cricket, tennis, hockey, football, and that was it. And in an organized, or in a country like that, where everybody spoke the same, we thought the same, there was no opportunity to grow as an individual because everything was exactly the same. All the experiences were very, very similar. So for me, coming to India, and I've borrowed a motorbike every time I come here. Because you can fly over India at 30,000 feet. You don't see India. You smell it sometimes on the ground, for sure, but you experience India on two wheels. Because you go to the airport, the team ground in an AC bus with security in front, security behind. But when you ride out on a bike and there's no security, good luck to you. But it was amazing because I've certainly learned such a valuable lesson here. And the diversity in India is spoken about and it's celebrated across states, but within states, from dialogue or dialect to recipes and the way food is prepared. It's incredible. And I've really understood the fact that the more I learn about other people, the more I learn about myself. So when I tour India, I'm learning the diversity across this country means that it's like being in 10 or 15 different countries at the same time. So, on one stamp on the passport, I can visit many different countries in the space of 10 weeks. So I think that has been, and we're all on this journey. I mean, none of us have reached the destination yet. It's quite scary. My father was in hospital yesterday. So, there's a final destination that not all of us really want to get there in a hurry, but it's a case of going wherever you are on the journey, there are so many life lessons. And because of that segregated upbringing, it's been an incredible journey for me to be a part of this growth of myself as a human, not as a cricket coach, but just as a person that I've really appreciated in this great country.
You actually made Goa your home. India and Nathan are going to school there. You were just telling me. How are they liking it?
Oh, India and Nathan are loving living in Goa. And my wife is too. I mean, she's a yoga teacher, an architect, practiced Vedanta philosophy for a long time. So, so this connect, the reason why we called India. Both kids were born in Mumbai, India and Nathan. So they've spent time in India and have fitted into life in Goa from day one. Because we just lived in Sweden for 2.5 years. Really tough. I mean, this time of the year, it's dark. 2:30 in the afternoon, it's dark. The kids at school were speaking Swedish, no English. And unless you were keen on your snowboard, it was quite difficult to get anywhere or do anything. Whereas in India now, from day one. So we were a bit nervous about uprooting our children again. but we really felt like we were bringing them home in a sense. And on day one, they went to school. And Nathan is at the stage where he's making paper aeroplanes. But it's not like the simple ones I used to make. Like, hey, let me show you. No, Dad, hold on. It's like 15 minutes of fold back, fold this, fold that. And then his plane flies forever. And on the first day that he went to school, they crafted all day out of paper. And I think he probably used half a plantation, which I'm a bit embarrassed about. Luckily, this is not the sustainability conference, no. So we're fine, yeah. But he must have used a pack of that, that sort of printer of paper. And he just said, Dad, that was the best day ever of school. So day one, they were in it. I mean, they don't wear shoes, they don't wear a uniform. That sand in Goa is red. So he comes back from the feet up to the knees, he's red. He's got very red legs and very red feet, but he and India are loving Goa.
तो आपसे अच्छी हिंदी बोलते हैं? नहीं. Okay, so you bought a place in Goa. Did you buy it?
Rented a place in Goa.
You haven't bought it yet.
I'm a cricket coach, not a cricket player. No one's lending me money yet. That's why I'm at the summit.
I was just about to come to your credit score. So are you keeping an eye on your credit score? Yeah, do you get these pop-ups saying you got a pre-approved loan?
No, but I tell you, when I ride past the coconut seller and I pull out my phone pay or my Paytm, he's a bit anxious because, it is amazing. I mean, it really is amazing what I've seen changes as a cricket player. Since 1993 was the first time. I mean, you've all seen the same changes. It's been amazing. But no, my credit score at this stage, it still says coach, not player. So I'm working on it.
No, I'm asking you because our sponsors at this event do the back end of all the lending. So then the next time you have an instant approval on a loan and you click and it's all processed in 10 minutes. So they are the ones who are making sure that you're in debt.
I've got your number, Anant.
All right. Now, let me also ask you, do you see India changing? Not your daughter, the country. And is it changing for the right reasons? There's a lot of noise that's happening. There is a lot of story. We are going and telling the story to the world. We're the third largest economy. But you're somebody who likes to ride around the country. So do you see that change on ground?
I see a great deal of change. And, and I think with change, you're going to have, it depends on your perspective. Because the amazing things, you can see incredible change, two different people, two different outlooks, whether they be political or upbringing. And the perspective is very different. My perspective, as I said, is somebody who's been here as a visitor for a very, very long time, traveled in and out of India, and kind of the service in India has always been something that us cricket players have been blown away by, staying in 5-star hotels. So I've never really lived in India on the ground. And this has been, my wife was a bit anxious. She's seen Nariman Point, Juhu Beach, and Nariman Point Ocean. So I told her, let's go live in Agonda, in Goa. Beach will be amazing. She's gone, no chance, not getting in the ocean here. And she's been really, really blown away. So I just think from a point of view, I mean, my coconut seller example, I landed the night of demonetization in India. I mean, I flew overnight and landed at 8 a.m. And I think cutoff was midnight. They banned, and I had of course, everyone had a wallet full of notes in those days. So I landed in India and just literally left them there. So from a change perspective, there has been many great changes. And I think what's exciting for me is that now most of my LinkedIn connection requests are CEO and founder, co-founder, CEO. And it's amazing because I'm now starting again in business, or for the first time in business. I mean, I worked in a bank. And I think what you see here is a belief in the country, one, or the economy of the country and the stability of the country. And then secondly, the belief in a system. We don't always, as South Africans, understand that system, I must be honest, especially when you're on a motorbike and there are people coming at you. But there is a system, and it's incredible to see the confidence in that system. And I think that's always so important. South Africa, we don't have the confidence. We have a system, we have an infrastructure, but no confidence. And it's incredible, that perspective, because, I mean, often that is, we talk about change and innovation, and people think innovation has to be some new gadget, like this thing on my finger that's telling me my heart is racing or it's relaxed, or or the watch or the steps that I'm taking. And innovation has got to be something brand spanking new that no one's seen or heard of before. But often innovation is just changing your outlook, doing something slightly differently. And that perspective is so important, because I think India is a land not just of opportunity, but of innovation, because people are prepared to look at things at a slightly different viewpoint.
So let me ask you from a sports perspective. You're somebody who played multiple sport. You played hockey and you played 2-3 other sports, if I remember correctly. Do you see us as a nation becoming a far more sporting nation, a sport-inclined nation, or a fitness-inclined nation? In the last 10-15 years that you've been here.
You guys have got more Olympic medals than us. Thank you, Mr. Chopra. But I went to one of the schools in Goa, in Konkan, quite close to us, to meet, because it's a government-funded school, and they don't have any cricket facilities. But wow, kabaddi and kho-kho. These kids are playing in the dirt, and they've got speed and they've got pace. And I think the key for me is that there was, just because of the IPL platform, there was nothing else for youngsters to showcase their skills. And now you have your sports academies or institutes of sport in India. You have various different cricket leagues. You have different kabaddi leagues. You have so many different options from a sport perspective. And it's also started with Khelo India. I mean, India is moving, because that really is what sport should be about at junior level. Because some of your best cricket players are probably not even getting the opportunity to play cricket, or your best football players are not getting the opportunity to play football yet. But the fact that there's more and more focus on youngsters participating, I think India is on the right track. Are there any Australians in the audience? No, okay, we're fine. Because I think they have a slightly different attitude to ours, and I say ours up here on the stage, is that they want their kids to participate, but play to win. I'm looking for my kids to play and participate at 4 different sports if they can. But providing those opportunities are key to making sure that India goes, with the population that it has, access to facilities, encouragement, access for coaches to grow their game. I think India is certainly on the right trajectory when it comes to a sporting nation, not just a cricketing nation.
Is there anything on your bucket list that you want to do?
Well, in India, wherever. Well, it's interesting because
we all have bucket lists.
Yeah.
We all have bucket lists, and I'm sure you have one too. So one that you really want to tick.
Yeah, I want to make lots of money so I can retire and go live on the beach. Oh no, I'm there already. I'm on the beach already. So
you made lots of money already. You're still making
I've been there. Yeah. So I think every time I ride a bike here, I'm always told, oh, you got to go to Ladakh. Ladakh, you have to go a 10-day bike ride. And that's one thing that I haven't done, because even though I'm good at dodging traffic, I think my biking skills are not yet good enough. But to tell my wife I'm going 10 days to Ladakh on a motorbike, that's my bucket list, to get her to agree. Not saying I'll get there and back safely, because I probably won't with my skills, but just to get her to agree, that's on my bucket list for sure.
Not so. Who's been your biggest influence? One moment, one person that you believe changed your life for the better?
Well, I've spoken quite a bit about my father, his influence. So obviously, that was a big part. Hansi Cronje as a friend, even though he obviously went through a real tough time with bookmakers, and the way we know how his career ended, and then his life ended in a very tragic aeroplane accident. So Hansi was a big part of what I did and the enjoyment I had at cricket. But I had a school hockey coach, of all things, where at a rugby school, so a school of 1,000 boys at the high school, I had epilepsy as a youngster. Yes. So I wasn't allowed to play rugby because it's a very physical contact sport. So I would get concussed often. And in the whole school of 1,000 boys, there were only 60 boys who played hockey through all age groups. And this coach just thought, we're getting whipped every week. So what I'm going to do is I'm going to build a team for the future. So he has this 14-year-old kid. I like his spunk and his heart, and he's got good speed. I'll put him in the first team. So he supported me as a 14-year-old hockey player, played state hockey that same year at age 14, and 3 years of South African schools. So he was a very strict disciplinarian, but he was also somebody that made us work really hard as a team. So he felt that we didn't have the skill set, but we would certainly have the physical and fitness above other sides. And when you work hard together as a team, the results come because you've been through a lot together. Because nothing in life is easy. I mean, you basically choose your hard. You know, it's hard to be fit, but it's hard not to be fit. Choose your hard. You know, what do you want to achieve in that? And that first team hockey coach certainly taught me a lot about discipline. I said my father beat it into us kids, but with regards to sporting discipline, that first team hockey coach for 4 years, he was my mentor on how I approached my sporting career.
We're approaching time up, so I'm going to sneak this final question in. How do you deal with failure? I'm sure you went through your ups and downs. So how do you deal with failure?
So firstly, you spoke about the process. So because up and down from a player perspective and a coach point of view in a cricketing tournament, you've got to recover really fast. The matches come thick and fast. And if you're up and down emotionally, your performance is probably going to copy that be sort of copy and paste. So focus on the process, focus on that. What are we doing right? But then the most important thing, and I kind of always go back to the way the Sri Lankans played in 1996 at that World Cup with Sanath and Ramesh Kalawutarana. Yeah. They sent out these youngsters. If you see the ball, tuck, you hit it. Doesn't matter if it goes there or there for 6. We don't care what it looks like. But that freedom to fail was so important. And that's what I try and give now I'm talking specifically around the fielding. When I send players out to field, we've worked hard at practice, and I just say, guys, if that's exactly that. If you don't go, you'll never know. But players don't want to go for the ball and drop it or miss it if the coach then gives them a hard time or berates them for missing the opportunity. You know, I'll berate them if they stand there and the ball goes past. So that freedom to fail is vital if you're going to be successful. You know, we don't go out there to fail, for sure. Again, look at the process. Was it right? Look at technique, because there's technique to catching and diving and throwing. If there's something we fix, we fix. But if not, they need to play with that freedom that if there's failure, nobody's coming down on them like a ton of bricks. Freedom to fail is vital if you want to be successful.
If you don't go, you never know, and always go with the freedom to fail. Have that. Ladies and gentlemen, Johnny Rhodes.
Thank you. Thanks, Anand.
Thank you, Mr. Rhodes. Thank you, Anand. Thank you so much. Mr. Rhodes, can I please have you stay back on the stage, please? All right. I would also like to invite D. Venkatesh, CEO of Lentra, to join Mr. John T. Rhodes for the recognition ceremony. Ladies and gentlemen, we are now entering the recognition ceremony where we celebrate and honor organizations that have demonstrated excellence, innovation, and outstanding contributions in the digital lending landscape. Let's begin the acknowledgement of achievements with our first recognition. And we're going to play a bit of a guessing game. So, all right. I'm going to talk about the company, and I'll leave it on to you to decide who this absolutely fantastic player is. All right. Renowned for redefining, we're going for the digital distribution excellence first. Renowned for redefining financial experiences with its extensive network of 130 plus offices and 31,000 distribution points, it has prioritized automation to enhance customer and dealer experiences. Their accelerated cloud transformation ensures access to on-demand IT resources, contributing to exceptional customer experiences. And in financial year 2023, the company showcased impressive financial growth with increase in net profit, loan disbursements, and asset under management. With a robust capital adequacy rate of 17.9%, this company continues to lead in innovation and strategic expansion. Let's please have on the stage TVS Credit Services. A very big congratulations to Team TVS Credit Services. All right. Okay, moving on to our next recognition, which is for excellence in digital lending large banks series. It has been a trailblazer in the digital lending space, consistently introducing groundbreaking initiatives such as the 10-second personal loan, touchless disbursals on the Express car loan platform, and alternate data underwriting in cattle finance. That is a bit of a giveaway. All right. Their financial prowess in the digital lending is evident in its remarkable credit growth rate of 19%, doubling the industry average of 9% during FY 18 to 23. Their dedication to continuous innovation is validated by their recent recognition as a paradigm pioneer of indigenous digital products and process. Let's please have on stage Team HDFC Bank. A big round of applause, ladies and gentlemen, for Team HDFC. Wonderful to see the large team here. A big round of applause. Please come on the stage. Don't stop. Come on, come on, come on. Get in, get in. This is your big moment. Team HDFC Bank. Next up, we have Excellence in Digital Lending Growth Bank. They offer the best of both worlds. Trust of an experienced bank and experience of a new age fintech. With its recent glory, the multi-year association with ICC has been becoming stronger every day since 1994, and now it is the 5th largest private bank and 2nd largest microfinance lender. The bank has always been at the forefront of innovation, and this has been perfectly demonstrated by their recently launched app. The app has been the talk of the town with its seamless payments, simplified money management, and a range of financial products. It has been a game changer for digitally savvy customers who are looking for a superlative digital experience. This bank continues to contribute to the growth of the Indian economy with multiple tie-ups with OEMs like Tata Motors, Hyundai, Mahindra and Mahindra, etc. Finally, the bank's net profit of nearly 4,000 crores in FY23 is a strong testament to its financial strength and the ability to grow and contribute to the innovative landscape of the country. Congratulations, team Indusland. A big round of applause for Team Indusland. Moving on to the next category, which is Excellence in Digital Lending Emerging Banks. This bank stands as a titan in the financial landscape, boasting an extensive network of 1,338 branches, 1,907 ATMs, and 937 relationship managers nationwide. Beyond its impressive size and scale, the bank's commitment to digital innovation is noteworthy, evident in its pioneering use of AI and ML. This dedication has resulted in a commanding 86% share of the digital transaction. Financially robust, the bank has witnessed a staggering 59.31% of year-on-year growth in net profit, accompanied by substantial improvements in NPA ratios and capital adequacy. The lifetime free credit card and electronic bank guarantee initiatives exemplify a commitment to sector transforming innovations. To sum it up, the Emerging Bank Award is not just a recognition of the bank's past achievements, but also a testament to their commitment to shaping the future of digital lending. Congratulations to Team Federal Bank. Next up, excellence in auto finance. For decades, this motors finance company has been synonymous with trust, stability, and commitment to exceeding expectations. They have built a legacy on the bedrock of a vast nationwide network, seamlessly intertwined with lending auto dealerships and leading auto dealerships. This isn't just about numbers, it's about forging connection, understanding diverse needs, and crafting financial solutions that fuel aspirations. Their comprehensive suite of offerings speak for itself, from car loans to tractor loans, two-wheelers to commercial vehicles. They cater to every segment, every dream. And the numbers don't lie. This past Q2, they recorded a staggering 32.1% surge in revenue, EBITDA soaring by 86.4%, and net profit climbing to about 3.8 crores. This is a testament to the 3.8 thousand crores. Let me not miss those zeros. This is a testament to the spirit of the company and their dedication to excellence. They are among pioneers in contactless loans approvals, instant digital disbursement, and real-time loan tracking. Congratulations to Tata Motors Finance. I was almost rushing through numbers, but then I figured that everybody in this room understands numbers and are only looking to listen to numbers, so I'm going to go slow. All right, moving on, excellence in education financing is the next category. While its visionary tagline, Aspire Without Boundaries, has revolutionized education financing as a leader in higher education loans, school fee financing, and vocational courses funding, it has showcased an unwavering commitment to seamless and affordable education finance. Now, in H1 FY24, its financial prowess is evident with a 1.6 times increase in assets under management, 1.2 times higher total disbursements, and a remarkable 1.9 times rise in total revenue. Now, the dedication to digital innovation is unparalleled, incorporating AI-powered loan processing, digital platforms, chatbot support, and instant loan disbursement. This strategic partnership with leading fintech organizations and innovative data management solutions positions them as a transformative force, reshaping the education finance landscape and empowering students to pursue their academic aspirations. Many congratulations to Avance. The next category is digital sourcing and decisioning excellence. This bank's strategic shift from infrastructure to retail banking within the last 4 years is nothing short of remarkable. The bank's commitment to adaptability has resulted in a substantial increase in its current account savings account ratio, soaring from 8.6% to an impressive 49.77% as of March 31st, 2023. Speaking of financials, the bank boasts of FY23 profit after tax of rupees 2,437 crores, a substantial increase from rupees 145 crores in financial year 2022. It not only excels in traditional metrics, but also leads in digital initiatives. but also leads, of course, in embracing artificial intelligence and machine learning. The bank enhances personalization, improves fraud detection, and streamlines risk management. Initiatives like monthly credits on saving accounts, along with features like rich credit cards, reflect a commitment to providing unmatched value to their customers. Beyond accolades and numbers, the bank's dedication to digital transformation is evident in its migration to cloud infrastructure for scalability and efficiency. Actively promoting digital payments and financial literacy initiatives, the bank reaches underserved communities as well, contributing to financial inclusion. Ladies and gentlemen, put your hands together for IDFC First Bank. Our next category is diversified lending excellence. Now, this company has demonstrated outstanding dedication to advancing the MSME sector through innovative and impactful initiatives. Over the past year, its commitment to empowering businesses is evident in their substantial achievements. They have witnessed an impressive 71% growth in disbursements to the secured loan book, expanding it by 31% to a noteworthy rupees 31,944 crores. As a market leader, it has played a crucial role in steering secured business disbursements within the MSME ecosystem. Their success extends beyond numbers. It continues to engage with the MSME ecosystem, offering innovative lending solutions and digital journeys for products such as LAP, MLAP, and working capital. Notably, they're recognized as a market leader for secured business month on month. In acknowledgement of their commitment to excellence, the company has received accolades like the Best NBFC for Retail Lending Innovation and Best Tech-Driven NBFC of the Year. With a focus on innovation and collaborative growth, they are well poised to continue driving positive change in the diversified lending landscape. Congratulations to Aditya Birla Finance. Our next category is excellence in consumer finance. Now, this company stands at the forefront of innovation, continuously enhancing customer experiences through cutting-edge technology. With a vast network spanning over 1,600 branches in about 1,100+ cities, it caters to diverse customer needs. The organization's comprehensive product portfolio, including personal loans, business loans, and more, is tailored to serve first-time borrowers and also underserved segments. This success reflects in numbers, as in FY23, the company showcased a stellar financial performance, boasting a net profit of 1,959 crores, a remarkable 94% increase from FY22, and a substantial growth in loan disbursements and asset under management. Their retail loan portfolio marked a notable 54% growth, driven by demand for housing, personal, and gold loans. Embracing digital transformation, this bank has pioneered technology adoption in lending processes. The bank's seamless digital onboarding, user-friendly loan application platform, and a mobile app for a simplified management demonstrate its commitment to staying at the forefront of digital lending. In conclusion, their success story is not just about financial numbers, but a testament to its commitment to innovation, customer centricity, and embracing technology to redefine landscape of financial services. Congratulations to HDB Financial Services for its outstanding achievements and contributions to the industry. Can we please have them on the stage, please? Our next category is Excellence in Business Lending. This company stands tall as a financial stalwart with a footprint in 140 cities across 16 Indian states and 2 union territories. Operating through 171 branches, it pioneers in phygital model, seamlessly blending technology and in-person service to uplift the business owners from even the underdeserved categories. Directly engaging with small business proprietors, the bank collaboratively process loan applications. The financial narrative speaks volumes, with assets under management soaring to rupees 49,428 million, a notable 55% increase. Secured MSME disbursements surged by a remarkable 71%, a testament to their commitment again for fostering business growth and maintaining a healthy net NPA of 1.41% and an impressive return on tangible equity at 12%. Their focus on innovation, technology, integration, and a customer-centric approach positions them for sustained growth and success. Ladies and gentlemen, put your hands together for SBFC Finance team. Moving on to our next category, excellence in priority sector lending. With an impressive 90% ratio, this bank's unwavering commitment and remarkable growth in priority sector lending have extended credit access to millions in rural, semi-urban areas, fostering economic and social upliftment. Their outstanding contributions, including microloans for women entrepreneurs, agricultural loans for smallhold farmers, and micro-housing loans for affordable housing solutions, have earned them industry accolades like the Best Bank for Financial Inclusion Award from the Business Standard Banking Awards for 2023. Pioneering innovative solutions for underserved communities makes them a well-deserved recipient of this prestigious recognition. Congratulations to Bandhan Bank for their impactful contributions to financial inclusion and community development. Can we please have the team on the stage? Our next category is Innovation Leader. This bank consistently proves its commitment to innovation, introducing groundbreaking solutions such as pre-approved digital loans, instant account opening through mobile wallets, AI-powered chatbots, and AI data analytics. Actively embracing open banking initiatives, this bank enables seamless data sharing and access to financial services across different platforms. Their unwavering dedication to innovation has garnered numerous awards and accolades, including the prestigious Best Bank for Innovation from Business Standard Banking Awards 2023 and the Most Innovative Bank in India from Asia Money in 2023. Congratulations to HDFC Bank for being a trailblazer in this field and setting new standards in banking innovation. Can we please have the team on stage? Thank you, Team HDFC, and a big congratulations to all of you. The final category for the evening is Excellence in Financial Inclusion. This bank holds the distinction of being the largest provider of crop loans in India, accounting for over 20% of the total agricultural credit disbursed by all banks. This has enabled farmers to invest in improved seeds, fertilizers, and irrigation facilities, enhancing agricultural productivity. This bank has been a pioneer in promoting the KCC, a revolving credit facility specifically designed for farmers. They embrace digital technologies to streamline agriculture-related banking processes and make them more accessible to farmers, which has in turn improved efficiency and reduced transaction cost. With a remarkable 52.58% increase in net profit, substantial growth in loan disbursements, and a commitment to stable asset quality, they stand as India's premier bank. Congratulations to the State Bank of India for this very well-deserved recognition for their contribution to financial inclusion and digital leadership. Ladies and gentlemen, what an extraordinary moment it has been. A heartfelt congratulations once again to all the recipients. And now I would request all the winners to please come on stage for a photo op. And of course, I'll also request the Lentra leadership team to please come on the stage. While you're doing that, a big round of applause for me for going through all those numbers and the award citations. I welcome all the team. Come with your awards, everybody. Thank you to all the winners. A very, very big congratulations to all of you. And as we conclude, it is my pleasure to invite someone who has played a crucial role in shaping today's evening, today's event, and Lentra's journey itself. Please join me in welcoming, once again, Sandeep Mathur, Chief Revenue Officer at Lentra, for the vote of thanks.
People don't want to let Jonty go. All right. So the event has come a full circle. I opened in the morning, and one of the things I'd said at that point in time, and hopefully that's rung true through the day, is that we've created some great content for you, and the investment of time that you're making to spend the whole day with us should provide value. Value not just from speakers that were on stage, but value also from the interactions that you have amongst yourselves. And going and meeting some of you informally looks like people have got some great value out of it. We also heard from great speakers today and discussed a range of issues as regards to growth, as regards to digital lending opportunities. Hopefully we were able to showcase some of our solutions and some of our partner solutions. So I want to give a big thank you to all of you who've committed your time. We truly, truly respect the fact that all of you came in and spent the day with us. So thank you very much for that. I also want to thank our partners who've co-sponsored in the event and taken the time to set up stalls and show the demos and the showcases. And of course, CNBC, who's been a big partner in the event. So thank you, CNBC, for doing this with us. And I know I'm standing between you and the drink, so as we wind down the event, let's let our hair down, and we have obviously some drinks and food outside, and hopefully you'll stick around and celebrate with us. So thank you very much, ladies and gentlemen, once again. Thank you.
All right, ladies and gentlemen, as we draw curtains on this momentous day, I want to extend my heartfelt gratitude to all of you for being such a lovely audience. Thank you to all our distinguished guests, our panelists, speakers, and of course, all of you. Your insights and enthusiasm have elevated the summit to new heights. Your unwavering support is the bedrock of Lentra's journey. Please enjoy your dinner and have a wonderful evening. Thank you.